Welcome to this live session of Cost and Management Audit. And yes, today we are going to start one of the most important chapters of your management audit syllabus, guys. So yes, these three theoretical chapters will really form, basis of your, theoretical portion in your cost and management audit. These three chapters, which we have done in our last two classes and today's class. Basics of management audit in different functions, and internal audit, internal controls, and operational audit. Please remember one very important thing. Audit of various service organizations. This is a separate chapter in your study mat. Okay, that chapter is also included in this chapter only, and today we are going to cover that chapter also. So in effect, today we are covering two chapters and not one chapter. Two chapters: internal control, internal audit, operational audit, and audit of various service organizations. Both the chapters will be covered in today's session. Good morning. Good morning. Yes, we are all live now. Yes, and we are ready to start one of the most important theoretical chapters of your syllabus, guys, which is internal controls, internal audit, and operational audit. So are we ready? Okay, before I start the session, please tell me whether the charts which I had shared with you for the other chapters, have you prepared that chart in your register or not, guys? The charts are saved on your drive, on your system. The charts are saved, so please confirm that you have created these charts in your register. You have to mandatorily create these charts in your register. It will really be a very quick aid to revise during your examinations, and if your time is less, if you don't have enough time, then you can take a printout of these charts also. They are saved in PDF format in the system. In the app itself, they are saved as the PDF in the app itself. Okay, so please, during the class itself, while the class is ongoing, you please create these charts in your register so that you can quickly revise during the during the examination. All right, guys, so let's start today's session on internal controls, internal audit, and operational audit. Internal controls, internal audit, and operational audit. All right, now first of all, let me tell you something about internal controls. What do you mean by internal controls, and what do you mean by this concept known as internal controls? Okay, so what is the concept of internal controls? I'm going to tell you today. What is the concept of internal controls? I'm going to tell you today. Okay, so I'll give you an example of one of the students of my class. So there was a student in my class itself. The student's name was Himanshu. Himanshu was the student in my class. Okay, and I used to take face-to-face classes. So in Lakshminagar we had our center. So Himanshu was a student of my class, and he was one of the notorious kind of students of our classes at that point in time. Okay, now Himanshu used to stay in Palam. Palam is a place in Delhi. Himanshu used to stay in Palam. Palam is a place in Delhi. Okay, and we had our coaching institute in Lakshminagar. Lakshminagar was the coaching institute. Lakshminagar was the coaching institute. Okay, so in this entire setup, Himanshu had a girlfriend at that point in time. Girlfriend used to stay in Pitampura. Himanshu's girlfriend used to stay in Pitampura. And Himanshu's girlfriend, say, we call her as N. Namita. Himanshu's girlfriend is Namita. Okay, so this was the setup at that point in time, and Himanshu's girlfriend was Namita. We had our coaching institute at Lakshminagar, and Himanshu used to travel from Palam to Lakshminagar daily. He used to travel, from Palam to Lakshminagar for taking coaching classes of taxation. Okay, of taxation. Early morning, 9 a.m. was the time of the class. 9 a.m. was the time of the class. So Himanshu had to leave home early from Palam. He had to leave home by 7 to reach Lakshminagar at 9 o'clock so that class can be taken. Now, Namita, who was girlfriend of Himanshu, had a doubt on Himanshu, that Himanshu is actually not a faithful guy, maybe he's cheating on Namita, and therefore Namita wanted to inquire, where does Himanshu go daily in the morning at Lakshmi Nagar? Why is he going so much early in the morning? She didn't know, she was not a commerce student, so she didn't know that classes used to start early at Lakshmi Nagar. She is not aware about all those things, so she used to doubt Himanshu that whether Himanshu used to go in classes only or not. So what she did was, she was already friend of Himanshu's sister. Himanshu's sister, name of Himanshu's sister is Himani. So Namita was friends with Himani. Himani was Himanshu's sister, okay? So early morning, when Himanshu used to leave for the coaching classes, Namita used to call Himani and inquire whether Himanshu has left or not. Whether Himanshu has left the home or not. Himani used to say, yes, Bhaiya has left office, my brother has left office, in his motorcycle he has left for, not office, for the classes, okay, for the classes. So in motorcycle he has left for classes and he is going towards Lakshmi Nagar. This is what Himani used to confirm, okay. Now, Namita then had very close, friendship with the receptionist of Nikkhil Gupta classes. The receptionist of Nikkhil Gupta classes was by name of Shivani. Shivani was the receptionist of Nikkhil Gupta classes. So Namita used to have a good deep friendship with Shivani. So as soon as it was 8:30, Namita used to ask Shivani, please tell whether Himanshu is inside the coaching or not, whether he is sitting in the coaching or not. And Shivani used to confirm that yes, Himanshu was sitting inside the coaching and Himanshu is very much in the coaching. So yes, this was a proof that Himanshu was in the coaching itself. So yes, this was the second proof that Himanshu is in the coaching itself. Now when the coaching used to end, around 12:30, coaching used to end. Again, Namita used to call Shivani. The Shivani has Himanshu left for left for his home. So Namita used to ask this to Shivani. Shivani said yes, Himanshu has already left for home. And then around 1:30, Namita used to call Himani that whether Himanshu has reached home or not. Yes, Himanshu has reached home. Okay, so Himanshu has reached home. By this way, the entire transaction was being audited by Namita. Namita used to check the checkpoints. Checkpoints means the controls which were there with with Namita. Namita used to check the internal control points and she used to be sure that yes, Himanshu was very much in the class and he had left for the class and he had gone back to his home. This is known as checking of internal controls. This is known as checking of internal controls. As an alternative, the auditor, Namita is the auditor in this case, okay. Namita is the auditor in this case and Himanshu is the management in this case, okay. As an alternative, Namita could have employed a detective, a private detective who could, follow Himanshu wherever he is going and he could inform Namita that yes, this person is going to Nikkhil Gupta classes and he is doing the coaching and he is coming back to his home. So a detective could also do the same function, but then detective would have been really expensive. It was expensive to hire a detective and it would take a lot of time also. So now the auditor sometimes, instead of auditing the entire transaction, like detective means you do a audit of the entire transaction. So the auditor sometimes, instead of auditing the entire transaction, they only check the internal controls, the checkpoints which are important. They only check those internal controls, the checkpoints which are important, and they are sure that yes, this transaction is okay. This transaction is not a problem. Okay. So this is internal control checking which the auditor can employ. But suppose if Namita comes to know that Himani, sister of Himanshu, is lying to Namita. If Himani comes to know that Himani is already in favor of Himanshu and Himani is lying to Namita, Himani is giving wrong information to Namita because Himani is already in favor of Himanshu, because Himanshu has promised that Himani, I will give you iPhone latest version. If you say lie to my girlfriend, I will give you iPhone latest version. So management has overwritten this control, has lapsed this control. If Namita is of an opinion, has doubt that Hello, mic check. Yes. So if Namita is of an opinion that there's something wrong with the internal controls are not working fine. If Namita is of this opinion, then guys, Namita is going to take a detailed audit of the entire transaction. A detailed examination, a detailed scrutiny of the entire transaction will be conducted by Namita. That is the use of internal controls. So internal controls are usually checks and balances which are employed by the management itself to ensure that transaction is happening perfectly, transaction is happening on time, and the recording of transaction is happening on time and accurately, transaction is happening accurately. To achieve this objective, that transaction is happening on time and it is recorded accurately in your books of accounts, the management, Himanshu in this case, ensures that internal controls are working fine. But since internal controls are employed by the management itself, management has the right and power to override the controls also, just to cheat the auditor, So now, simple as it is, what are internal controls? Internal controls in a business standpoint are the checkpoints which the management introduces for checking a particular transaction. So this is a factory where manufacturing happens of a particular good. This is the gate of the factory through which all the material is entered, and this gate has got a checkpoint over here. This is the gate of the factory. Factory is inside, okay. Inside the factory there is a warehouse, there is a quality control department, and inside the factory we have the place where production takes place. This is the place where production takes place, okay. So now when you purchase raw material, when the company or the organization or the management purchases raw material, the truck filled with the raw material enters through this gate, right? It enters through this gate. This truck enters through this gate so that raw material can be supplied inside the factory. The raw material is entered through this gate. So this gate has a register, which is inwards register, where recording happens that what kind of material has been introduced in the factory. After that, there is a quality control department. This is the quality control department. Over there also a recording is done that yes, we have received 10,000 kgs of raw material for quality check. Out of this 10,000 kgs, 1,000 kgs were returned and 9,000 kgs is in the warehouse. In the warehouse again there will be a book, there will be a register where detailed entry of 9,000 kgs which have been introduced as raw material will be put in. And after that there will be an outward register entry in which they will be saying that we have issued 5,000 kgs of raw material to the factory plant, to the processing unit, so that it can be processed. So these are the checkpoints, these are the control points which control a particular transaction, and these control points ensure that all the transactions are recorded properly. All the transactions are recorded in the books of accounts properly. This is known as internal controls. So internal controls are established by the management. The management of the company establishes these internal controls, like on the gate itself there should be a register. Entry should be done on this register so that we are aware that 10,000 kgs of raw material has come inside the factory. There should be a register. Then quality control department should have a register again, which will say that 10,000 kgs have been introduced and 1,000 has been returned back. 9,000 is still there in the quality control department. There should be a register. There should be maintenance of a person who maintains this record properly, and it also feeds this record in the ERP. There should be a mechanism. Similarly, when the goods are traveled from quality control department to the warehouse, again there should be a proper recording in the warehouse so that it is ensured that the recording is happening properly. Wherever there is a disconnect, wherever there is a mismatch, for example, 9,000 goods are delivered from quality control department to warehouse, but warehouse says I received only 8,000 kgs. Where did the 1,000 kg go in between? Management needs to know that. Where did the 1,000 kg go in between? Where is the lacuna? Where is the lack? Where is the where is the leakage? Management wants to know about that. And that is how, even before auditors are there in the organization, management is able to pluck the frauds, pluck the errors, pluck the leakages which is there in the organization. So to plug this fraud, to plug these leakages which are there in the organization, management employs internal controls and internal checks inside the organization. This is the entire concept of internal controls. So now the moot point of consideration is that auditor is very happy when he sees good controls. Because if auditor sees good controls, controls are good, they are working fine, he is happy because his audit work is reduced. So if Namita is confident, that yes, Himani is doing a good job and Shivani is also doing a good job, if Namita is confident, then she doesn't want to, then she would not want to hire a private detective. She doesn't want to go that way, or it is more expensive, it is also more time taking. She doesn't want to go that way. She will not hire a private detective to inquire whether Himanshu is whether Himanshu is engaged somewhere else or not, or is Himanshu cheating with Namita, is he cheating with Namita. So Namita doesn't want to know about it because she is happy because internal controls are working fine. So if internal controls are working fine, then auditor is happy because he has to do less work. So if these internal controls are working fine, then auditor has to do less work, he has to audit less. He'll rely on these internal controls, and if these internal controls are working fine, then he's sure that no fraud, no error, no mistake is there in the books of accounts. He's sure about that. This is the relevance of internal control in any organization. And what is internal audit? Internal audit is nothing but checking whether these controls are working fine or not, whether in the entire organization these controls are strongly working, they are working in a good enough manner, they are working fine. This is to ensure that internal controls are working fine in the organization. Internal audit is taken place. So if you understood the basics of internal control, internal checks, please write yes in the chat box. If you are well versed with this concept of internal controls, if you understood what do you mean by internal controls and why does management institute these internal controls in an organization. बहुत ज़्यादा अच्छे से. Okay, so what are internal controls? Internal controls are certain checks and procedures. Very, very important line, please highlight over here. It is installed by the management. The internal controls are installed by the management. Management is the one who installs the internal control. So these are checks and procedures which are installed by the management. Management installs these checks and procedures to prevent error, irregularities, financial frauds, and misappropriation of assets. So many times, guys, our raw material is stolen by our employees itself. Employees are involved in stealing raw material. So if employees are involved in stealing raw material, then we will be able to know if internal controls are working fine. Who is stealing the raw material? Who is the one who is responsible for leakaging the raw material? Okay, so misappropriation of assets is also controlled by internal controls. In other words, internal control system can be defined to be policies, practices, procedures, tools designed with the following objective. What is the objective? Objective is that every transaction must be executed with proper authorization. Proper authorization should be there to execute any transaction. For example, if quality control department says that no, 1000 goods, 1000 kg goods are not good, then this 1000 kg goods which are rejected, they should be rejected with the signature of head of quality control. The head of department of quality control should sign this voucher which says that 1000 kgs is reject. We are not accepting it's quality defective is there. So we return these 1000 kgs. It should be with the approval. Proper authorization should be there for each and every transaction. So that tomorrow quality check department doesn't say that, oh no, we never rejected any goods. We accepted all the goods. We never rejected any goods. This should not so happen. Okay. So every transaction should take place with proper authorization. That is the first requirement of internal controls. Then all the transactions are promptly recorded. Promptly means timely recorded. So the transaction should be timely recorded. There should not be delay in recording the transactions, because if there is delay in recording the transaction, then accordingly there will be delay in producing the books of accounts also. So promptly the the transaction should be recorded with correct amount. Amount should be correct. Quantity should be correct. And in appropriate accounts, books of accounts should be appropriate, ledger accounts should be appropriate. There should not be any error in the ledger accounts. In the accounting period in which it was executed, so accounting period should also be correct. The date of the entry should be correct. When this transaction take place, that should be also correct. Because if you deviate the date of any transaction, then if it's a transaction which is recorded in foreign exchange, then the currency rates might fluctuate. Okay, so date should also be correct. Then assets are safeguarded. Very, very important, guys. usually there is a very big problem with all the multinational corporations and Indian corporations also. Their assets get stolen. Their assets gets leaked. Yes, there's a very good amount of leakage which happens even in PSUs. In PSUs, chair, table, office furniture sometimes gets stolen. And sometimes the internal employees are involved in it. Raw material gets stolen. Finished goods get stolen. So all these things get stolen. So asset safeguard is one of the major, major objective of internal controls. If internal controls are strong, forget about auditor. Okay, forget about auditor. We are not bothered about auditor right now. We are bothered about our company right now. Management is bothered about our losses, the losses which the company will incur because of this default. We are just bothered about the losses right now. We are just bothered about our own assets right now. We should not be at a loss. The company should not be at a loss. The management should not be at a loss. That is the main thing of consideration right now. So the main objective of internal controls is to safeguard our assets. Our assets should be safeguarded. Our assets should be, protected from any leakage, from any stealing, from any, unauthorized access, unauthorized use. The assets should be safeguarded. That is the main thing which internal controls aims at. Because if internal controls are not there, then we will have no control because our assets move around the organization very frequently. We have no control over where is it moving. No one will take responsibility tomorrow if the assets get stolen. No one will be able to take the responsibility that who had stolen this assets. So that is why internal controls are very, very important. Wherever the assets are moving in an organization, a proper record, a proper entry, double checking of the entry should be there. It should be there. Okay. So safeguard asset is really important objective of internal controls. The recorded assets shall be compared with the existing assets at a reasonable intervals. This is known as physical verification of assets. So company is claiming that I have 10 vehicles in my organization. In the books of accounts, there are 10 vehicles which are written in the organization. In the books of accounts, that company has 10 vehicles. But when the auditor asks them where is the vehicle, then maybe 9 vehicles are there. The 10th vehicle is standing at the house of the director. It's director's personal vehicle. It's not company's vehicle. It's director's personal vehicle. This is a problem. So auditor should always physically verify the assets. Auditor should always go to the factory and see what all assets are there. If the company is claiming that I have assets worth 100 crores, auditor should go in the factory and check whether assets worth 100 crores are present in the factory or not. This is the role which auditor should definitely fulfill. So the recorded assets are compared with the existing assets at reasonable intervals. So physical verification of assets should take place and appropriate action is taken where any differences are there. Measure compliance with corporate policies and regulations. So whatever corporate policies have been created around a particular transaction, that approval is required. This person should approve the things. It should be checked. Quality should be checked before anything is taken. Whenever the goods are being sold, then again quality check should happen. So all these policies should be adhered to. All these policies should be followed. Should not so happen that, oh, we had an urgent order to process, so we did not get the quality check done. No, it is not possible that without quality checking any goods are transferred outside the factory. It's not possible. Without quality checking, nothing should happen. Even if it's an urgency, quality check should be there. This is an internal control. So we should ensure, the internal controls ensure that whatever compliances are required, internal compliances, not external. We should comply with the corporate policies. Corporate policy should be in tandem with the compliance. Early warning system. So internal controls acts as an early warning system. If any control is weak, if any of the area is weak, then it is an early warning system that in this area some kind of fraud can happen. Some kind of fraud can happen in this particular area if something is weak. So I'll give you an example. In our example itself, suppose if the management does not have this system of recording the raw material in books of accounts, they do not record their material in books of accounts, not books of accounts, but these records are not maintained. Suppose there's a high chance that material which comes inside the factory is 10,000 kgs and material which goes to the shop floor is only 5,000 kgs. 5,000 kgs of raw material is leaked in the process, and you would never know. You would never know where was the raw material leaked, because raw material first of all came inside the factory. So what if raw material only worth 8,000 kgs came inside the factory? It was not 10,000 kgs, it was 8,000 kgs which entered the factory. You will never know about it because you don't have any internal control, you don't have these registers, you don't have recordings. So simple thing is that if internal controls are not there, then the susceptibility of fraud, susceptibility of error increases. There's a high level of error which can sail through in our books of accounts. So the internal controls act as an early warning system that yes, this area is weak, this area is little a little dicey, this area is little risky, please take care of this area. So early warning system. Problems are easier to fix when you catch them early. Prevent frauds, of course it will prevent fraud because there are multiple checks of one thing only. It is being checked at every point, okay, at multiple points it is being checked, multiple check, and fraud is much more difficult. So guys, one more example which comes to my mind. If you have ever gone to an airport, okay, especially if you've gone to Delhi Airport, Indira Gandhi International Airport, then in the airport there is multiple layer of checking which happens. First of all, at the entry gate itself, you have to show your Aadhaar card, you have to show your tickets, you are flying to which country, you are flying to which state, you have to show them to the body, to the guards, and then only they permit you inside the airport, so that no unauthorized person can get inside the airport. Then even inside the airport, you are again faced with multiple checks, okay. At the counter itself, you want to show your ID, or you are asked your ID, what is your ID, you are shown your passport, you show your Aadhaar card, you show your tickets, again you show all these things to the person who's at the ticket counter, the counter at which you give your bags, right? Then again during security check, you again show the validity of your identity. Then while going inside the plane also, you show your identity, okay. So multiple layer of identity checks happens, and this ensures that no unauthorized person can enter the airport, no unauthorized person can enter the the airplanes, because if unauthorized person enters the airplanes, then it will be a mess, it will be a chaos. So very, very important that it prevents fraud. Avoid external audit findings and regulatory fines. So external audit findings are avoided because the best thing is that before the auditor comes, you should have a good system inside your organization which ensures that there is no fraud before even the auditor is coming. So before even the auditor is coming, you ensure that your organization is well versed, your organization is fully equipped to avoid errors and mistakes and frauds. They are your books of accounts are clean, they are devoid of any error, and if any error and mistakes come in, you already at a very early stage you catch those errors and fraud. You need to ensure this, and when you ensure this using internal controls, then even external auditors are satisfied. There are no external audit findings and regulatory fines are not there because there are regulations which says that your internal controls should be strong. If they are weak, then you are faced with fines and penalties. You avoid those fines and penalties if your internal controls are strong. It always best to find and fix a problem before an external entity discovers it. External entity means the auditors or regulatory bodies. They should not find the irregularities, okay? Regulatory bodies. So you should always fix the problem before the external or the regulatory body finds about it. They should not be able to find about it. You should fix them earlier. Internal control should be well in management's hand, management's control. Responsibility for internal control. As per Companies Act 2013, in a limited company, the board of directors are responsible for internal controls, okay? So internal controls are in place, they are working well, they are not broken by the management itself. This is duty of the board of directors. Board of directors are liaised with this duty. Your internal controls should work well. Auditor will just check them, and if auditor is satisfied, then it will rely on them. The duty of installing internal controls is not of auditor, it is of the management. Management should ensure that all these books are kept properly. This recording is happening properly. The auditor should just check it. Management should ensure that these are working fine. Management should work them fine, okay? So responsibility of internal controls are with the management, board of directors. Scope of internal controls. What kind of internal controls are there? I'll give you example of one of the internal controls which are related to raw material, but there are several kinds of internal controls which are there in an organization. So what are the types of internal controls? Types of internal controls, and yes, it's an important theoretical topic, guys, because it can come in the examination. Number one is administrative control. Administrative control means the controls which are related to administration of a particular organization. the managerial controls which are surrounding the administration of a particular organization. What do you mean by administration? I'll tell you an example of administration. Okay. Now guys, we have telecallers in our organization. We as a coaching institute, we have telecallers. We have callers who are calling students and they're asking whether you want these classes or not. And you also might have received calls from various coaching institutes asking you whether you want classes for group 4, whether you want classes for group 3, whether you want classes for group 2. These interactions you would have done in your intermediate as well as final level. You would have been contacted by the telecallers. So these telecallers are employees of NGC and they call students and they just inquire whether they want the classes or not. Now there are telecallers who are there in the office and they would tell me at the day end that, sir, we called 100 students today and no one purchased the classes. They would tell me that. And when I did check their mobile phones, there was not even 10 calls which were made. So they wasted the entire time. Now I want an internal control. I want a check where the telecallers are actually calling the students and I'm aware that they are calling the students. I want such a software. So what I did to install this administrative control was that I installed a software on the mobile phones of the telecallers. All the telecallers, in their mobile phones, there was an app and that app gave me details of how many students were contacted, how many picked up the call, and for how many minutes was the conversation happening, and the conversation was also recorded in the phone itself. Now I have a proof that no, you did not call 100 students. You are lying because the software is telling me you only called 10 students in the entire day and you talked with the students, they did not convert, but you did not call 100 students. So why didn't you call more students? Why did you call only 10 students? That will be my question to the telecaller. So this is an administrative control. This is an administrative control which I will, as a management, install to ensure that work is happening in my organization, because I don't want my sales team to sit idle and do nothing. Okay, I don't want that. That's the last thing which I want. So it's really important to have administrative controls, like the salesman, whosoever customer is contacted by the salesman, he should maintain a record of whosoever is contacted by the salesman. And wherever there is a follow-up required, that after 2 days you'll call back, you'll call that person back, that follow-up is also to be done by the salesman. So this entire procedure is to be done in an effective manner, and I have to supervise it. I have to install a control. I have installed the software inside the mobile phones of the telecallers. This happens regularly. Yes, Nidhi is aware about these details quite in detail, huh? Okay. Then next is operational control. What do you mean by operational control? Operational control means the operations which are carried out in any organization. Like, I have operations in my organization as well. So what are the operations? Operations are that, I get calls from you guys for resolving software related problem, for resolving logistics related problem. You have not received your book, your classes are not working well, or your book is old and your classes are not matching with the book. Any kind of problem which you face, I have telecallers, I have after sales support who is giving you a solution to your problems. Now the point is that all the calls are coming in together and you never know which call is directed to where, which call is related to logistics, which call is related to sales, which call is related to after sales services, which call is related to software. We are not aware about it. So it's a chaos. One person is dealing with software also, sales also, book also, logistics also. So everyone is dealing with everything. To overcome this problem, we have an operational control, and the control is, as soon as you call my classes, first of all, your call will be transferred to the relevant department. If it's logistic, then they will tell you please call on this particular number for logistics, or we will transfer your call to logistics. They will tell you. If it's a book related issue, then they will transfer the call to relevant department. If it's a class related issue, your software is not working on your mobile phone, then they will transfer the call to the relevant department, IT department. This is known as a procedural control, which ensures that all the procedures are going fine and all the procedures are working good, and there's no chaos inside the procedures, and we are able to manage things well. Plus this also includes budgetary controls, like we have budgets for our capital expenditure, operational expenditure. We finalize budget for our operational expenditures, that this is the operational expenditure, and budget for this is this, right? We need to ensure that that budget is met. The employee should not overrun the budget. So there was an offsite which happened in my office recently, and we all went to Manali. Okay, suppose we went to Manali. The budget was that the per employee expenditure should be not more than 20,000 rupees. 20,000 rupees was the budget which was given to the employees. Now we need to ensure that that expenditure is within that budget. We need to ensure that. We need to control that. So I had to maintain a Splitwise. There's a software called Splitwise. That was software which was installed on each of the employees' mobile phones, and whatever expenses they were incurring on behalf of the office, it was recorded in that Splitwise. And I had the master account of that Splitwise. I had the dashboard of that Splitwise, and whatever expenditure was happening, it came to me, notification came to me, and I used to approve all those expenditures. And whenever I thought that there is an extravagant expenditure, I would reject it. I would tell the employee, don't do this expenditure. It will be from your own pocket. So this is a sort of a operational control. Budgeting, standard costing, all these are parts of operational control. Then financial and accounting control, very, very important. We want all the accounting entries to be recorded on time in the correct manner. We want that. We want data of all the accounting entries to be recorded in our books of accounts on time. And one of the very good examples of a financial control was this, that whatever raw material is purchased, I have a control that how much raw material has entered the factory, how much has passed on the quality check, how much is in the warehouse, how much is on the floor. I have this entire control. As a CFO of the company, I am worried about my inventory. Where is my inventory? Where is it kept? If there's any fault, where is the fault? How much is returned? Because I have to pay to this person also. I will not pay him completely if the material was returned because of reject. I need full control of this entire transaction of raw material purchase. Similarly, sales which have happened outside my factory, I want control of those sales also. So even for sales, in warehouse the sales material would have been kept, and then that sales would have moved to first quality control, quality check would happen, and then from the gate it would have exited. So gate should also have a register, sales register, purchase register, sales register. So similarly, just like purchases were recorded at each step, sales should also be recorded at each step, so that I am aware as a CFO how much sales is happening on a day-to-day basis. Where is my material kept? Where is my finished goods kept? At what stage is my finished goods there? I should be aware about it. So these are accounting and financial controls which are there in an organization. Financial and accounting controls which are there in an organization. This control refers to primarily the management plans, objectives and procedures that are concerned with safeguarding of asset, prevention and detection of fraud and error, accuracy, completeness of accounting records. We want our accounting records to be absolutely accurate. And if there's any deviation from the normal accounting, we want to know the reason. If goods are returned, suppose, from the quality control desk, we want to know why are the goods returned? Why? We want to know about it. So it's very important to maintain a good control, because as a CFO, I want to know about my transactions. And controls will only ensure that I know about my transactions. Then there are compliance control. Compliance means legal compliances, like TDS should be deposited on time, income tax should be deposited on time, GST should be deposited on time. So there should be some controls that prompts us for the compliance dates whenever they are coming closer to us. Okay, so many companies are doing this, and I have personally seen many companies doing this. In their ERP, in their softwares, accounting softwares, they have alarms. Yes, the alarms ring as soon as some date is nearing. For example, TDS deposit date is 7th of the next month. So on 5th of the next month, the alarm will start ringing and pop-up will come on the screens of the CFO, of the senior manager, of the manager, all the finance department employees. A pop-up will be coming stating that TDS due date is on 7th. Please fill the TDS detail. And unless and until you fill your TDS, you file your TDS and you deposit your TDS, that pop-up will not go down. It will only go down once you confirm that yes, we have deposited the TDS. Similarly, on 20th of the next month, GST deposit date, right? There will be a pop-up that GST due date is here, GST due date is here, GST due date is here, and that pop-up will come as a GST due date, a reminder to you. And unless until you deposit your GST, that pop-up will not go. This is again a compliance control. To control that compliances are to be done on time, to control this fact, this compliance control mechanism happens, and it can happen with any a company, it can happen with any country, it can happen with any, any kind of compliance, not only GST or taxation related compliance, even provident fund. Okay, you have to deposit provident fund on time, you have to deposit ESI on time, you have to deposit all these statutory dues on time. So a pop-up will come as a compliance control for all these, statutory obligations. For all these compliances, a pop-up will come, and that pop-up will ensure that you have deposited your statutory dues on time. So that is the compliance control. Then what are the types of internal controls? How many internal controls are there? So guys, these were the scope of internal controls. Okay, these were the scope of internal controls. Internal controls can be of these broad categories. Now we have types of internal controls. What are the types of internal controls? So there are three types of internal controls. First is the detective control, second is the preventive control, and third is the input control. Okay, so as you've already you must have heard about this saying that prevention is better than cure. So preventive controls are controls which prevent us from doing some error or irregularity. This is known as preventive controls. Controls which ensure that we do not do any mistake, like compliance controls are preventive controls. When pop-up comes on your screen that TDS due date is 7, please deposit the TDS, it's a preventive control. We don't want you to fault on the TDS deposit, therefore we are in advance telling you that please deposit TDS on time. This is a preventive control. Then some controls are detective control, where error has already happened. If you want to know where is the error, then detective controls are installed. For example, bank reconciliation statement. You have done some wrong entry in the bank by mistake and you are not aware about it. Bank reconciliation statement will call out that error in your books of accounts. Bank reconciliation statement will not tally if there's an error in recording your cash transactions or your bank transactions. So if you have done a sale of 5 lakh rupees through bank and you have missed booking it in your books of accounts, bank reco will not tally. Bank reco will say that 5 lakh rupees worth of funds are not found anywhere, accounts in books of accounts entry is not there, and you have cash in your bank account. So these are detective controls. If any error has happened in the books of accounts, these controls will ensure that that error is pinpointed and that error is highlighted in front of the management of the company. So these controls are used to detect the errors or irregularities that may have occurred. Examples of detective controls are internal audit, reconciliation, financial reporting, financial statement, and physical verification of assets is again a detective control. So they are preventive controls, they are detective controls. And third one is the input controls. Now these are very common mistakes that happen while inputting the data in the books of accounts. I'll give you a very simple example. Okay, I did an expenditure worth rupees 10,000 in repairing this particular digital board. This is a digital board which I got repaired. 10,000 rupees was spent. By mistake, my accountant, instead of punching in 10,000, he punched in 1 lakh, 10 extra. By mistake. This mistake can happen with anyone, guys. This mistake can happen with anyone. This is an input mistake. Input mistake. Transaction is okay. Transaction is not a problem. Bank, everything is okay. But while putting this transaction in the books of accounts, you did a mistake. This is known as input mistake. And in case of input mistake, we need to have input controls. Input should be controlled. Sir, what can be the control in this case? I mean, if error has happened, then that person, is not aware about this error. So what, what can be a control? There can be a control. Control is that every person who's doing accounting in the books of accounts, his accounting should not, directly be fed in the books of accounts. It should be checked by another person, his senior. His senior should check the accounting entries which he has done, and only then senior should approve the accounting entries which should go in the books of accounts. So this double checking will ensure that input controls are there and input is fed in the books of accounts on time. Input is accurate, input is okay. This will be ensured only and only when someone is checking the books of accounts which are prepared by one person. So books of accounts which are prepared by one person, that should be checked by another person. Inputs should be checked by another person. Accounting entry inputs, whosoever is doing the inputs in the books of accounts should be checked by another person. That should be the mechanism. So these are the input controls. Input controls means that procedure and systems to ensure completeness, accuracy, existence and validity of the data entered in the financial statements. So the data which is entered in the financial statement should be accurate. Double check, get it double checked by someone else, get it double checked by a senior. To ensure successful internal control system, the factors which are to be considered, and this question came in 2025, a recent one. The factors which are to be seen to ensure successful internal control system, that internal control system is working fine. What are the factors which we need to see, which we need to really take care of? Segregation of duties. One transaction or one entire chain of transaction should not be held by only one person. I'll give you a very simple example. My organization, my office usually requires laptops to be purchased. So I send someone to the market, he purchases the laptop, he comes back in the company and claims the amount. This is the usual procedure which happens. But I realize that the person who goes to the market and who purchases laptop, he purchases laptop worth 60,000 for 80,000. And 20,000 is his commission. So that person, when he goes to the market, he will tell the shopkeeper that, look shopkeeper, this laptop is worth 60,000, but you give me bill of 80,000. You take 20,000 extra from the company and you take 20,000, you give 20,000 to me. This is kind of corruption which can happen in any transaction. To stop this corruption, to stop this fraud from happening, to stop this error in the transaction, what I'll do is, I will never ever send one person to market, I will always send two persons to market. Or the person who's going to market, another person should call up market and check whether the price is same or not in market. Segregation of duties. I will have two or more people doing one transaction. Yes, it will entail more cost and efforts, but it will have a controlling effect also. So duties should be segregated. One person should not be able to perform the entire transaction. It should be done by two people. So the person who's going to the market, he should not be the same person who's getting quotes from the market. Some other person should get quote from the market. Some other person should go to market to purchase the laptop. There should be two people who are involved. So segregation of duty is a must. Segregation of duty should definitely happen. So the first and foremost, element of internal audit, internal controls is duty should be segregated. It is necessary for successful internal control system that no one person handles the complete transaction. One entire transaction should not be undertaken by only one person. There should be multiple persons who are taking care of one transaction. I'll give you another example. There are many fixed assets in the organization, right? Now to maintain those fixed assets, we need someone who can verify the fixed asset and record them in the books of accounts, okay? This should not be one person. Because if it is one person, then he might sell those assets in market, fetch money and tell to the organization, no, the goods are there. I'll give you an example, okay? Suppose a company has 100 chairs inside the company. It has 100 chairs inside the company. Now, there can be an employee who sells off 10 chairs in market and takes money. Now, there are 90 chairs in market. Now, there are 90 chairs in office, right? But this employee would report that, no, there are 100 chairs. I have counted there are 100 chairs. He will report that because 10 chairs has been sold by him in market. Company's assets are being sold by employees in market to fetch money. This is the fraud. And what will he report? He will report, no, there are 90 chairs. I've seen there are 90 chairs. Many employees can do this. What is the solution? Solution is rotation of duties. Rotation of duties means if physical verification is done by employee A for the first quarter, for second quarter, it should be done by employee B. It should not so happen that one transaction is taken place by one employee only every time. No. Employees should change. So that if earlier employee has done some fraud, has done some leakage or some kind of miscompliance, that should come to light. That should come to light. So next important internal control element is rotation of duties. No single individual is responsible for all stages involved in a transaction. Duty should rotate. If one person is cashier in the 1 month, in the next month, other person should be the cashier. In the third month, other person should be the cashier. Cashier roles should change every month. If there's only one cashier who's, the cashier for every month, then quantum of fraud is going to increase like anything. Plus, there should be CCTV cameras over cashiers, and you would have seen them. Over cashiers, over the cash counters, there are CCTV cameras. The CCTV camera should definitely be there. It's a very good control. CCTV cameras are very, very good control. Okay. So, yes, rotation of duties is a must. Competent and integrity of people. So, for critical transaction, the Competent and integral people should be appointed. So, cash related transaction, even cash collection, all these should be done by competitive people and people with integrity. And usually educated people have got some bit of integrity, guys. Okay, like a cost accountant. A cost accountant will never do such activity that will jeopardize his degree, because only a cost accountant knows how much effort did he put into acquire that degree. So cost accountant should be given critical task, should be given task of accounting, maintaining books of accounts, and doing the entry, because he will not do some hanky panky stuff, because he is very aware about how difficult was it to get the degree. So yes, integrity of people and competence of people should be there who are actually doing that work. Now, even in case of accounting entries, if you employ some science graduate in putting accounting entries, he will not know the rules of debit, what comes in, credit, what goes out. He doesn't know that rules. He doesn't know accounting. He doesn't know balance sheet. He doesn't know profit and loss account. How will he be able to do the accounting entries? So again, you have to take care that whosoever are you making responsible for putting in accounting entries, he should be a competent person. He should be a cost accountant. He should be a chartered accountant, or at least a commerce graduate. So competent and integral people should be there. Appropriate level of authority. So, every person who's been given some kind of work, he should be given some authority also, okay, for accomplishing that task. So if I'm given the authority of physical verification of fixed asset, you please count all the fixed assets which are there in the organization, then I also should have authority to visit each and every department and summon the heads of the department to show you the fixed assets. So he should be visiting each of the departments. He should be able to be responsible and should be authorized to visit each and every department. That should be very much there. So authority should be given to each and every person to visit departments if responsibility is given. So appropriate level of authority. A common error usually made is to grant too much authority within control boundaries. However, controls to be effective require authority to be granted on a need to have basis. So appropriate level of authority should be there. Okay, commensurate with the responsibility. Appropriate level of authority should be there. Accountability. Internal controls to be successful presuppose that there is full accountability for all the decisions taken. Everyone should be accountable for their own work. So accountability is one of the most important factors of internal controls. That who is accountable for this job? That should be one person. Like in my example, the quality control head should be responsible of quality control rejects. The quality control head of quality control should be responsible. So he is the responsible person. If anything wrong goes in quality control department, head of quality control shall be the responsible person. If anything wrong goes in the warehouse, then the caretaker of the warehouse should be the responsible person. So it depends who is the responsible person. You have to fix the responsibility of each and every person for doing that particular job in an internal control. So that responsibility fixation should be very much there. Adequate resources, yes, to perform any job, to perform any activity, adequate resources should be provided. You are telling me that, okay, you go and do physical verification of the assets and you are not giving me authority to even, you're not giving adequate resources. There are so many fixed assets, you are not giving me staff. How can I individual count all the assets of the organization? I'm an individual person. How can I count all the assets of an organization? There are so many assets. There are 10,000s of assets in an organization, ranging from chair, table, laptops, digital boards, projectors. There are thousands of assets which are there in an organization. How can I count all of them alone? I need resources. I need manpower. I need accounting softwares, adequate controls, adequate softwares. So adequate resources should be given to person who's given that authority. So controls are enforced with inadequate resources will generally fail. So if there are controls which you have employed but they do not have adequate inadequate resources are not there, then the controls will fail whenever they come under stress. Therefore, it is necessary that minimum resources necessary to enforce the controls must always be present. So there should be minimum resources which are used for effecting that control. Those minimum resources should be there. So if you have given me responsibility of counting the fixed asset, then you have to give me at least 5 staff. I need 5 staff. I need bare minimum 5 staff. And you're telling me that you count physical assets every month. Then I need 5 staff every month. Every month I need 5 staffs. Okay. Then supervision and periodical updation. So controls are not something which are just, you install them and you forget them. No. You have to check them at every interval, at every point in time, whether they are working fine or not. where they're really actively working fine or not. You have to check your internal controls each time. Okay, so initially when you have this control that you record all the transactions which take place in the quality control department. Initially everything was getting recorded, okay, but after 2 months nothing is getting recorded. After two months nothing is getting recorded, because initially everyone is excited that, oh yes, we'll follow this internal control, but after 2 months everyone's energy goes down. So after 2 months you realize that there are no recording which is happening in the quality control department of that organization. So whatever controls you install, it requires periodic supervision, it requires periodic check. You should be able to check whether the controls are working fine or not periodically. That check is required because controls become loose over a period of time. Okay, so you need to periodically check the controls, supervise the controls and update them wherever required. Alright, what are the limitations of the control? Internal controls come with their own limitations also. There are some lacunas, there are some some problems with the internal controls. Internal controls do not come with unlimited validity. There are some problems also which are there with the internal controls, and the first problem is that they are costly. It's not easy to employ the internal controls because they are costly. Think about a situation where I am employing 2 people for doing the same thing, double the cost, double the salary I am paying, just because so that they can check each other's work. I am paying double the salary. Cost is increased. So internal controls come with their own cost, because if internal controls are to be superb, they have to be costly. For example, that software, remember that software which I installed in my telecaller's phone to tap all the calls which is done by the telecaller. That software is expensive. The license is very expensive of that software. And to buy those licenses of that software, I need to buy the software to be installed in my business. It is an expensive affair. It's not cheap. It's not cheap at all. It is an expensive affair. So to have the softwares which control your organization, to have systems which control your organization, it's a costly affair, and cost benefit analysis must be undertaken before you incur this kind of a cost. Next, no control for unusual transactions. So if there are unusual transactions which take place, there is no control that can measure the unusual transactions. So if a transaction is very rare, if a transaction is something which is unusual, that can skip the entire internal control. Like I give you an example. We have already talked about Himanshu, right? We have already talked about Himanshu in our earlier example. Now Namita is the auditor of this transaction, is taking due care that Himanshu leaves home on time. He goes to the organization, the coaching institute on time. He leaves coaching institute on time and he reaches home on time, to ensure that Himanshu is not meeting some other girl during the way, or Himanshu is not double dating, or he is not cheating on Namita. To ensure this, Namita is relying upon the internal controls. But you know what? Himanshu is already dating a girl inside the classes. So there's a girl by the name of, say, Nidhi. Himanshu is already dating Nidhi inside the coaching institute. And Namita is satisfied that yes, Himanshu is not cheating on me. Himanshu is going to coaching and coming back on time. But actually Himanshu is dating a girl inside the coaching institute. Yes. So this is an unusual transaction which cannot be found out by these internal controls. Even when internal controls are working fine, then this unusual fraud cannot be found out by Namita. Namita can never be able to, find out this fraud that Himanshu is dating someone inside the coaching institute itself. Himanshu never wanted to do CMA. He never wanted to, pursue CMA as a career option. But he enrolled in CMA and he enrolled in our classes just because of that girl who was doing CMA. This was the crux of the matter. And Himanshu is also dating Namita from Pitampura. So he's double dating. He's cheating both the girls. But internal controls have not been able to find out this fact, because this is an unusual transaction which even internal controls are not being able to catch it. So sometimes internal control fails because the transaction is unusual. Transaction is very rare, very strange transactions are there, and therefore in that situation, guys, even the internal controls fail. Even the internal controls don't work well when there is an unusual transaction. So this is a problem with the internal controls, that no control for unusual transaction. Most of the controls are designed for usual transactions. They do not tend to be directed at transactions of unusual nature. Hence controls would be ineffective wherever there are unusual transactions. So we were assuming that just by controlling movement of Himanshu, we will be able to tell that, you know, Himanshu is not cheating on Namita, but that was not true. Even after tracking the movement of Himanshu, Himanshu was cheating Namita. That was the fact. Okay, then human error. Yes, human error can render internal controls ineffective. Human error can render internal controls absolutely, internal controls can lapse, because human error is something which is non-stoppable, unstoppable. Human controls are unstoppable. Human controls are, human errors is always there. So wherever there is human error in implementing the in implementing the control, then internal controls will not work. If the person who's employing the control is not employing the control well, then it will not work. So I'll give you an example, okay? You know, someone went to purchase the raw material, my laptop. I asked someone to purchase laptop. Laptop was worth 60,000, but that person was inflating the invoice. He was saying that no, please give me invoice of 80,000. I will claim 80,000 from the company and 20,000 is my profit. That is what my employee was doing. Okay? I told another employee to please go with the employee and check whether he is doing right or not. So I sent 2 employees to the laptop store to ensure that this transaction happens properly. What happens is the second employee, the first employee tells the second employee, oh, I'm just getting the laptop, you please go and eat something. You eat some golgappa in the market. You eat some paniyaram in the market. The second employee went to market for eating something, and in the meantime, the first employee did the fraud. So it's a human error now. I as management took adequate care that I installed good internal control system, and I have segregation of duties and I have rotation of duties, but that foolish second employee broke my internal control. Internal control was not effective because of that foolish second employee. He could not understand the relevance of him going with that particular employee. So sometimes due to human error, sometimes due to human foolishness, the internal controls can break down, the internal controls can come to a lapse. This can very much happen, you know, in case of human errors. Then collusion among the employees. Collusion means when 2 employees shake hands. When 2 employees shake hands. So what happened is, I sent 2 employees to get laptops, okay, and both the employees shook hand. Both the employee had an agreement that we will buy a laptop worth of 60,000. We will tell boss that it is for 80,000. 10,000 you keep, 10,000 I keep. So even after segregation of duties, even after rotation of duties, my control falls flat. My control breaks down. Why? Because the employees shook hand. Both the employees agreed that we will do this fraud together. So sometimes internal control lapses because employee does the fraud together. However, the chances are rare, because at least one of the employees should be, you know, loyal to the company. One of the employees should be, should be imandar, but none of the employee was loyal. So if collusion of employee happens, if employees shake hands, if employee, you know, agrees, if you know, they agrees to do the fraud, then obviously guys, the internal control will also lapse. Internal control will also not work in that case where collusion among the employees happen. Abuse of authority. Sometimes, you know, the management abuses their authority to you know, have the internal controls. So I'll give you an example, okay. So sometimes what happens is, there's an internal control which is there in the organization, that whenever a good will come in the organization, first it will be recorded in the register of the gate, then it will be recorded in the quality control register, then it will be recorded at the warehouse. Some goods come in the organization, and in very, very great hurry, I want those goods to be in the factory as soon as possible, as soon as they enter. So I as management, I as the managing director would instruct the gate, no, don't record right now, let the goods be entering the factory. No, don't record. Quality control, you don't record, you please, and let the goods enter. No, warehouse, you don't record because we don't have time, you please issue the goods to the factory. So sometimes management themselves override controls. Because of their authority, they abuse controls. They don't let the controls happen. They abuse the control sometimes, because management is in a very, very powerful state to even override controls, because management have themselves installed the controls. I'll give you another example in our Himanshu's case. Himanshu is a very smart guy. He's not, that sweet a guy. He's not very Sharif kind of guy. He's very cunning. Himanshu is very cunning. He already knew that Namita will be calling her sister. He knew that Namita will be calling the receptionist. So what he did was, he bribed Himani, her sister, by the iPhone, and he bribed Shivani with a Dairy Milk Silk. He said, Shivani, I will give you Dairy Milk Silk. You please tell Namita that, I am very much in NGC only. He will bribe both of them because he is management. He is overriding the controls, okay? He will bribe both of them and then the controls will fall. So internal controls have this big problem that management can anytime override the control. Control can be devastated anytime. And by such cunning people, the controls can be overridden. He can tell Himani, please don't, say whatever I am asking you to say to Namita. You please say that. Don't say the truth. I will give you iPhone. And he told Shivani that you also don't speak truth to Namita. I will give you Dairy Milk Silk. You please speak lie to Namita. So management has got this power to override control. That is one of the very major problems with internal controls. Internal controls are not successful because management has got a lot of power. Management has got a lot of power to override control. It has got authority. Management has got authority to just devastate controls. That is a problem with internal controls. The possibility that a person responsible for exercising controls, which is the management, could abuse the authority. For example, member of management overriding the control. Management itself would not, follow the controls in some urgent situation. That is the problem with internal controls. Next is inadequate procedure. When the controls are not, put with adequate procedures, the compliance are not adequate. The procedures which are installed for, the controls, internal controls, they are not adequate. Then again, there's a problem. The possibility that procedures may become inadequate due to changes in conditions and compliance with procedures may deteriorate. So sometimes conditions change, and when conditions change, if internal controls are not changing, then guys, the situation is going to deteriorate. The situation is going to be bad. So with changing times, your internal controls should also change. If time is changing, then your internal controls should also change. That is a very important aspect of internal controls. Okay, sir, got it. Now, where do you have to report the internal controls? Usually, what are the statutory requirements where the internal controls are reported, where the internal controls efficiency needs to be reported? Because internal controls are not only important for management, they are not only important for auditors, but they are also important for the shareholders. They are also important for Government of India. Because if Government of India comes to know that this company has got weak internal controls, their revenue is not recorded properly in their books of account, then taxes will not be recorded in time. They will also be fault in taxes. So internal controls are not only important for management and auditor, but also for Government of India, also for shareholders, also for other stakeholders of the company. So at various statutory levels, a disclosure is required to be made whether internal controls are working fine or not. What are those statutory levels? That is what we are going to study now. So yes, are you enjoying the session? Is the session comprehensible to you? Please tell me if you have any questions regarding the session. Please tell me whether are you able to understand the internal controls well or not with the examples that I am giving you. Perfect. Very nice. Alright, now let's come on to the internal controls and their statutory requirements. So which all law require internal controls to be reported, and statutory auditors where they need to report on the internal controls. Now there is a report called the CARO 2020, Companies Audit Report Order 2020. This requires the statutory auditor of the company. The stat auditor of the company is required to report whether there is an adequate internal control system in the organization or not. So this is the first place where the statutory auditor needs to report that whether the internal controls are working fine or not, whether internal controls are working appropriately or not. This is the first statutory requirement which is required for the internal controls. Second, the auditor shall include a written communication of significant deficiencies in the internal control, including description of the deficiencies and explanation of their potential effects under Rule 18 3 of the LODR rules. So according to these rules also, the internal auditor needs to report on the deficiencies. If there's any deficiency in the internal control, if there's any deficiency in the controls which are installed, the auditor needs to report about these deficiencies in this report. Okay, now guys, how would the internal auditor know that there's a deficiency? The statutory auditor will know that there's a deficiency because he will test the controls. He will test the control. Soon as he comes in the organization, he will test the controls, and after testing the controls, he will understand whether there's a deficiency in the controls or not. So he will test the controls. Okay, you are asking what is LODR? This is a listing obligation. It is a SEBI regulation where all the companies which are listed under SEBI, they are required to inform about the internal controls and deficiencies thereof. This is a listing obligation document which is there. Okay, these are the rules which are relevant to the listed companies. These are regulated by SEBI. There also internal controls are required to be verified by the statutory auditor. Subsection 5 of section 177 of the Companies Act. Again, this section also requires the board of directors to comment on the internal controls and whether there are any internal control deficiency which have been observed by the auditors. If yes, what are the steps taken to overcome those deficiencies? This is to be reported. Review of internal controls are mandatorily required to be done by the audit committee. So if any organization needs to maintain the audit committee, then internal controls are to be verified by the audit committee, and the board of directors should also be told about the deficiency which are there in the internal controls. So internal controls should be audited, and the internal control deficiency should be written by the audit committee. Audit committee should comment on the deficiencies. So ultimate responsibility for ensuring appropriate internal controls are in place with the board of directors. Board of directors are responsible to ensure that internal controls are working fine in an organization. Okay, sir, got it. Now, what is the role of audit committee with respect to internal controls? What should audit committee do with respect to internal controls? Audit committee should evaluate the internal control system. Okay, because of course auditor will check whether the internal controls are working fine or not, for sure. But before that, even before auditor is in the organization, the management and the audit committee should ensure that internal controls are working fine. That is the most important thing, guys. Okay, so evaluation of internal controls should be done by the audit committee. Then reviewing performance of statutory and internal auditors. Statutory auditors and internal auditors, what are they doing? What are the observations which they have with respect to internal controls? They should also be reviewed by the audit committee. So if internal auditors are saying that this internal control is weak, your financial control is weak, then audit committee should check whether it is weak or not. Reviewing the adequacy of internal audit function. So how adequate is the internal audit function? Whether internal audit is sufficiently covering the entire internal controls of the organization, whether the report is comprehensive or not. What is the report? Whether the report has got some highlighting factors, some key factors. Or internal audit report should also be reviewed by the audit committee. Audit committee should have discussions with internal and statutory auditors about the findings in the audit report. Audit committee is ultimately responsible for all kinds of audit, be it internal audit or statutory audit. So the audit committee should be able to discuss with the internal and statutory auditors about the organization. Reviewing the findings of internal auditors into matters where there is suspected fraud or irregularity, failure of internal control system, or reporting the matter to the board. Any of these matters should be discussed with the internal auditor by the audit committee. Then discussion with the statutory auditors before the audit commences about the nature, scope of audit, as well as post-audit discussion. So two kinds of discussion should happen: pre-audit discussion and post-audit discussion. Audit committee should discuss with the auditors to see if there is any major challenge in the audit. Whether it's statutory audit or internal audit, both should be taken care of by the audit committee. Alright, next is internal audit. Okay, now we are done with internal controls. Now we start internal audit. What do you mean by internal audit? We discussed internal controls, now we'll discuss internal audit. Now we discuss internal audit. What do you mean by internal audit? That is what we are going to discuss now. So what is internal audit? What is internal audit? So internal audit is just like your class teacher. So you remember your 12th standard, when you were in your 12th standard, you had a class teacher who used to take your mock test, who used to take your pre-boards. Hello. Yes. So school takes all these things to ensure that you score well in your examination. School or your class teacher or your school takes all these steps to ensure that you do well in your examination. And CBSE is the organization which takes board, right, which takes your board examination. Now class teacher will ensure that you are studying fine, you are giving mock test, you are giving pre-boards, you are giving unit test, you are giving class test. Your class teacher will also be will also take care of the way or the process you are studying in, okay, process of your studies, whether you are good in your extracurricular activities or not, whether you are waking up on time or not, whether you are eating healthy or not. So your class teacher is not only bothered about the ultimate results, that is your marks. The class teacher is also, hello, yes, mic check. What weird sound is coming? Hello, mic check. Hello. Hello, mic check. Yes, now is the sound clear? Now is the sound clear? Hello, mic check. Is the sound clear now? Is the sound clear now? Hello, mic check. Hello, 1 2 3. Hello, 1 2 3. Please confirm if the sound is clear now. Is sound still not clear? Hello, mic check. Is the sound still not clear, guys? Please confirm in the chat box. Yes, better now. Perfect. Okay, perfect. Yes, clear. Mic check. Yes, 1 2 3. Perfect. My singing is also coming to you perfect. मेरे सवालों का जवाब दो ना. My voice is also coming perfect now. Yes, good. Okay. So now let me tell you the difference between internal audit and statutory audit. So your class teacher is not only bothered about your score, is not only bothered about your ultimate result, but is also bothered about the process through which you are obtaining your ultimate result. What is the process? Process means, are you eating healthy or not? Are you sleeping on time or not? Extracurricular activities, are you engaging well or not? Is your mental health good or not? All these things are also taken care by the school and the class teacher. But boards, CBSE is only bothered about your marks and nothing else. They are just bothered about your marks. They don't take care of your anything else. The process through which you have obtained these marks, they are not bothered about it. They are just bothered about your marks. So what is internal auditor? Internal auditor is just like a school or a class teacher. Internal auditor will not only focus on the financial statements, but will also see how are these financial statements prepared. The internal auditor will also see what is the process through which you have prepared your financial statements. That is the internal processes of the organization, whether internal processes of the organizations are working fine or not. Is there any leakage in the internal system? Is control system effectively working or not? If transportation is happening in your company, whether that transportation cost can be reduced, this will be a highlight of the internal auditor also. Internal auditor would want to know whether all the systems which are there, or whether all the processes, all the operations which are there in the organization, whether they are working to the best of their ability or not. This is the role of the internal auditor. However, statutory auditor, external auditor is only bothered whether you have prepared your financial statements correctly or not. Whether all the compliances, the legal compliances, whether they are done on time or not, TDS is deposited or not, income tax is deposited or not, that's it. They will not check your internal processes. They will not check your internal, methods of doing things, whatever you have done to create your financial statements. They will not check that. Their ultimate goal is to check whether your financial statements are prepared well or not, whether your, your books of accounts are prepared perfectly or not. That's it. They are not bothered about your internal checks. They are not bothered about your internal processes and procedures. However, internal auditor also checks your internal procedures. So even before statutory auditor kicks in, just like your class teacher will take your mock test, pre-board unit test, this is just like internal audit. We don't want statutory auditor to come inside our organization and point out problems in our organization. So we first call the internal auditor. He will first check the entire organization. He will check in-depth scrutiny he will do of the entire systems which are there in the organization. And then whatever he points out, we will rectify that, and then we will call the statutory auditor. So internal auditor is nothing but a prequel of statutory auditor, just like your class teacher or school does your entire grooming well. They prepare you for the board's examination well. Similarly, internal auditor prepares you for the statutory audit well. That is the role of the internal auditor. Okay, so what do you mean by internal audit? Internal audit is an independent appraisal activity. Appraisal means review within an organization for the review of operations. Now, the only focus of internal auditor is not only on financial statements and the statutory compliances, but the internal auditor is also bothered about the operations of the company. Whether operations of the company are working fine or not, whether operations of the company are going smooth or not, this is also aim of the internal auditor. So internal auditor is bothered about your operations also. It improves managerial control by measuring the evaluating and effectiveness of other controls. So it will improve your managerial activities by seeing whether the control activities are working fine or not, whether controls in an organization are working fine or not. This is also role of the internal auditor. Now, what is the difference between internal control and internal audit? So guys, internal control, I'll tell you a simple equation, okay? Internal control is equal to internal check plus internal audit. So in effect, internal audit is a subset of internal control. Internal audit is a subset of internal control. So internal audit control has two parts. If we want to say that our control is working fine, then we should bother about two parts. One, internal check should be perfect. Rotation of duties, segregation of duty, that should be perfect. And it should also be verified by an auditor. That auditor is saying that yes, they are working fine. If we have both these things together, then we say that internal controls are working fine. So internal controls is equal to internal check plus internal audit. This is the equation which you need to remember always. Internal control is equal to internal check plus internal audit. This is an equation which you need to remember always. Okay. So what is internal control? It refers to systems, processes and procedures created by the management to ensure smooth operations achieved in the organization. Then what is internal audit? Internal audit is process of reviewing the internal controls. That is internal audit. Okay. Then purpose: to ensure that work is done correctly and as per company policy, and to ensure that work already done, find weakness or fraud and recommend corrective action. So to check the work already done, that is a role of internal audit. It is a combination of internal check and internal audit. So internal control is combination of internal check and internal audit, and it is an independent review function by the management. Timing of checking: internal check happens all the time. While the work is going on, the internal check is also happening simultaneously. As the transaction is taking place, internal check is happening simultaneously. Internal audit happens after the work is completed. So it's post performance. Main objective is to ensure compliance with management policies, and audit, the responsibility of auditor is to ensure that he detects errors, frauds in the system. Scope: internal control is broader in scope, narrower. It is part of overall internal control system. So internal audit is narrower, internal control is a broader spectrum, because internal audit is equal to internal control is equal to internal check plus internal audit. So internal audit is narrower in scope, internal control is broader in scope. So this equation you need to remember always. This equation is very important. Internal control is equal to internal check plus internal audit. That is an important equation to be learned. Okay. Now let us delve deep into internal audit. Why is internal audit required? Because guys, we think that everything is working fine, right? We think that everything is working fine, and to bust this myth, internal audit is required regularly. So every management thinks that, oh, my management style is the best and I'm doing best for the company, and the way I am controlling the company, no fraud, no error can ever come in the company. Every management thinks in this way. Every management has got this philosophy. Every management has got this thought process that whatever I'm doing in the company is the best. Every management has got this philosophy, right? But that is not true. Unless and until the internal controls and internal checks which are employed by the management runs the test of internal audit, they are not proved correct. So internal audit should happen very frequently, at least once a year, and internal audit should really test whether internal checks and controls are working fine or not. So necessity of internal control is it improves internal controls. Internal audit is required to improve internal control and identify weaknesses in the system. It detects errors and frauds. It detects misuse of resources like assets. Assets are not misused. It ensures that. It improves the processes by highlighting the weaknesses in the processes. It ensures that the processes are improved. Internal audit checks the books of accounts. Books of accounts are checked, in detail by the internal auditor. Whether books of accounts are working fine or not, they are being checked by the internal auditors. Then Vigile by internal auditor team keeps operating staff on toes for keeping books updated. So if there's internal audit which is happening every quarter, then the books of accounts, the books which are kept by the staff, they will ensure that yes, books of accounts are kept on time, their books of accounts are kept up to the rate, because they know that internal auditor is coming. So it's just like a fear which is there in the staff that yes, internal auditor is coming, so please keep your books of accounts and documents updated. Independent review of operations of the business. Companies which are mandatorily required to appoint the internal auditor. So guys, let me tell you, for statutory audit, it's mandatory for all the companies. Whether company is earning 1 rupee, 10,000 crore rupee, whatever. If it's a company registered under Companies Act 2013, statutory audit is required for every company. But internal auditor is not mandatory for every company. Internal audit is mandatory only for select companies, but yes, it doesn't stop the other companies also from voluntarily opting for internal audit. And it's always good, guys. Every company should opt for internal audit, because internal audit is for their own benefit. Internal audit report is not given to Government of India. There's no reporting which is required for internal audit. Internal audit report is given to the management itself. So there's no harm in getting internal audit done. So every company, according to me, every company should enter into internal audit, whether it is mandatory for them or not. Of course, the companies for which it's mandatory, they have to get it done. But for the companies which are for whom the mandatory provisions are not there, even for those companies, internal audit should be done. Internal audit should be done mandatorily. That is the requirement. That should be done according to me. So as per Rule 13 of the Companies Account Rules 2014, following companies shall be required, means mandatorily required to appoint the internal auditors. Number 1, listed company, yes, the companies which are listed in stock exchange, National Stock Exchange or Bombay Stock Exchange or wherever. If it's a listed company, even if they are earning 1 rupee turnover, it's mandatory to get their internal audit done. Internal audit is mandatory for a listed company. So for a listed company, internal audit is a mandatory function. Then for unlisted public company, first of all, you tell me what do you mean by a public company. You guys tell me what do you mean by a public company. Write in the chat box. I want to know what do you mean by public company. What is a public company? A company in which government holds some substantial shareholding. Public company. What is a public company? I want to know what do you mean by a public company. In the chat box. So for a public company which is unlisted, if paid up share capital is 50 crores or more of the preceding year, or if turnover is 200 crores or more of the preceding year, or there are outstanding loans and borrowings more than 100 crores for the preceding year, or there's an outstanding deposit of 25 crores or more at any point during the preceding financial year. If any of these 4 conditions are satisfied, then unlisted public company must get its internal audit done. I have not got the answer even now. Huh? You don't know what is a public company. CMA final students who are giving group 4, who have studied law in their group 3, who have studied law in their group 1, who have studied law in their CMA foundation, they don't know what is a public company. This is surprising. Quite surprising, huh? You don't know what is a public company. No one knows what is a public company. Which have public money invested in that entity. Okay. Any other answer? Any other government related answer? Okay, so this answer is very correct, that any company which has involvement of public in their system, like they have invited borrowings from the public, they have invited debentures from the public, or they have invited deposits from the public, then that company is known as a public company. Now the mistake which most students do is that they tell me that some public company is the company where government has more than 50% stake. That is not true. That is not a public company. It's a subset of public company which is a government company. That's definition of a government company. That's not definition of a public company. So public company means where public are substantially interested. That's it. And public includes government also. So please note that definition of public company, you should never state that company in which government are substantially interested. That is not a public company. You should always refrain from giving such answers. So paid up share capital is 50 crores or more, 200 crores or more is the turnover of that company, or outstanding loans are more than 100 crores or more, or deposit of the company is more than 25 crores. Either of the 4 conditions are satisfied, then it is known as a then it is required to get its internal audit done. And for a private company, turnover should be 200 crores or more, outstanding loans and borrowing should be more than 100 crores or more. Either of the two conditions are satisfied, then internal audit is mandatory. But what is my recommendation? My recommendation is every company should get its internal audit done. Every company. So persons eligible to be an internal auditor, who can do internal auditor? Now the question is, who can do internal auditor? Like cost audit can be done only by CMAs, stat audit can be done only by CAs, tax audit can be done only by CAs, secretarial audit can be done only by company secretaries. Who can do the internal audit? Guys, there is no statutory requirement who can do the internal audit. Even the employee of the company can do internal audit. In internal audit, there is no statutory requirement of a qualification. A chartered accountant can do internal audit, cost accountant can do internal audit, company secretary can do internal audit, even a graduate can do internal audit. There is no statutory requirement of a qualification to do internal audit. Internal audit may or may not be done by the employees of the company. Internal audit may be a CA, CMA or any other professional. Anyone who has knowledge of becoming internal auditor, because the rule did not define the word any professional in its purview. So even an MBA can do internal audit. Internal audit can be done by anyone. That is the important thing. So do you think that CMAs can provide an edge in internal audit? Can CMAs provide something extra in internal audit? Can CMA provide something out of their experience, out of their expertise in internal audit? The answer is absolutely yes. CMAs are qualified to analyze process costing of an organization. CMAs are professional in doing budgetary control, standard costing, management accounting. Using all these techniques, CMA can very well analyze the process of a particular organization, and they can value add in any organization using these processes, using this knowledge which CMAs have. So CMAs are the best people to conduct the internal audit for any organization. CMAs are the best people. There's no better professional than CMA who can do internal audit of an organization, because they are well versed with cost control techniques. They're well versed with process improvement. They're well versed with budgetary control techniques. They know how to improve a process. They know how to reduce cost. They know how to induce efficiency in capacity determination. They know all these aspects, and these aspects are key to internal audit. So yes, CMAs can prove to be really efficient in internal audit. So to assist board in identification, monitoring and management of the business risks, to evaluate operational efficiencies and productivity, wherever productivity can be increased, efficiency can be increased, CMAs can play an important role. Evaluate organization culture and ethics. Whatever is the organization culture, they can evaluate it and contribute to it. Check compliance with laws and regulations. Whatever laws and regulations are there, CMAs can check the compliance, and they can suggest improvements in law and regulations. Safeguarding the assets, how to check whether the assets are being sold on time or not. All these checks and balances can be put in by the CMAs. To evaluate performance management control system, how to evaluate performance management and how to control the performance management, this can be done by CMAs. To develop internal audit strategy, optimizing risk, optimizing cost, optimizing value. So cost optimization is definitely the forte of CMAs. CMAs do this cost optimization all the time. The CMAs can optimize the audit operations also, and it can support the business process improvement, re-engineering, good corporate governance can be supported by CMAs. So yes, CMAs can definitely prove to be pivotal in internal audits. If you give internal audit to a CMA, he can definitely value add to the company. He can definitely give you insights on how the company should develop and improve the cost efficiency, improve the working of a particular organization. Everything can be given by the internal auditor. So as internal auditor can really contribute. CMA can contribute as an internal auditor. Now next is audit program, and yes, we have already studied a brief about audit program in our last chapter. What is audit program? Audit program is plan of the audit, how the audit will be conducted. Audit program is the plan of audit. How will the audit be conducted? How many resources are required? How many days are required? What area will be undertaken? What steps will be taken to audit a particular area? All these things will be studied in this particular audit program. It will be written in the audit program even before the audit starts. I gave you a very good example, guys. To give your examination, you need to plan that I have the month of October, I have the month of November, December is my examination. So what should I do in October? What should I do in first week of October, second week of October? What should I do in November? What should I do in December? So all this planning needs to be done carefully. And this entire planning is known as audit program. So audit program is nothing but planning of your audit. If planning happens appropriately, then audit plan is developed carefully. If audit plan is developed carefully, audit goes well. So what is audit program? Audit program is nothing but a detailed plan of how the auditing work is to be performed, what are the procedures to be performed, and what is the timing and resources which is required. How much time is required to complete this audit, and how many qualified cost accountants are required, how many articles are required, how many interns are required, how many partners are required. All these things required to be studied during your audit program. So planning is done by these three activities. Now, what are the advantages of audit program? What are the benefits of audit program, creating audit program? First of all, it creates a checklist so that nothing is remained out of purview. Okay, what all processes are required to be done? What is critical? So nothing is left. If audit checklist is there, then nothing is left unaudited. Nothing is left unaudited. So there is no area which is left unaudited. Everything is audited. That is ensured by the audit checklist, which is created in the audit program. So checklist is to be created in the audit program, and nothing is left unaudited. That is ensured by audit program. Next, work can be properly allocated to responsible people. Okay, if we know what is to be done and how many articles are there, how many qualified cost accountants are there, then we can allocate the work according to their expertise, according to their knowledge, right? So allocation of works becomes easy. Then we fix individual responsibility, of each person, that you have to do this work. So you are responsible for this work, you are responsible for this with this work. So the responsibility is allocated according to the level of the person, and also what kind of responsibility was given to him. Accordingly, the responsibility can be fixed. Auditor may easily know the extent work to be done at any point in time. Auditor will be able to control that yes, this work has been done, this work is left over. So this control is there in the auditor's hand if audit program is prepared well. So progress of work done can be supervised by the auditor. Then uniformity of work can be attained as the same program would be followed from time to time. So uniformity of work should be there. Every year same audit procedures at least should be followed. Nothing should be left over. So you prepare audit program for 1 year, it will form as a basis for the next year. Next year also you can use the same audit program with minor modifications. Okay, so this is how you create uniformity in your work done. It is useful basis for planning the program for the following year. Yes, for following year, whatever program you need to make, it can be used as a basis. It may be used as an evidence by the auditor in the event when his charge is brought against him. So if someone asks the auditor, what have you done in your entire audit? You can show the audit program. I have taken these steps. I've done all these steps. In a summary, he can tell that I've done all these steps. So it can prove as a evidence of what work has been done by the auditor if audit program has been created on time and absolutely perfectly. Now there are some disadvantages of the audit program. Obviously, if audit program is there, then there are some disadvantages also. So if you give a plan to someone, then that person stops applying his brain. He stops applying his brain. He would just do whatever you say. I'll give you an example. Okay, my mother always tells me that go to market, go to that standards shop and bring this useful grocery items and household items to me. I go to the shop, I bring the grocery items to home. That's it. It's a mechanical process because my mom instructed me to go to the shop, bring it and bring it to me. However, if my mom doesn't instruct me so strictly, if my mom says, okay, I want this, I want tomatoes, you please go to market and fetch tomatoes, then I might go to 3 shops and I see which shop is the best, where quality is good and price is less, and I will take the tomatoes from that particular shop. And if my mother strictly tells me, no, go to that shop and bring tomatoes, then maybe I'm bringing costly tomatoes at lesser quality. So audit program also has this disadvantage that if you tell someone that you have to do 1, 2, 3, 4, 5 things, then he will only do 5 things. He will ignore the 6th thing which was necessary. He will not apply his brain. If you tell someone that follow the audit program, he will not apply his brain. He will not think radically and rationally. That is the first disadvantage of audit program. Task becomes mechanical and the auditor may lose interest and initiative. Auditor might not do something new. He'll say, okay, let's do whatever is written in the audit program. That's it. We don't apply our brains. Sometimes it becomes monotonous. Drawing up a audit program may be unnecessary for small concerns. If it's a very small concern, if it's a very small entity and only one staff is doing audit of the entire concern, then the audit program becomes irrelevant. It becomes unuseful. Though audit program helps in fixing responsibility, but inefficient staff may defend themselves by stating that matter was not contained in the audit program. So sometimes when audit program is there, then the inefficient staff who know that we need to do something extra also, he might say that no, it was not written in the audit program, so I didn't do it. So audit program acts as a shield to not doing something also. Because something was necessary and you know that something was necessary, you will ignore it and you will say audit program did not have this mention. They will not state the obvious. They will not say that, okay, this was obvious that this had to be done. They will not, acknowledge that fact. So sometimes the audit program, it fixes responsibility, but inefficient staff may defend themselves by saying it was not written in the audit program. Rigid audit programs cannot be led for each type of business. So, rigid audit programs are never good for organizations, for all kind of organizations. If we make one audit program, it is not applicable for all the organization. Every organization has a different audit program. So, you cannot standardize any audit program. Audit program always should be flexible and dynamic. That is one of the problem of audit program. So, these are the lacunas or disadvantages of audit program. Now, there are 2 kinds of audits: continuous audit and final audit. Okay, continuous audit means audit which goes on during the year itself. For example, internal audit or concurrent audit. So internal audit and concurrent audit goes on during the tenure of the audit, during the entire year. The concurrent audit or continuous audit goes on, internal audit goes on. So that's a continuous audit. And statutory audit, cost audit, these are examples of final audit. It happens once and for all after the year is over. It happens once and for all. Okay, final audit. That's the examples of continuous audit and final audit. Now I'll discuss what do you mean by continuous audit and final audit. So continuous audit means it involves 100% checking of all the transactions like an internal audit. However, in final audit, there is only sample basis checking. Entire thing cannot be audited in final audit. Next, it is carried on continuously throughout the year. The continuous audit is carried on throughout the year. Entire year, all the months, the continuous audit will be carried on. However, final audit is only carried out after close of the financial year. When the financial year is closed, after that, the final audit is carried on. It is commenced and carried on before the close of the financial year to which it relates. So it is commenced and carried on before the close of financial year also, but the final audit commences and carried on after the close of the financial year. After the close of the financial year. This is before the close of the financial year. It is after the close of financial year. It is constant engagement of the auditor's staff in the client office throughout the period. However, this is only a year end, few months post year end. So the final audit happens only after year end, only for few months, 2 months or 3 months. However, continuous audit happens throughout the year. Every month the auditor is sitting inside the office of the client. Continuous audit is suitable in cases where financial accounts are desired to be presented soon after close of the financial year. So if your financial statements are to be, final accounts to be submitted immediately after the close of the financial year. So for example, 31st March is the close date, and on 5th April you want to present your financial statements to the board of directors. Then you need continuous audit. Because if you call the auditors on 1st of April, they will not be able to audit up till 4th of April. That is not possible. So if you want to have final accounts released so early, then you have to employ continuous auditor only who will audit month by month. Financial statements are finalized late as the audit concludes post end of the financial year. So final audit is always done late and it is always post the completion of the financial year. Continuous audit provides an advance notice on the irregularities and hence corrective actions can be taken on time. So since continuous audit is happening during the year, then any irregularities, any problems in the audit is highlighted at the very first time only, at the initial time only. Errors and faults are detected after the year end, so they are detected late. Okay. Then example is bank audit, concurrent audit, even internal audit. An example of final audit is tax audit, GST audit, stat audit. Stat audit is also an example of final audit. Cost audit is also example of final audit. Cost audit. Okay. Cost audit is also example of final audit. So this is the difference between final audit and cost audit. Okay. Now we come on to working papers. Working papers means, when you are doing audit, then you need to maintain some file where all the documents are kept for that particular, that particular client. So you please tell me, all of you, please tell me in the chat box, what kind of working papers have you seen in your audits? You must have done some audits, right? In your articleship. So whatever audits you have done in your articleship, you please tell me in the chat box what kind of working papers have you seen in the audit. So what do you mean by working papers? Working papers mean documents that are kept in the audit files, the documents which you maintain in the audit file, which proves that you have done some audit. Working papers which you have carried on, which you have collated during the audit, that is known as the working papers. Now working papers can be kept in two kinds of file, permanent audit file and current audit file. There are two kinds of audit file. None of you have seen any document during audit, huh? No answers. Have all of you done dummy articleship? You have not seen working papers. You are not aware about working papers. What are working papers? You are not aware about that. I am, sir. So tell me, what working papers have you seen? If you have worked in some audit, then you tell me what kind of working papers have you seen? What are working papers in case of an audit? Tell me that. Dummy, yes, you are to dummy only. That I know. So some students only go for audit for eating food, lunch, dinner, that's it. Because audit companies give a lot of good food, no? So some students go for audit, and I have heard this from many students. That's why we go for audit only for eating lunch, good breakfast, and then come back in the evening. That's it. Okay. So what are the working papers? Working papers are the documents that evidences that you have done this kind of work in your organization. Okay. And two kinds of files are maintained. One is the permanent audit file, one is the temporary audit file. What is a permanent audit file and temporary audit file? So permanent audit file contains documents which are required every year, like memorandum of association, article of association. These documents are required in every year's audit, be it audit of 25, 26, 26, 27, 27, 28. All the years audit, these documents would be required, like memorandum of association, article of association, long-term rent agreements, long-term revenue agreements. So these agreements or these working papers are required every year. Okay, so these are kept under the permanent audit file, which will be carried to audit every year. And second is the current audit file. Current audit file will contain working papers of the items which are used only in 1 year. For example, you have done expenses during the current year. Okay, repair maintenance expenses are there. You have working paper of those repair maintenance expenses. They will be relevant for this year only, because next year new set of repair maintenance expenses will be done. Okay, so things like vouchers, things like expense invoices, they are individual to each year. Each year there will be different invoice. Each year there will be different expenses. So that working papers will be kept in the current audit file. So permanent audit file and current audit file. Sample selection, current audit file. Again, you selected sample to test any expenditure. This will be in the current audit file. Yes, sample selection will be in the current audit file. So it depends what kind of documents are there. According to the documents, your file will be decided. So permanent audit file, the working papers which are required for more than one current period, more than one accounting period, the documents which are required, they are for the permanent audit file. They are kept in permanent audit file, like MOA, AOA in case of a company. And the documents which are required only in one accounting period, that will be kept in current audit file, like the correspondence related to acceptance of annual reappointment. Annual reappointment is happening and correspondence is there to accept it. Every year this will happen. So every year's acceptance will be different. Extracts or copies of legal documents, agreements, minutes of meetings which are relevant to audit, all these are kept in permanent audit file. So long-term agreements. Okay, long-term agreements. Yes, ledgers, bank statements, very good. SOPs. So SOPs are recurring. They are put in permanent audit file. SOPs are in the permanent audit file. Screenshot of SAP, current audit file. Ledgers, current audit file. Bank statement, current audit file. But SOPs are to be kept in the permanent audit file, because SOP remains same for every year. Okay, so that is very good. It is very apparent that Ajay More has done good audits and he has been part of big audits. It is apparent. It is very, very apparent. Very good, Ajay More. Very good examples you have given. No other student has been able to give good examples. Very good. So as extracts of important matters in the meeting, board meetings happen every year. So the board meeting minutes will be kept in current audit file. General meeting also happens every year. It will be kept in current audit file. Record of study and evaluation of internal controls, whether internal controls are working fine or not. This evaluation is used every year. So it will be in the permanent audit file, because it will be used once it is used for every year. Copies of management letters are created every year. Different management letter will be created. So it will be kept in current audit file. Analysis of significant ratios and trends. Whatever trends are there for past years, this can be kept in permanent audit file. Analysis of transactions and balances in the current audit file. Audited financial statements of the previous years, they should be kept in permanent audit file. Copies of communication with auditors, this happens every year, so it will be kept in current audit file. Notes regarding significant accounting policies, whatever policies are there, the notes regarding the policies, this should be kept in the permanent audit file. Audit program is to be kept in the current audit file. I am in internal audit team. Very good, Ajay. Very good. Internal audit is a very good area and teaches you a lot. So very good. Significant audit observations of the earlier years can be kept in permanent audit file, and conclusion reached on significant aspects in the current year shall be kept in the current audit file. That is the difference between current audit file and permanent audit file. Now, one very important thing which is to be noted is working paper is the property of the auditor, and only auditor has the right to access working papers. And auditor, if he wants, then he can share the working papers with the client. Client cannot force auditor to share the working paper with him. So working paper is property of the auditor. If auditor thinks that yes, I want to share the working papers with the client, then he can do. If he doesn't want to share the working papers with the client, auditor can say no, I am not sharing working paper with you. So working paper is property of the auditor. That's very important principle which you need to learn. The portions or extracts of which can be had at its discretion. These working papers should be kept in safe custody and in confidential manner for such time as is sufficient to meet the requirements of related legal and professional requirements. So working paper should be kept safely for some time to meet the legal and professional requirements. What is audit notebook? Audit notebook is a book which is usually bound book. It's like a diary, it's like a pad where all your significant findings are recorded. I'm not having any pad right now. Okay, this can be an audit notebook. So this can be an audit notebook. Something like this can be an audit notebook. Kind of a pad where you record all your findings of your audit. All the findings of the audit should be written in this notebook. This is an audit notebook. This is known as an audit notebook. Whatever findings you have during the audit, you will write them down in the notebook. This is known as audit notebook. It's usually a bound book in which large variety of matters are observed during the course of audit are recorded. So we will record everything that we observed during the audit. We will write it down in the audit notebook. Audit notebook is permanent record of the auditor. For each individual audit, auditor usually maintains separate audit notebook. Contents of audit notebook may be name of business enterprise may be written, organization structure. While the management is explaining you the structure of the organization, you can note down the structure in your notebook. Important provisions of memorandum association, articles of association, you can write down in the notebook. Communication with the previous auditor, you can write down with the notebook. Management representation letters, list of books of accounts which are maintained by the client can be written in the notebook. Accounting methods, internal control system, everything should be written in the notebook. Key management personnel, who are the key people who are handling the accounts and maintaining the finances, their names should be written in the notebook. Errors and frauds discovered, whatever error and fraud is discovered, written in the notebook. Matters requiring explanation. So anything you can write in the notebook. An audit notebook is also a evidence that you have conducted audit. You have conducted audit, the evidence is internal audit notebook. Okay. Then audit engagement letter. Engagement letter, you are very well aware of that, it's a contract between two parties, specifically stating what is the scope of audit, what is the risk and rewards, what are the liabilities of the auditor, what is the fees of audit, what is the period of audit, what is the name of the company for which it is being audited. So it's a written agreement between the auditor and the client, clearly demarcating what kind of audit needs to be done, what is the fees, what is the scope, what is the year for which audit is done, which all departments will be covered under audit. Everything is written in the engagement letter. Very, very important document. From an exam standpoint also it's important. It is the contract or agreement with the client. It is starting point and oftentimes the closing point of any relationship. And audit engagement letter is to be given by the auditor to the company, explaining scope of work, duties, responsibility of the auditor. So what is the constituents of engagement letter? Engagement letter should first of all have the objective and scope of audit. So things like what is the type of audit? What is the type of audit? This is written in the engagement letter, whether it's internal audit, it's cost audit, it's statutory audit, it's procedural audit, operational audit. What kind of audit is it? That is written in the engagement letter. Auditor's responsibility. What is the auditor's responsibility? You please tell me in the chat box whether financial statements preparation is also auditor's responsibility. So suppose a client gives you trial balance and tells you that auditor, you please prepare the financial statements, and you also audit the organization, the financial statements. Will you do it? Is preparation of financial statements responsibility of the auditor or the client? That's my question to you in the chat box. Who should prepare the financial statements? The auditor or the client? Who should prepare the financial statements? The auditor or the client? Any other answer? Who should prepare the financial statements? No, client. Very good, very good. So auditor should clearly write that I am not going to prepare the financial statements. Preparation of financial statements and installing internal controls is responsibility of the management. I'm just going to give my review. I will just give my opinion on the financial statements. So that should be stated in the auditor's responsibility statement. Then management's responsibility. What should management be doing? What are the important key things that management is expected to do? All these things are to be written in the management responsibility. Existence of internal limitations of audit. Audit is based on sampling. So there might be some entries which might not be checked by the auditor. All these things should be written in the existence of limited controls. Management representation letters. So sometimes auditor is not able to check everything. So for many things, auditor also takes a management representation letter, that yes, you write it in the writing that all the transactions have been recorded completely in the books of accounts. So such kind of representation letter is to be taken from the management. Restrictions and limitation of auditor's liability. So monetarily, what is the maximum that auditor might need to face if the audit is done? Is there some error in doing audit? What's the monetary liability of the auditor? That needs to be written. Basis of computation of audit fees, how is audit fees computed? Form of report, what kind of report is required to be given by the auditor? Validity of the report, who can use the report? Okay, whether it can be used by statutory authorities also. Need for use of services of an internal auditor or any other expert may arise during the course of audit. So if you need any expert, like if you need any actuary during course of audit, or you need any valuer in course of audit, then that also is to be stated in the engagement letter that yes, it is a statutory audit, but we will require a actuary to value our provision for gratuity and retirement benefits. We need a valuer to value our fixed asset. This should be written in the engagement letter. Auditor's responsibility is to examine financial statements. Very good statement. Auditor responsibility is to examine the financial statements. Preparation of financial statements is responsibility of the management. This should be written. Okay. Then limits on submission of report to other authorities. If auditor doesn't want its report to be circulated publicly, it should be written in the engagement letter itself that auditor is wanting that your audit report should be used only by the management of the company and not by anyone else. That is the requirement which can be given in the engagement letter itself. Then what do you mean by operational audit? Guys, operational audit is again a very small part of internal audit where the focus is only on the operations or the processes which are undertaken by the management. Whether operations are fully optimized or not, whether the operations are fully efficient or not. So in operational audit, the auditor will not check about the compliances, about the statutory provisions, whether the financial statements are prepared well or not. No. Focus is only on the operations, the processes. That is operational audit. So operational audit, it concentrates on seeking out the reduction of waste and inefficiency and excessive cost in the operations. So the prime focus is operations in operational audit. Statutory compliance is not the prime focus. TDS deposit is not the prime focus. Income tax deposit is not the prime focus. GST deposit is not the prime focus in operational audit. By the introduction of improvement of operating controls, it is audit of performance at mainly operating level like supervisory level. Operational audit is sometimes defined as extension of financial audit. It is just an extension of financial audit. So what will be the difference between internal audit and operational audit? What will be the broad points of differentiation? Okay, so points of differentiation between internal audit and operational audit is internal audit is more related to compliance. Okay, even with statutory regulations, statutory compliance or regulatory compliance. Internal audit is also focusing on that. But operational audit is focusing on risk identification and process improvement. Operational audit doesn't concern with statutory compliance, whether TDS is deposited or not under purview of operational audit. Okay. Internal audit, financial accounts, policies and procedures is the focus. And the focus is business as a whole, risk management is the focus, that operations are working risklessly. Aim is financial audit, ultimate aim of internal audit, and operational audit focuses on efficiency and improvement, basically process improvement. Basically process improvement. Based on financial transactions, so internal audit focuses on financial transactions. Operational audit focuses on the processes of business, internal processes. Monitoring, it monitors costs center-wise. Budget monitoring is there in case of internal audit. Operational audit, it focuses on performance and result monitoring, whether the performance of operations is fine or not. Thrust is policies and transactions and compliance is done in the business. And thrust of operational audit is that whether goal, strategies and process risk management is done appropriately or not. That's a broad difference between operational audit and internal audit. It has come in 2022 recently. Okay. And now a different chapter which is in your book. If you see CMA Institute book, it is given as a different chapter. I have included as a part of internal audit and operational audit because it is nothing but extension of audit. Okay, so the question is, how will you audit any educational institution? How will you audit? What are the steps that you will take to audit any educational institution? That is the question which is to be answered in this particular concept. So I have merged these two chapters. These are given separately in your books, in your cost audit books, but I have merged both of these chapters. And to learn both of these chapters, I have created some amazing charts which you can refer to, and easily you will be able to understand this chapter well. Okay, I have created some very useful charts for you. Steps in audit process of various organizations. So there are very, very, detailed organizational steps which are there for auditing various organizations. But I'll tell you some way in which you can learn one of the, audit steps, and all the audit steps will be learned by you. Yes. Very easy method of, learning all the service organizations audit. But yes, you have to read all of them. But this is the prime format in which you will be doing the, your learning. Okay. Now, in Indian society, usually biodatas are created, right? And whenever any marriage proposals are given to girls or boys, then you ask for their biodatas. And what you look for in your potential, your potential groom or your potential bride, whenever we look for a potential groom or potential bride, what do we look into the biodata? So this is the kind of biodata which you expect, to be exchanged. The name of the guy will be written, his date of birth, his time of birth, place of birth, height, what does he do, what is the mother tongue, religion, everything will be given in this kind of a biodata. Okay, biodata is exchanged during the, marriages, right? Now, what are the things that, girls see in a guy and a guy sees in a girl? So what are the things? Okay, now things will be background. What is the guy's background? Background means what is the religion or caste of the guy? What is his education qualification? What is his family occupation? What does the family do? Whether he is smoking, eating habits, okay, whether he smokes or not, whether he eats non-veg or not. If you are a vegetarian, then you will seek a vegetarian, boy. What is his nature and behavior? Whether his nature is good enough or not, his behavior is good enough or not. Whether he interacts with other girls in a very candid manner, and he invites, other girls' profile in Instagram, he chats with other girls or not. Whether he is loyal to you or not. Whether on LinkedIn he gets invites from other girls with whom he starts chatting, apart from professional work he starts chatting. Whether in his office he is surrounded with girls and he chats with other girls in his office or not. All these things you want to know in a boy, right? So these things I categorize into two parts. One is the constitution. Constitution means the background in which the boy is, is grown. The conditions in which that boy is grown, so his family, his family occupation, his education, religion, the background in which he is brought up, right? This is related to constitution of that boy, constitution of the boy, okay? And his internal controls, his ethics. These are his ethics, his internal controls of the boy you want to know. These two things you want to know with respect to boys, I'm telling to all the girls out here, okay? Then you want to know his incomes and expenses. Okay, what are his sources of income? How much does he earn? What is the quantum of his income? And you also want to know whether he is an extravagant spender or not. Because if he spends a lot, then whatever he earns will be spent in expenses. He will not be able to save. So you want to know two things. You want to know incomes of the guy, and you want to know his expenses wherever he spends. What is the expenditure habits of that particular guy? You want to know that, right? So this is the second thing you want to know about that boy. Then third is you want to know what are the assets and liabilities which are there with that boy. Does he own any flat? Does he own any property? Asset owned by that guy. And whether he has some loans, whether he has some mortgage, whether he has some liabilities which he need to fulfill, whether any loans he need to fulfill, you want to know that also. So in nutshell, you want to know these things about a particular boy. Similarly, by auditing any organization, we want to know these things about the organization also. Yes, organization is equal to boy. We want to know these things about the organization also. We want to know the constitution of the organization, whether it is a company, whether it's a partnership firm, whether it's a cooperative society, what are the bylaws, what are the rules and regulations of that company. We want to know its constitution. We don't want to know its internal controls, whether the company is very well equipped with the internal controls, whether it has internal controls which are working strongly or not, whether the bylaws of the company are working fine or not, whether the policies are being followed or not. We want to know that. Internal controls we want to know. Then we want to know about the incomes and expenses of that particular organization. Then finally we want to know the assets and liabilities of that particular organization. Broadly, we want to know these 3 things about the organization. Actually, four things, because first one is divided into 2 parts. So in every answer that is asked in the question, in the examination, you should answer these 4 parts about every organization. What is the constitution of the organization? What is the internal controls of the organization? What are the incomes and expenses of the organization? And what are the assets and liabilities of the organization? These 4 questions you need to answer in every question, in every audit. You need to answer these 4 questions. I'll give you an example. So suppose if you are asked to audit an educational institution, school, college, or any coaching institute, you are asked how to audit, what are the things that you're going to see in an educational institution, what are the things that you're going to see in an educational institution. If this kind of question is asked in the examination, that first you need to see what is it the constitution of that particular organization, what are the internal controls which are there in the organization, like the trust deed which has been created for that organization, the charter of understanding of that particular organization. In case of a company, it should be memorandum of association, articles of association. Then it's bylaws. Bylaws means what are the rules and regulations framed around the organization. You need to know that, because usually a school is created under a trust. It's not a company. It's a trust or a cooperative society. So it cannot have MOA, LOA. Please don't write MOA, AOA over here. It cannot have MOA, AOA over here, because it's a school. School is never a company. Next, minutes of meeting of the managing committee and internal control system. What is the internal control system? Then you want to audit the incomes which are there. And what are the incomes of a school? Student fees. Fee register needs to be tallied with receipts, needs to be tallied with accounts. Fee register is there, receipts are there. You should tally fee receipt and register, and you can tally it with the accounts whether student fees is recognized properly or not. If there's any advance fees which is given by the student, many students deposit fee for the entire year together. If there's any advance fee which is deposited by the student, whether it is carried forward in the next year or not. Okay, then irrecoverable fees, whether it is written off or not, and whether approval is there for the writing off of that fees or not. So proper approval should be there for writing off any fees. Approval should be there for writing off of irrecoverable fees. Then fee waiver, if any scholarship is given, if any fee waiver is given, then again approval should be there for any scholarship which is given. So for any needy student, for any student which are below the poverty line, okay, if any scholarship is given for those students, whether approval is given for that scholarship or not. For donations and admissions, it is credited to the capital fund. Donations and admission fee should be credited to the capital fund and not to the revenue fund. That should be taken care of. Then other income of a school, fine for late payment, recovery of hostel due. If hostel is provided, then hostel income will also be there. Refund of caution money, you will refund the security deposit of the caution money. Endowment money and legacies, any endowment money is there, legacies are there, or any grants are there, then all these incomes should be taken care of. All these incomes should be recognized in the books of accounts properly for an education institution. Now, what kind of expenses will you expect a school to incur? Expenses will be establishment expenses like repair maintenance, like groceries, like other normal school expenditure. Establishment expenditure will be there. Then salaries will be there to staff, PF money of staff. Okay, school teachers will be paid their salaries. This should be expenditure of that particular school, etc. Capital expenditure will be there. Fixed assets are purchased and investments are purchased. So for the capital expenditure, you should see that proper vouchers are there and verification is there. Proper approval is there. Proper approval is there. Any chair, table or desk is purchased, then approval of the managing committee should be there. Approval should be there. Depreciation should be given as per the policy. That should be checked. And guys, this is common for all the organizations. This is not unique to school. This is common for all the organizations. All the organizations have capital expenditure. They will seek approval and depreciation as per the policy should be given. This is common for all the organizations. Then we talk about liabilities. We need to verify the compliance of statutory dues. TDS, PF is paid on time or not. Whether loan installments are paid on time or not. If the school has taken some loan from the bank, then whether loan installment EMI is paid on time or not. Payment for outstanding expenses, whatever expenses are outstanding, are they paid on time or not? All these liabilities should be taken care of. All these liabilities should be be audited by the auditor. So very simple. You think about a particular organization and just see what kind of income, expenses, assets and liabilities are there in that organization, and you write 1 point for each of them. So your answer will look something like this. Your answer will look something like this. Okay, that chart was there to for your remembrance, so that you remember that chart was there. The answer should look like this. So the special steps involved in audit of education institution are as under: number 1, constitution and internal controls. There should be a trust deed. You examine the trust deed, you examine the regulations, you examine the minutes of meetings, you ensure that internal control system is working fine. Then you will audit the student fees as an income. You will check the name of the student is there in the student's fees. It should be there in the receipts. Counterfall of the receipts should be checked. Cash book should be checked. And finally, the fee should be accounted for in the books of accounts. That should be checked by the auditor. Okay. Then ascertain that if fees is paid in advance, then it should be carried forward. If the fees is arrears is irrecoverable and written off, it should be after proper sanction. Proper approval should be there. If some irrecoverable fees is written off, then proper sanction should be there. Auditor should report old heavy arrear in account of fees, dormitory rent to managing committee. If there's any old fees which is due in the books of accounts, auditor should report it. Check admission fees, and any kind of capital fees should be credited to the capital fund. Then see that free studentship or scholarship is approved, is very well approved, authorized by the relevant person. If some scholarship is given to the employee, then it should be approved by the relevant person. Other receipts, if you have received fine for late payment, that should be accounted for properly. Hostel dues are to be, or caution money refunded should be accounted for, should be audited properly. Rental income for any property which is given on rent, like canteens are given on rent by the school, that should be recorded. Voucher income for endowment and legacies, if any legacy or any endowment is received, like the alumni of the school have contributed something to the school, then that should be checked. Verify any government or local authority grant, if any grant is given, that should be checked. Caution money should be checked, shown as a liability. Voucher donations, if any donations are there, then you should, donation is used for specific purpose for which it is reduced, check that. Donation should be checked properly. Expenditure should be checked properly, that establishment expenditures are incurred and they are recorded in the right head, that should be done. Then ascertain that system of ordering, inspection and on receipt and issue of provision, foodstuff, clothing, equipment is efficient and all bills are duly authorized. Whatever food is ordered, clothing is ordered, any kind of stuff is ordered inside the school, that should be properly authorized, properly should be approved. Auditor should check it. Then increase in any salaries to the staff should be sanctioned by the committee. Provident fund money, everything should be audited. Capital expenditure, you should vouch for capital expenditure. Sanction should be there for capital expenditure. It should be approved by the relevant authority. Conduct physical verification of assets. Physical verification should be undertaken. Inventories should be again checked. Depreciation is to be checked. Properly depreciation. Outstanding liabilities. All the outstanding liabilities is paid on time. Like TDS, PF, also the usual expenses which are due, they should be paid on time. So very easy way to remember all these audit steps. Just bifurcate into 4 parts. Just bifurcate into 4 parts. Very easily you will be able to remember all these audit steps. Hospital also you will be able to remember, just bifurcate into 4 parts and remember these charts. These charts will come handy to you. These charts will really be effective in remembering all these steps. It will be very, very easy for you to remember all these steps if you remember these charts. And just remember, divide your answer into 4 parts and you will be able to remember all the points of all the service organization. I know it is difficult to remember all of these and students often struggle while remembering all of these, but using these charts you will be able to remember all of these very, very easily. Very easily, guys. Okay. So yes, I'm not doing each one of them. You can do them yourself by using the charts and the notes. And it will be easy. It will not be difficult for you at all. Okay. Then this entire topic will be done. And remember, at least one of these service organizations are coming in the examination regularly. At least one will come in the examination for sure. At least one of them will definitely come. That is for sure. So please remember all of them, because this will definitely come in the examination. More often than not, they come in the examination. Every attempt they come in the examination. At least one will come in your examination for sure. So very, very, very important from an exam standpoint. And yes, this ends your chapter. Again, past examination questions, MCQs have been given by me at the end of the chapter, which you should do on your own, and you should be well versed with the MCQs and the and all the past examination questions. And that's it. If you are able to understand the chapter well, if you are able to remember the contents well, you've played the trick. Very simple, concept is simple, understand it and then you remember it. If you have any questions, you can ask, or we can now end the class and meet tomorrow with a new chapter. So let's start today's session, and today's session we are going to deal with one of the most important theory chapters of your syllabus, guys. Okay, so cost audit, yes, will have 60 to 70% of theory in your examination, 30 to 40% will be practical, and theory is very, very important from an exam standpoint, because you'll be having majorly theory in your examination. It will be a mixed lot, but theory will be a substantial portion of your examination. Now, so which chapters will theory come from? And that is what we are going to start from today. From today, we are going to start all the important theoretical chapters of your syllabus. The chapters which I feel that are important from a theory standpoint, we are going to start from today itself. And first of the chapter in this particular league is Basics of Management Audit. 3 chapters I would always pin my my hopes on is Basics of Management Audit in different functions, and internal controls, internal audit. These are 3 chapters from where I feel that approximately 20 marks of theoretical portion will come in your examination for sure. These 3 chapters hold a weightage of 20 marks in your examination from a theory standpoint. So these 3 chapters are very, very important, very, very critical from an exam standpoint. And of course, you have to remember these content of these chapters. Therefore, you have to revise them again and again and again. Multiple revisions are required. Multi-layer of revision series is required for you to conquer these chapters. So please do these chapters well, and along with the chapters, I would definitely recommend you to prepare charts for these chapters, so that easily you can revise during the during your examination. You can easily revise them also. So please prepare such charts. Such charts will help you to really quickly recapitulate the entire chapter very, very quickly in a short span of time, and you'll be able to revise these chapters well using the charts that we are going to discuss in the class. Okay, so please make these charts on your own in your register. That's a very important stuff, so that for your examinations you are ready with these charts. So these charts should be there in your register. We have such charts for companies cost accounting record rules also. So please make those charts by your own hand in the register. That will be the best. All right, let's start today's chapter, Basics of Management Audit. Basics of Management Audit. And let me give you a brief background about what is management audit. Okay, so guys, there are 2 types of audits which are prevalent in market. Number 1 are statutory audit, which are required to be conducted as per the statute, as per the Companies Act, or as per the Income Tax Act, or as per the GST Act. Those audits are required to be done. Those are known as statutory audits. If you don't do those audits, then you are bound to get penal consequences. You're bound to get penalties. You're bound to get some adverse effects in your business for sure. So it's really important to get all those statutory audits in place. You have to mandatorily get those statutory audits done from a qualified professional, and only then can you really work in your business. There's another category of audits which are non-statutory audit, which means that these audits are not prescribed by any law. It's management's call whether they want such audit or not. These are for your own benefit. For companies' benefit, these audits are there. It's not mandatorily to be performed by anyone. It is not mandatorily to be done by the management also. So if management feels that yes, we want to get this audit done, they can get the audit done. That's the flavor of these audits, and one of such audits is management audit. Now let me tell you a brief background of what is a management audit. Okay, so guys, a business works well only when the decisions which are taken in the business are working well. Management takes decisions. Management takes decisions on a daily basis, and if those decisions work well, then the entire ecosystem of a business will work well. Entire ecosystem of an organization will work well. But if management doesn't take prudent decisions, if management doesn't take right decisions at the right point in time, then there is a problem that the entire ecosystem, entire environment of the organization is going to come to a standstill. Company will incur losses. Company will incur huge losses. So it's really important from a shareholder standpoint, from a stakeholder standpoint, to understand whether management is taking right decisions or not. So I can imagine that, out of 10 decisions, 6 decisions or 7 decisions are right, 3 are wrong. I can take this scenario because not every decision can be correct, okay? But what if a management is giving a correct decision percentage of 30%? 30% of the decisions are right, 70% of the decisions are wrong. So out of 10, 2 or 3 decisions are right, rest are wrong. At that point in time, there's a dire need for management audit. We should understand and we should be able to call out or know why is management not taking the right decisions. What is the fault in management's working? What is the fault in management's behavior? What is the fault in management's entire attitude? Or are they lacking in skill? Are they not qualified to be the management of a company? Are they not qualified to be board of directors? Are they not qualified to be the finance director of the company? So these questions will arise in the minds of the stakeholders or the shareholders if decision making is not correct. So to ensure that decision making goes correct and to ensure that at the right time stakeholders are cautioned of any red flags in the management, this management audit is done. So this management audit focuses on the management of an organization, how management of an organization is working, how the senior level management is working. That is the aim of this particular audit. Just like financial audit is focused towards financial statements of a particular organization, cost audit is focused towards the cost statements of a particular organization, whether cost statements are correctly drafted or not. Tax audit is related to compliance with respect to tax or income tax act, compliance with respect to GST. Similarly, management audit is targeted towards the decision making capability of the management of a particular company. So decision making capability of management of a company should be up to the mark, should be absolutely perfect. Only then will a management prosper. Only then will the company prosper. So usually the management themselves or on the pressure of the stakeholders, management gets this management audit done. No statutory requirement, no timelines, no format of audit report, nothing is available in any law. These are not prescribed by law. These are voluntarily audit. These are conducted by, is conducted on the instructions of the management or the shareholders voluntarily. No law is asking you to get your management audit done, but you are doing management audit because you want to get it done, because you want to review the performance of your management of the company. And that is the crux of management audit. So first of all, let's see what is management audit. Management audit is the process of appraising the performance of the directors and managers. What do you mean by appraising? Appraising means evaluating. Appraising means evaluating. So in this particular audit, we are evaluating or we are analyzing the performance of the directors. We are analyzing the performance of the directors. In this particular audit, we are analyzing the performance of the directors. What are the decisions which are taken by the directors, whether they are correct, whether they are not correct. This is the aim of this particular audit. Then, or in other words, appraising the performance of the management of an organization. Management audit is examination of effectiveness of management in controlling the total activities of organization in the accomplishment of organizational objective. The idea is that our objectives should be met. So for meeting our objectives, whether the decision making done by the top management is correct or not. Whether decision making done by the management is correct or not, that is the entire objective, that is the entire role of management audit in any organization. So that is the definition of management audit. Now, what are the objectives or uses of management audit? How can management audit be useful to an organization? It helps management in setting appropriate decision making. First and foremost is, of course, that management knows, or management we tell the management that your decision making is correct or incorrect. What is the approach towards management decision making that we highlight in these audits? So it helps management in setting appropriate decision making. It ensures that management is getting adequate information for correct decisions. So sometimes management is not at a fault. The decision making requires relevant data. Data is not being fed to the management correctly. Sometimes that is at fault. Management is taking the right decision, but the data which is being fed or which is being given to the management, that is incorrect. That is also covered as a part of management audit. It suggests management is getting desired results and revealing any defects or irregularities in the process of management. So any kind of difficulties or defects that are there in the management process, that is highlighted. Management audit helps management in effective discharge of their duties. So duties of management is effectively discharged. You know, if management is aware that yes, we'll also get audited someday, they will be cautious in their duties. They will be cautious in their day-to-day working. Otherwise, they will, rest free. Otherwise, they'll, do whatever they want. So for the management to control their decision making, to control their effectiveness, and to ensure that their duties are effectively discharged, we conduct management audit. It helps in identification of process gaps, wherever there are gaps in the processes, wherever we feel that processes are lacking, wherever we feel that processes are not up to the mark, we highlight that by way of management audit. Suggest appropriate cost-effective implementation of plans, how to implement plan in a perfect way. This is also suggested in management audit. If plans are not getting executed properly, plans are being made but they are not getting executed properly, that's also highlighted in the management audit report. Suggest appropriate cost-effective implementation. It substantially contributes for improvement of the entire communication system. We have been studying this since our 11th standard. If you are a commerce student, then in commerce 11th standard business studies, we have understood the importance of communication, correct communication in an organization. So if communication is not effective, if communication is not up to the mark, then also, management goes for a toss, management goes for a standstill. So we ensure that using management audit that communication is also up to the mark. It assists in analyzing SWOT analysis. So whatever is our strength, weakness, opportunities, threats, that also is identified in the management audit. And we tell the management that guys, this is your weakness, this is your strength, and you can work upon your weaknesses and you can play upon your strength. As a management auditor, we can suggest this to the management of the company. Now, what are the qualities of a management auditor? Okay. Now, guys, for this particular thing, we have actually prepared a chart also. So all the important headings have been converted into a chart format so that you can easily refer to it before your examination so that you can revise it well. So what are the qualities of a good management auditor? Okay, management auditor requires what kind of qualities, what kind of qualifications are required from a management auditor? First of all, let me tell you, there is no specific qualification which is required from a management auditor. Like for conducting cost audit, you must be a CMA, Cost and Management Accounting, for conducting cost audit. You should be qualified CMA. You should also approach the institute and get your membership number. You should also have a certificate of practice. All these formalities are required to be undertaken if you want to do cost audit of a particular organization. Similarly, if you want to do stat audit, financial audit, you have to be a chartered accountant. You need to take certificate of practice from Institute of Chartered Accountants of India. You need to be a member of the Institute of Chartered Accountants of India. These are the formalities which are required to conduct statutory audit. Similarly, secretarial audit. You need to be a company secretary. You should have qualified company secretary examination. You should have qualified all the formalities which are required for membership, take membership, and then take certificate of practice from Institute of Company Secretaries of India, and then you can actually perform company secretarial audit. So in the same way, management audit doesn't require any certification. Management audit doesn't require any certificate or any certificate of practice or any specific qualification. You have to pass any examination. That is not required as a management auditor. Even a graduate can be a management auditor. Even an engineer can be a management auditor. And yes, cost accountant, chart accountant, company secretary can definitely be the management auditors, right? But an architect and engineer can also be a management auditor if they have, gone through the process and gone through and they have experience of the relevant management of a particular company, managing a particular company. They can be a management auditor. So management auditor doesn't need any specific qualification or certification to be a management auditor. That's the first and foremost thing. But yes, there are some expertise and some knowledge which is required to be a management auditor. Otherwise, you won't be able to justify your stint as a management auditor. What are those qualities? Number one, you should have knowledge and experience in managerial functions. Guys, only a person who has practically done an operation can teach you how to operate. A person who has practically constructed a building, he can teach you how to develop a building. A person who has personally done cost audit work or cost sheet preparation for a particular company, he can teach you how to prepare a cost sheet. Similarly, a management auditor need to be experienced in managerial functions. What are the managerial functions? Managerial functions mean planning, controlling, directing, supervising. All these are management functions. So a person who has been in the managerial position and who knows what are the positives and negatives of a managerial position. How hard is it to become a managing director of a particular company? How hard it is to become a CFO of the company? If a person knows about these facts, only then that person can be an effective management auditor. So first and foremost is you should have knowledge and experience in managerial functions. Number two, you should have the experience and knowledge in financials, cost statements, analysis technique. Because guys, ultimately the decisions which are taken by the management, they are reflected in the financial statements. If the company is making profits and it's growing by the year, only then we can say that management is effective. Otherwise, we will say that management is not effective. So the management's decision making is reflected in financial statements, cost statements. So how to analyze these financial statements and cost statements? This should very much be understood by the management auditor. Then understanding of the organization structure. This is first and foremost thing. Even before starting the management audit, a management auditor must understand what is the organization structure, which means how many companies, group companies are there in this particular group, and each company, how are they segregated? There's a production department, there's a sales department, there's a marketing department. Production department has further sub-departments, sales department has further sub-departments. So this organization structure should be very, very clear in the mind of the management auditor to really analyze the decision making capability. Then second thing is decision taken by the management. What all decisions are taken by the management, and at what point in time. All processes and control aspects. What are the processes which are employed by the company, and what are the control aspects? What control has been, granted on those processes. Objectives of organization. What are the objectives of organization? What objectives does an organization pursue? Key objectives. He or she should have quality of giving practical and achievable solutions to the problems. You should be in a position to provide solutions, and that to practical solutions which are implementable, not hypothetical. And only a person who has been there, done that, who has been to managerial position in a particular company can give you solutions, practical solutions to problems which are related to management. So it's really essential that you should have knowledge and experience of managerial function. Ability to grasp the business problems. You should have understanding of business problems. Tactfulness, okay, perseverance, which means don't quit attitude. Tactfulness means you should be able to think smart. Pleasing and dynamic personality is required by a management auditor. Knowledge and experience in preparing various reports for submission to different levels of management. Now report writing is also an important aspect that a management auditor needs to understand. Okay, now if a management auditor prepare a report which is a 100-pager report, no one is going to read it. Management doesn't have time to read such a big report. So the management audit report should be carefully prepared because it is to be read by the top management, and top management doesn't have time to read lengthy reports. So summaries and charts, pie charts, time charts, line charts, all these things are to be used to summarize the entire content of the report, and key highlights of the report should be just presented to the management of the company. So it's really important to to prepare the report well, which is to be presented to the company. Now, I've already responded to this question. Who is qualified to be a management auditor? Who can conduct management audit of a particular company? Guys, no specific requirements of qualification there in the Act. This is not a statutory, statutory provision. This is not a statutory audit. So no specific technical requirements, no specific education related requirement that he has to be a chartered accountant, he has to be a engineer. No such requirement. Even a cost accountant can be a management auditor, and in fact cost accountant can be the best management auditor. Why? Because cost accountant has the knowledge of cost of a particular company and management, and the entire profitability and the entire working of a company depends on cost. So cost is something which is really critical. Cost is something which is really key to any management auditor. So cost accountant can be the most effective management auditors out of all the professionals who are available in market. Yes, cost accountants can be the best management auditors. So cost accountant, by virtue of his closure and intimate association with industrial environment. So cost accountant is very close to industrial environment. Cost accountant is actually a part of every factory, every manufacturing company, every trading company has a cost accountant linked to it. Either it's an employee or any external consultant. Cost accountant is actually the root of every company who's doing manufacturing in any kind of business. So, and this is the case that, cost accountant is deeply rooted in each and every aspect of a particular company. Cost accountant would be in a better position to undertake successfully the management audit. And obviously, since we are cost accountants, we will propound this theory that cost accountants are the best to conduct management audit. If the same topic you would read in chartered accountancy course, maybe they will propound that, oh, chartered accountants are the best to conduct management audit. So this will happen in every sphere of profession, that they will think that they are best in conducting management audit. But guys, in our examination, if a question is asked that who is best to conduct management audit, we will say cost accountants are the best in conducting management audit because of their proximity with the industrial environment. This is a fact, guys. This is an answer. Moreover, he is closely associated with the entire supply chain management. So, cost auditor is in the best position to conduct management audit of a particular company. This is at least the theory which we will propound for sure. Okay. Now, the question is that, can companies' own cost accountant conduct cost audit? Yes, he can conduct cost audit. Company's own cost accountant can conduct cost management audit for sure. There's no restriction because independence threat is not there in this case, because it is not a statutory requirement to conduct management audit. So even company's own cost accountant can conduct management audit of that particular company. But tell me something. Will a cost accountant who's working in the same company can say anything against the management of that particular company? Won't management be against that particular cost accountant then? Won't that cost accountant fear that, oh, if I say anything against any of my bosses who are the management, then they will throw me out of the company? Won't that cost accountant has that kind of feeling? Answer is yes. So the company's cost accountant, ideally can do management audit, but he will not act independently. He will not act independently. He will not be unbiased. He will not be uninfluenced. Somewhere he'll be influenced by the position and the threat which the top management will give him. So somewhere he'll be under a threat. Somewhere he'll be a little biased. He won't say negative about its management in a very true manner, in a very fair manner. So yes, somewhere he will not be independent. So external auditor might be independent, a little bit independent in this respect, okay? But the internal auditor the internal cost accountant will have an advantage that internal cost accountant has worked with the company and has better grasp over company's activities. So who has got better knowledge about that particular company? The internal cost accountant. So, there's a pro and there's a con also. The advantage is that the internal cost accountant is very good in analyzing the company because he has worked in the company for a very long time. So it's an advantage with the cost accountant who's working inside the company. But the disadvantage is that he'll not be independent. He might be influenced. He might be biased in his reporting. So both pros and cons are there of internal cost accounting being the management auditor. Both pros and cons is there. So ultimately it is the management, the company who has to decide. The company has to make its own decision that, if you want to have your own cost accountant as the management auditor, how can you safeguard his interest? How can you safeguard that he will not be, disreputed or he will not be harmed at a later point in time? How will you safeguard this? It's management's call, it's company's call. So company has to take this decision because this is not a statutory law. It is not prescribed by any law. So company has to take this decision. Further, instead of entrusting it entirely to the cost accountant, there's also a good idea that, let us develop a team of multidisciplinary professionals along with cost accountants and make a combined team to conduct management audit. That will be the best. That will be the best. So that team should contain obviously a cost accountant, but apart from that, an industry or production engineer should also be there. Social scientist should be there. Economist should be there. And then a cost accountant should be there. So let us create a multidisciplinary team to conduct cost audit. That will be to conduct management audit. That will be the best. People from all realms of life should come together and they should conduct management audit. That will be the best management audit. Okay. So the team or the management audit team should be multidisciplinary and multidimensional. The management audit team should be multidisciplinary and multidimensional. So you can write over here, team of management audit. team of management auditor. So who shall be a team of management auditor? That team should contain multidisciplinary people. Then the functions of management auditor are as follows. What are the requirements? What are the things that management auditor should do? And you're already aware about that. He should appraise the decisions of the managers. He should undertake a wholesome analysis of what are the activities of a particular company, what are the activities of a particular organization, how are they working, how are they not working. So a wholesome analysis should be carried on by the management auditor to perform while dealing with the top management. Help management in defining the performance standards with ownership of responsibilities. Management audit provides valuable suggestions to management after proper evaluation. So first of all, you have to perform while dealing with the top management. So management auditor has to consistently deal with the top management, and his work is to perform while dealing with the top management. Okay. Then he helps management in defining performance standards. So what will be the performance standards? Up to what level should management perform? What decisions should result into what kind of outputs are required? They should be defined by the management auditor for management. Okay. Help management in defining performance standards. Then management audit provides suggestions for management after proper evaluation. So what should management do to increase its efficiency, to increase its decision making? That is again a purpose of management audit. Assessing existing management policies. The existing management policy we need to assess. Whichever needs some kind of a revision or some kind of change, that should be suggested by the management auditor. Proper rational utilization of resources should be there. Assessing efficiency and efficacy of tactics, strategies behind current business plans. So what are the efficient moves, what are the tactics, what are the strategies, whether they are working fine or not, all this analysis needs to be done by the management auditor. And finally, appraising overall team performance rather than individual. So management auditor is concerned with performance of the entire management, performance of the entire board of directors, and not only with one board of director. Performance of the entire board of directors should be the focus of the management auditor, and not only one board of director. So the idea is to appraise the entire management. Team performance should be appraised by the management auditor. All right. So what are the techniques which a management auditor can use? Some scientific techniques, some non-scientific techniques, and many techniques that you already have. You are already privy to in your cost management paper. So in intermediate you had management accounting paper, right? And that management accounting is nothing but the pre-step of management audit. To conduct management audit, we perform management accounting. We need to understand how management is working in their decision making, whether they are taking the make versus buy decision correctly or not, whether they are taking the decision of whether to continue this product line or not in proper way. We should conduct management audit and use all the management accounting technique which you have studied in your group 2, intermediate group 2. So what are the techniques of management audit? Techniques employed by management auditor in effectively carrying out audit are. So first kind of techniques is accounting techniques or economic techniques, and you already are a little bit aware about these techniques. Guys, techniques like break-even analysis. What do you mean by a break-even point? Break-even point means a point of sales where the income is equal to expenses, the revenues are equal to expenses, both of them equate together. This is the production stage, the stage at which the revenue equals your expenses. So no profit, no loss. That is one of the major analysis. Budgetary control, how to create budgets and how to use those budgets for betterment of the organization, and how to ensure that budgets are also being fulfilled. So it's not just it's not just about creating budgets. They should also be followed. And if they are not followed, then what is the reason why the budgets were not followed? That should also be analyzed. So budgetary control is another technique of accounting of management audit. The next technique is cost management techniques, indicating how an organization assets should be allocated over competing projects. Again, some things like make versus buy decision, or some decisions like how to plan your production process, how the production process should be devoid of wastage, how wastage can be minimized, how the inefficiencies can be reduced. All these techniques which you have already studied in your cost accounting also, they can be used to appraise the performance of the management. Then discounted cash flow techniques. the present value methods, the methods that will tell you what is the NPV, net present value of a particular project. IRR, internal rate of return, payback period, all these are techniques which can help management to take adequate decisions. So all these techniques may be used by the management auditor to ensure that management is taking the right decisions, and whether management has used these techniques to take the right decision or not. Cost benefit analysis, standard costing, marginal costing, activity based costing, quality analysis of a company's transaction. So all these you have already somewhere or the other studied in your curriculum. These are all used while appraising the management decision making. Then there are some scientific techniques. Okay, there's some computer modeling which happens surrounding decision of material mix, product mix, make versus buy decision. So do you remember those lengthy questions which you used to do in your costing for make versus buy decisions? Now there are models, computer models. You just feed in the data and they will decide for you. The models will decide for you. You need not make those complex calculations. The models will will altogether be in front of you with the multiple options and the results of those multiple options. So things are quite easier with technology being used in every sphere of life. Things are very, very easy, and so is this particular thing easy, that you can now take decisions on the basis of computer models. Make versus buy decision, product mix, material mix, all these decisions can be taken by you in a scientific way. Network analysis, to analyze strings of tasks, to arrange them in sequential or parallel order to complete the project in shortest possible time. So what is the process? What is the a sequence of things that can arrange our process in the shortest possible time? Mathematical programming, solving by linear programming is usually effective when relationship vary in linear order, whereas quadratic programming may be used when the variations are in order of square root or some other factors. Guys, I don't understand what is the mathematical programming, but since it's given in your syllabus, you just have to learn it this way only. Okay, don't get into nitty-gritties of this. That's what is square rooting, what is this written. You just learn the word mathematical programming. Mathematical program is a scientific way of analyzing any decision making process. Okay, linear programming, of course, we have already studied in our organizational research OR paper, which was there in intermediate. Then there are some statistical technique also. Statistical technique will work out the efficiency of a particular product or project or decision in a scientific way, in a statistical way. Okay, we'll compute the variances, we'll compute the standard deviation, and all these will help us to know what is the success rate of any organization, of any management. So success rate can be also be analyzed by the statistical technique. Activity sampling is one of the important techniques of management analysis. It is one of the many ways which the present workloads can be measured to obtain controls to be exercised by the management. Monte Carlo simulation, okay, then exponential smoothing, inter-firm comparisons, all these are ways of statistical techniques. Personal techniques, we use some some surveys, some tests on our people to know that whether they are capable of making right decision or not. So all the board of directors are subject to these surveys or these questionnaires or these tests. These are also known as psychometric test. And you as a cost accountant, after you qualify, some companies in the campus also take this test, psychometric test. It's not related to your technical knowledge. It's not related to your knowledge of your direct tax, indirect tax, cost accounting, etc. No, it's related to your knowledge of your basic logical reasoning power, whether you are having basic logical reasoning power or not, whether you have basic basic IQ or not. Your basic intelligence level, what is your basic intelligence level? That is the objective of this kind of an analysis. So personal techniques like aptitude test, attitude test, ergonomics, man-machine relationship, training methods, profitability and productivity measurement. This again are techniques of management audit. Then there are general techniques. Statistical theory of management is an attempt to emphasize what should be the practical approach to problem. Statistical theory is there, brainstorming is there, transfer pricing is there, management by objectives, management by exception, corporate planning, information theory, etc, etc, etc. So as simple as it is, this is not an exhaustive list. You can use any and every technique that you have ever studied in your studies to conduct management audit, wherever you think that this will be relevant for us. Like I've told you, IRR, payback period, NPV analysis, these are very basic techniques which can actually evaluate whether this project is profitable or not, whether this is going to give you results or not. So simple techniques, complicated techniques, everything can be used over here. In the examination, if you don't remember these techniques, then you can write whatever techniques you remember of, okay? Whatever you have studied in your intermediate and final, you can use all those techniques to do management audit. There's no threshold, there's no criteria, there's no statutory prescription that yes, these techniques should be used for management audit. It's absolutely a free game. Yes, very, very important. It's a very old saying that if you fail to plan, then you plan to fail. If you fail to plan, then you plan to fail. This is true for your examinations also, guys. Your examinations are round the corner, okay? And that is the reason why you are taking these classes. Your examination is closed now, and you have not planned how will you revise the entire syllabus. You have not planned how will you complete your coachings. You have not planned how will you revise the RTPs or the workbook which has been released by the Institute of Cost Accountants of India. You have not planned anything of that, and that's a problem. Planning is the core of any exam that you give. Discipline by far is the core of any exam that you give. You have to be disciplined. You have to plan your studies in a proper way. No one is asking you to study for 15 hours or 20 hours a day. No one. But at least study for 8 hours a day, and that too consistently. I'll tell you what, okay? What is the average, pass percentage of CMA final in every attempt? Pass percentage of people who are getting passed? Maybe say 10 to 15%, right? 10 to 15%, maybe 20%. This is the pass percentage of CMAs who are qualifying either group 3 or group 4, okay? Maybe little less also, 7%, 8%, 6%. This is the passing percentage of people who are qualifying a CMA final, right? This is what you will say. This is your answer. This is wrong. This is wrong. Yes. The pass percentage of CMAs is 60%. The pass percentage of CMAs is 60%. What are you saying, sir? This is such a funny thing that you are saying. Pass percentage of CMA 60%? Never has the institute ever given a result of 60%. Ever, sir. The result is always varying from say 8%, 7%, 10, 12, 15, that's it. So never ever had the result be given as 60%. No. Every time in each attempt, CMA result has been 60%. 60% students have qualified CMA. Why do I say that? Because, guys, I'll give a very honest opinion. I've been teaching CMAs for last 15 years, and this is my experience. Out of 100 students who are giving CMA final examination, out of 100, only 50 are actually studying, or even less. Only 40 are actually studying. What do you mean by actual studying? CMA final students deserves a sitting or studying of 8 hours per day consistently for at least 6 days a week. And out of 100, at least 60 students are studying only for 2 hours a day, and that too for 2 days a week. That's it. And rest of the days they are wasting. This is my personal opinion and this is my personal experience. Most of the students who are in CMA final, they don't study enough to be able to qualify the CMA final. They are not serious for the examination, or they are not disciplined for the examination. They are not. So you hear that yes, result is 10 to 15%, but that's a sham. That's a myth. That's not correct. The result is 60%. CMA final result is 60%, because out of 100, I don't consider the students who are not even studying. So I'm only considering students who are studying. So out of 100, only 40 students are seriously studying for the examination. And serious study means, no, not 16 hours per day. Sir, we will study for 16 hours a day. No expectation of that sort. Serious study means 8 hours a day, consistently for 6 days a week. 3 months before your examination. That is consistent study. If you imbibe discipline in your studies, if you imbibe this kind of a regularity in your studies, no one can stop you from passing or qualifying CMA. So out of 100, only 40 students are actually studying for CMA final the right way, in the disciplined way. And that is the reason why I say, if out of 40, even 10 students are qualifying, out of 40, 20 students are qualifying, then the result is 50 to 60% of CMA. Yes, and that is the true result of CMA. That is the true result percentage of CMA. Because most students I find are busy in social media. Most students are not ready to delete apps, Instagram. Most students are not ready to delete Facebook from their phone. They are consistently in their phone. Just have a look of the screen time that you are showcasing these days in your phone. Screen time. Just send me screenshot of your screen time. You will realize that more than 3 to 4 hours you are spending on social media. In the settings button, in the settings tab in your phone, there is a column called health and well-being. Just click on that column and that will show you your screen time. Just open that screen time and just see where all you are spending your time at. You're not spending your time at studies, you're spending your time at social media. Your brain frequency is being diverged there. So there's no discipline. There's no discipline at all. Your notifications are all on when you are studying. So soon as someone messages you, or even if there's a forward message, some advertisement message, it just pops up in your phone brightens up and your mind is distracted and you start seeing your phone. All notifications should be off until your examination. No notification should pop up in the bright light in your phone. It should remain in your phone itself. And your phone should be in a switched off mode for 8 to 10 hours a day. And that is what I call discipline. That is what I call serious for your attempt. So if you want to be in this category, or if you want to be in this category, the qualified category, the only thing that you need to do is discipline. Be disciplined for whatever time is left. Have control on your impulses. Don't be on social media, and that's it. You'll be in this lot. But yes, coming back to our topic, we are talking about management audit program. Again, planning is required to be done in management audit, and this planning that is required to be done in management audit, this plan is known as management audit program. Because similarly, the way you if you fail to plan in your examination, you plan to fail. Similarly, in management audit also, if you fail in your planning, then you plan to fail. Management audit also requires hell lot of planning. Detailed planning is required for management audit also. So before starting management audit, you need to prepare a program which is known as management audit program, and that program should minutely tell how many people will be doing the audit, what all areas are to be done, who will do that, what area, how much time will be required, what all things will be seen, what all documents will be asked from the client, what assistance is required from the client. Everything should be jotted down before the audit starts. This is known as management audit program. It's a plan that you create for conducting management audit in near future. This is known as management audit program. So management audit program is a plan of action. So what is a management audit program? It's a plan of action drawn in advance of taking up the audit to help auditor to cover the entire area of his function thoroughly. An efficient management audit program shall comprise of the following. You should first of all review the objectives, plans, policies of the management. What does management aim at? What does management want to achieve? Do they want to achieve employee retention? Do they want to achieve high profitability? Do they want to achieve a good market share? What do they want to achieve? That's your first prerogative. You need to actually understand what does management want to achieve. So what are the objectives of the management? That is the first thing that you need to understand. Critical review of organization structure. Again, organization structure is the key to any management auditor. How are the various departments laid down? Who is heading which department? And how many people are under that particular person? Who is reporting to whom? Is there any dual reporting happening? Is there any misreporting happening? So entire organization structure needs to be very clear in the mind of the management auditor before management audit is start. Study of systems and procedures. What are the systems and procedures? Evaluation of operations. Understand what operations are being done and what level of operations are being done. So evaluation of operations. Study of efficiency of use of physical resources available. So whether the physical resources are being used efficiently or not, that is again a thing that needs to be evaluated. Exercise of proper management control, whether management control is proper or not in an organization. Maintain suitable monitoring system through management information system. So there has to be a suitable supervision, overview of who's doing what and what is the results on a monthly basis or even on a fortnightly basis, and that effectively can be done by management information system. So management information system can generate reports which can tell you that, you know, during the month, so and so employees were laid off, so and so employees were chucked out of the organization, and that can give you an insight that, you know, whether management is following their policy of retention properly or not. So MIS is created to monitor. Monitor means supervise the entire scheme of what management is doing. Check on adherence to statutory obligations, very, very important. Although management auditor is concerned with dealing with management decision making, but to adhere to statutory obligation, whether statutory obligations are being met or not. For example, whether TDS is being deposited on time or not, whether all the taxes are being deposited on time or not, whether the provisions of Factory Act is being followed or not. Factory Act is one of the very important acts, guys, right? Whether Factory Act is followed or not. Labor laws, whether labor laws are followed or not. All these small things will definitely let the management auditor take a feel or get a sense whether management is serious about law or not. Because if management is not serious about law, then the day is not far when the company is going to shut down. Because if you don't follow law of the land, then obviously your company will shut down. Your company will not be there for a very long time. So it's important that statutory obligations are also being adhered to. Above all, review the efficiency of manpower handling, which ultimately results in organization success. Manpower handling means personnel management. How are you dealing with your management, with your personnel? Personnel management. So personnel management is one of the key areas, one of the very important areas which are to be looked into by the management auditor. He has to see whether people are happy or not, because if people are happy, only then will an organization prosper. Because if people are unhappy, then they would definitely not work up to a maximum of their capabilities. Also, they will be not be fueling the growth of the organization. They'll rather diminish the fuel of growth of the organization. So again, you need to be sure that your manpower is absolutely happy. They are well managed. Obviously, you cannot keep everyone happy, but largely your manpower is happy. Largely your people are satisfied with the policy that you are doing and with whatever bonuses you are giving, whatever salaries you are giving, whatever employee welfare steps you are taking. You have to ensure that employees are more or less satisfied with every step that the management is doing. Okay, that is an important aspect of management audit. Then general outline of management audit program. So, some basic things that management audit program should have, some basic knowledge about the company that management audit program should have are enlisted below. Name and address of the company, obviously. Operations, what kind of operations does it do? How many units does that have? How many sections are there? Dates and duration of audit. When is the audit started? When has the audit concluded? What is the duration of audit? How many months have the audit be conducted? When is the audit started? All these things should be laid down. Planned, revised, actual. So, duration of audit, what was planned? Planned was to say 2 months. Okay, then it was revised to 4 months. And now the audit has been conducted in 5 months. So all these things needs to be written down in the management audit report. Because someone is going to ask you, you planned 2 months, why do you take 5 months? What was the reason? Because this will also call out any inefficiencies that the management has. You will say that, earlier it was planned for 2 months, but I did not get the data. I got data very late. My team did not get the adequate data to conduct management audit. You will say that. So whatever is your reason, why did the audit, get so late? Why 3 months additional was undertaken for audit? This can be an effective, question that can be answered. Names of the auditors. Who are the names of the auditors? What are the auditors? This you need to tell. Now, discussed with and reviewed by. So these are relevant to working papers. Okay, these are relevant to working papers. Working papers or areas which you have audited. Or areas which you have audited. So whatever area you have audited, like if you have audited, say personnel, human resource, then you have to tell specifically whom did you discuss this area with. Okay, so you will say that, okay, I had to discuss this area with the HR manager. But actually, because HR manager did not have time, so I discussed this area with HR's assistant manager. You'll jot down, where did you get the inputs from? As a management auditor, where did I get the inputs from? Similarly, who reviewed the area? Okay, so who reviewed the area? Who reviewed that working paper? So, you know, suppose I took interview of the HR manager to ascertain whether HR policies are right or not. But again, my questionnaire should be reviewed by someone else, my senior, management auditor senior. That should also be jotted down. So, who reviewed the working paper and you made the working paper, that should be actually be clearly written in the working paper itself. Okay, sir, got it. So, these are the steps of management audit. So, what are the steps of management audit? What are the steps of management audit? What are the steps which any management audit shall typically comply? Although this is not arched in stone, because these steps can vary from auditor to auditor. You can have your own set of steps, so this can vary, but the typical management audit will contain these steps. So what are the steps of management audit? Steps of management audit. Number one is define the scope and objectives. So first and foremost, you need to really define what is your scope of audit. Guys, obviously an organization has so many departments, right? From operations to processes to finance to HR to logistics to quality control. There are so many departments. There are so many processes in a particular organization. It is practically not possible to cover all of them at once. It is not possible. It is not humanly possible to cover all the aspects at once. So at the beginning of the audit, you need to determine which department are you focusing at. Are you focusing at operations? Are you focusing at finance? Are you focusing at human resource? Or you may choose to finance and human resource will do this time. So you have to clearly define what is your scope of audit. What all are you going to cover? Because no human being can cover all the aspects in one go. No one. It's my challenge. Even if it's a small organization, audit cannot happen of all the departments at once. It is not possible. So first of all, you need to define the scope and objectives of the audit. Identify the areas to be reviewed, whether you will review finance, HR, process, marketing, what are you going to review? So identify the areas to be reviewed and understand what audit aims to achieve. What are your goals and objectives? Okay. So for example, your goals and objective to be can be, I want to see whether financial obligations are being met on time or not by the management. Whether management is strictly adhering to the statutory obligations or not. Whether TDS is being deposited by the 7th of the next month or not. Whether GST is being deposited by the 20th of the next month or not. So these kind of objectives, these kind of clearly defined goals are to be ascertained by you before you start the audit. Then you start gathering information. You start gathering relevant data, which will be useful for you. Whatever data is required to conduct management audit, you need to have that. So relevant documents and relevant data needs to be culled out. Discuss initial gaps and possible improvements with the management. So whatever are the improvements that management can do, whatever gaps are there, that needs to be analyzed. Then evaluate performance of a particular area in charge should be evaluated, like whether the HR manager is doing the right things or not, whether the finance director is doing the right things or not. How many miscompliances are there in TDS? So yes, in a year, if one miscompliance is there, I can still understand. But if out of a year, 6 months are delayed to TDS deposit, I cannot understand that. No. How can you delay deposit of TDS for 6 months? You cannot do that. It's a big mistake. Okay. So evaluate performance, check whether actual results match the set targets or standards. If not, analyze the reasons. For example, unrealistic targets and goals are there. Review the processes. All the processes are required to be reviewed. Examine how the organization plans, operates and controls its activities, including technological use, performance measurement, etc. Investigate and verify. Conduct detailed inquiry and gather evidence to support audit findings. You need to investigate further into any miscompliances which you see. And if any lacunas are there in the entire system of your management, then those lacunas are also required to be seen, whether those lacunas can be plugged or not. Okay, so investigate and verify all the evidences to support your audit finding. Report and recommend. Report all the findings which you have. So presenting your audit findings in a clear, actionable recommendation for improvement. So audit report which you need to prepare, that has to be absolutely perfect. Report writing is again a very critical thing, because you may write a report of 100 pages, but it might not be relevant for the management, because management doesn't have time. Management doesn't have the focus to review your entire report. So how to present your report, that is also a very good skill. So now let's see what are the characteristics of a good management audit report. how to prepare a management report which is bang on, which is actually, useful for the management, and management can, use it for its own benefit. So what are the characteristics of a good management report? Number one, pertinence. Pertinence means it should be relevant. It should be purposive. Okay. You cannot just write anything and everything in a report. You have to write things which are relevant, things which are, related to a particular purpose, things which are actually accurate. What are the objectives which are related to objectives? So the report should be pertinent, it should be useful, it should be relevant to a particular, process or a particular thing. So first and foremost is that a good management audit report should be pertinent, should be relevant, should be useful. Second, it has to be comprehensive. Comprehensive means it should cover all the aspect of that particular process. So if it's finance, then it should cover all the aspects of finance, like accounting, like auditing, like statutory compliances, like income tax, like GST. Everything should be included, at least for the financing department. If it's HR, then everything should be included in HR, like recruitment, taking interviews, how you are infusing the new candidates, how you are, what is your exit procedure, how do you exit a particular employee, how do you take exit interview, how do you get resignation done, what is the, the notice period, everything. So it has to be comprehensive. It should cover all the aspects of that particular process which you have chosen. So the audit report should cover all the aspects of the chosen area. That is very, very important. Brevity, very, very important aspect, guys. The audit report should be brief, concise, to the point. It should be concise. It should be to the point. Audit report should be brief. It cannot run into 100 pages. Even if it runs into 100 pages, it should have something known as an executive summary. It's known as exec summary. Even if it's a long report, it should have an exec summary. Exec summary means within a span of 2 pages, the conclusions which are derived in the entire report are summarized. This is known as exec summary. So exec summary should be there, even if it's a long report. But ideally, report should be short. And guys, these days, the most popular way of drafting these reports is a PowerPoint presentation, PPT. This can be distributed as PDF also to all the stakeholders and all the management people. Can be distributed as a PDF, and this can be presented in a very efficient manner also. So it can be in the form of PPT. So it has to be brief, it has to be concise, it has to be summarized. Timeliness, very, very important. The report should be given on time, not late, because if report is given late, then there's no point in giving the report late, because then no actionable activities can be done based on that report. So the report should be timely. The audit report should be issued in a timely manner so that suitable rectifying actions can be taken on time. Corrective actions can be taken on time. That is the idea. So report should be given on time. If you give your report late, it won't be of any use to anyone. Motivating, the report should be motivating. It should use positive words rather than negative words. I'll give an example. HR is not conducting exit interviews. This will be bad for the organization because you will not be able to know why is employee leaving. Rather than using such a language, you can use that the HR may conduct exit interviews for all the people who are exiting the organization so that we can know what is the reason of their leaving. Write in positive words. Even if it's a negative statement, write in a positive word. So management audit report should always be motivating. It should be written in a positive language. Auditor should use positive wordings in the audit report. For example, instead of writing that production planning was done inadequately, it may be written that production planning may be improved by taking the following steps. So never pinpoint on someone's mistake, that this mistake you are doing. Never pinpoint on someone's mistake in a management audit report. That is not the idea of management audit report, to pinpoint on someone's mistake. No, don't pinpoint on someone's mistake in a management audit report. Okay. Formatting and presentation is very, very important, of course. It should be an adequate format. Size of font size should be adequate. It should be consistent. It should not be so that, in one part of the PPT you are using Times New Roman and in the other part of PPT you are using Tahoma or Arial. The font size should be consistent and font type should be consistent. The entire font that is written, the text which is written should be absolutely consistent and should be equal, so that it doesn't look weird, doesn't look unformatted. Okay, so now what can be the contents of the management audit report? What can be the effective things which can be written in a management audit report, that these are the things on which the management auditor is reporting. What can be those important things? So what can be the contents of the management audit report? Deviations from laid down procedures, whatever are the processes, okay, there are SOPs. SOPs are statement of processes. These statements or these standards are developed to ensure that everyone follows the same process of doing a particular thing. For example, if you have to submit a invoice in the finance, everyone you should use the same form, everyone should use the same mechanism to submit a particular document in the finance department. So SOPs are developed, and if any deviation is there from the SOPs, then management auditor should report those deviations. So deviation should not be there in SOPs. Then unauthorized or fraudulent activities, if any activity has been done in an unauthorized manner. For example, check worth 50 lakh has to be mandatorily be signed by the managing director. But in one of the cases which management auditor found, the check was signed by a general manager also, and it was cleared. This is clearly unauthorized activity. Similarly, if some fraudulent activity is being conducted in the organization, those should also be highlighted by the management auditor. Performance deterioration, where performance is declining, of course, trend analysis can be done. Okay, ROE, ROA, P ratios, EBITDA analysis, all these things can be done. Over a trend, we can analyze whether the company's performance has increased during the tenure or has decreased. So that can be a part of your management audit report. Benchmarking of activity, industry norms and practices. So since you are a cost auditor, you might have done management audit of many companies which are there in that industry. You have knowledge of many companies which are there in that industry. You are experienced in conducting data analysis of many companies. So use that knowledge, use that experience to give insights to the management that, look, management, this process can be done in an effective way like this. Give your expertise in the management audit report. So benchmark your activities of the management. Industry norms you can explain in the management audit report, and practices you can also explain in the management audit report. Use your expertise and experience in giving some value addition to the management. Control lapses, wherever internal controls have not been followed. Control means, what controls are we talking about? Internal controls. Wherever internal controls are not being followed, and you are already aware about the concept of IFC, internal financial controls. Okay, so wherever controls are not followed, wherever controls have lapsed, you need to report that, because it's a serious thing. Should not be said that, oh, it's just one time that we have not followed this control, it's okay. No, it's not okay. Even one lapse in an internal control is fatal to the organization, because it will grow like anything and you won't even realize it. So control lapses should be curtailed. If someone has done something which is unauthorized, that should be curtailed immediately. Corrective measures are suggested to rectify the position and address the management concerns. You have to suggest some corrective actions, how to improve the management performance, how to improve management decision making. You have to suggest corrective actions for each of the management audit process. Comparisons are an effective way to analyze the deviations and to tell the corrective measures. So comparisons can be done. Review departmental weakness. So whatever is the weakness with respect to a particular department, whatever weaknesses we have encountered, that can be very well addressed through management audit report. Help change of management mindset. Management mindset can be changed using the management audit report. Management can be told, the corrective actions can be given to the management. Their mindset can be changed by help of the management audit report and the the entire overview which has been given in the management audit report. Finally, get solutions to the problem. The ultimate aim of management audit report is to get solutions to the problems which the organization is facing. And who better than a cost accountant can suggest effective solutions to the problems with a particular management is facing. Now, guys, audit checklist, what all can you include in your audit checklist? Because audit checklist is something that will ensure that we have covered all the aspect of management. Okay, we need to make sure that our audit is complete and comprehensive and we have not left any area. Okay, so for that, audit checklist is really important. You need to prepare a checklist of what have you covered in management audit, what you haven't covered in management audit. So this is an audit checklist. A management auditor shall normally maintain an audit checklist to ensure that it has completely audited and it had also followed the quality standards. What can be the checklist? What all things needs to be covered in a management audit. It should be planning, organizing, staffing, controlling, communicating, directing, motivating, innovating. So these are the areas which an auditor, management auditor should cover in its management audit report. Relating to a particular area you have to decide. Okay, so for example, in finance, in finance, how do they plan things in advance? How do they organize things? How do they manage staffing? How do they management coordinating, communicating, directing? So all these things are required to be analyzed with respect to finance. If you are doing management audit of HR, then all these things needs to be planned for HR. So we need to check all these things. In these areas, an auditor should look for any weakness which may affect the efficiency of the organization like. So what are the weaknesses in a particular process? Is it directorial weakness, which means direction is lacking? There's no direction, everyone is doing whatever they want to do. Everything is going haywire because direction is not there. Management is not there. People are directing well, but execution is a problem, management is a problem. Organization weakness is there. Financial weakness is there. Finance is not there in this particular department. System weakness is there. We don't have appropriate systems. Procedure is lacking. We don't have good procedures to be followed in that particular area. Functional weakness. The functions being performed are not appropriate. Operational weakness. We don't have operational SOPs, standard of operations, or standardized operations is not there. Framework is not there. Marketing is weak. Industrial relationship is weak, or weaknesses meeting social responsibility. We are not meeting the social responsibility. Security lapses are there. We don't have adequate security in our organization. So any kind of these weaknesses may be highlighted in your management audit report. Yes. Now, as a part of management audit, there are certain special reports which certain stakeholders demand from the management auditors. Like, talking about banks. Banks or creditors would want analysis of the credit worthiness of the company by the management auditor. They would request the management auditor to go in a particular company and tell about the credit worthiness of that particular company. That can be the ask by the banks. Shareholders can demand that, please let us know whether the prospectus which has been issued by the management for fresh IPO, whether that is true or not, whether funds which are obtained from IPO are utilized in the right way or not. Shareholders might want that kind of a report from the management auditor. So depending upon who is ordering the management audit, objectives can be different. So special reports, sometimes reports have to be prepared and submitted for special purpose or special persons. Some of the reports are as under, like for banks and creditors, accuracy and reliability in report and confirmation of the statements made. So management is saying that I have 50 crore worth of inventory. Now, management auditor may analyze whether this is true or not. Bankers are more oriented towards security, due of debt servicing, whether the company will be able to service their debt or not. Service debt means whether the company will be able to pay the interest or not, whether the company will be able to pay the EMI or not. Okay. So all statements by the auditor should be clear and positive, and they are also keen in the explanatory notes to the financial statements. So this is from the perspective of bankers, that they would require the management auditors to focus on these areas like debt servicing, whether the management will be able to service their debt or not. Shareholders, what would shareholders want? They would like to analyze the full facts of the organization's business, convey right and correct message to a layman who might not understand the technical jargons. Okay, so shareholders might expect the management auditor to evaluate the entire processes, entire organization from a standpoint of growth and future revenues. Auditor's report in the prospectus at the time of public issue is very important. Auditor's report is also included in the prospectus also, guys, right? Expert read between the lines of the auditor's report. It will ultimately reflect in the auditor. So, the experts will also scrutinize the management audit report in great detail. So they will try to, make a lot of sense out of the words which are written by the management auditor. So every word has to be used carefully by the management auditor. So this is from a shareholder's perspective. What would employee want from a management auditor? Employee would always want better understanding of the business to dispel any misconceptions, counter charges by the unions. So employee unions are there who would try to mislead the employees by giving some false impression about the management to the employees. Union are always, against management. They would always, tell rumors about the management to the employees. Employees will always be little bit disturbed by the rumors which are being spread by the union. So now employees want a fair analysis of whatever union is saying, whether it's true or not. Management is not giving bonus this year. This is a statement which is released by the union, but now employees want to understand whether this is true or not. And if yes, what is the reason why management is not declaring bonus this year? That is the perspective of employees for conducting management audit. So to dispel any misconception or counter charges by unions, the reports must gain confidence of the employees and earn respect of the statements. So employees should be confident about the report, whatever report is being given to them. The report should consider the need of the employees. Whatever employees require, the report should have that thing, whatever an employee requires. Employee doesn't require EBITDA. Employee doesn't require a statement of, a cost sheet or what is the cost of a particular organization. Employee doesn't need all these things. Employee needs what is the management thinking about them in future, how would they grow if they remain in the same company in future. That is the thinking of the employee. That is where management audit can help the employees in determining that fact. Auditors' views will be expected to be totally unbiased. Obviously, the auditors are expected to be unbiased and they would not get influenced by either the unions or the management. Employee expect that an unbiased, uninfluenced opinion should be expressed by the auditors without relying on the statements of the union and without having influence from the management. That is the expectation of the employees from the management auditors. Then small businesses, a report to be designed in a very simple way. If you are conducting management audit of a small business like an MSME, if MSME is getting its management audit done, then your report should be very simple and it should be directed towards person or small group of person only, because people are stakeholders are less. So the report should be simple and should be concise. Then suggestions in the report must be based on proper appraisal of the problem. The suggestion should be absolutely based on the problems, whatever problems are being faced by the business and what are the solutions. So small business reports should be particularly made in a very simplistic way. A very simple report is expected by a small businessman. Okay. So yes, this was your chapter on basics of management audit. After that, we have some MCQs. We have some true and false which you have to do yourself. There is a small chapter, but this forms basis of your next chapter. Next chapter is management audit in different functions, which is a lengthy chapter. But this forms basis of your next chapter. So unless until you cover this chapter well, your next chapter will not be prepared. So please prepare this chapter well, because we'll be starting the next chapter in the next class, which is management audit in different functions. And there we are going to analyze the concept of management audit in great detail. So yes guys, good morning and welcome to this session of live marathon of cost and management audit. And yes, yesterday we had seen the critical elements of management audit. Yesterday we had gone through what is the meaning of this word management audit, who can do management audit, what is the focus of management auditor, and how there is no statutory framework around which management audit revolves. So there is no statutory requirement for management audit as such, but management audit is done for the benefit of the company as a whole, for the benefit of the entire organization. Management audit is always done. So in yesterday's chapter, basics of management audit, we had seen the basic elements of management audit and how are those basic elements relevant, how are those basic elements important for the company, and what benefit would those basic elements give to the company. And guys, in today's session, we are going to deep dive into management audit and in what all areas, in what all functions can management audit work. Management audit is active in what all areas and what contribution can management audit give to an organization. This is the objective of today's chapter. So name of today's chapter is management audit in different functions. How can we use management audit features in different functions, in different ways? That is the objective of today's class. So today's chapter is management audit in different functions. In various functions, what is the use of management audit? What is the the relevance of management audit in different functions? That is what we are going to see in today's chapter. So before we come on to management audit in different functions, first we need to understand, guys, what is the difference between objectives and goals? Because ultimately, what is the main main philosophy behind management audit? Management audit really helps the organization to attain its long-term and short-term objectives. So the idea is that whatever objective has the organization set for itself, those objectives should be fulfilled in short run as well as long run. So goals should be achieved. The desired results should be achieved. So first of all, we need to understand the difference between objectives and goals. These are two words which are different words, and we need to understand what is the difference between goals versus objectives. What do you mean by goals and what do you mean by objectives? The difference should be clear in our heads. Okay, so first of all, what do you mean by goals? Goals means these are achievable long term and they are broad. And what are objectives? Objectives are specific and measurable action to achieve overall goals. I'll tell you a very simple example which is relevant to you itself. The objective the goal which you are following right now is to qualify CMA Final Group 4. That's the goal. That's the ultimate goal. That you have to qualify CMA Final Group 4 with good marks. That is your goal. That is your long-term, goal that you want to achieve. That's the broad goal, or a very big goal that you want to achieve. It's very broad in nature. We now dwell down into smaller parts of it. Smaller objectives. Objectives are to attain at least 80 plus in cost and management audit, 80 plus in BVM SPM, maybe 70 plus, around 70 in IDT, and yes, 50 in CFR. These are your small objectives. So objectives are very specific. Objectives are not broad, they are specific and they are measurable. Okay, we can measure them, that yes, this much is the score that I want to attain in cost audit, this much is the score I want to attain in BVM SPM. So they are measurable. However, goals are not measurable. They are just long-term goals, broad goals that we make for ourselves, which is qualify CMA Final Group 4. Mean to qualify Group 4, and of course who are giving both groups, then both groups. So these are difference between goals and objectives, which you need to really understand, that the goals are generic in nature and objectives are more specific in nature, and they are strategies to achieve overall goals. What actions do we take to achieve our overall goals? That is highlighted by our objectives. So objectives are the specific measurable actions, the activities that can we do to meet our overall goals, that is objectives. So difference between goals and objectives should be really clear to all of you. So corporate objectives are the overall objectives of the organization that influence direction of the corporate strategy. In other words, what organization seeks to achieve is the corporate objective. Because guys, ultimately the management auditor will also work towards your corporate goals and objectives. Management auditor will also see that what are the long-term goals that management is or the company is required to achieve, and the management auditor will work towards those goals along with the management of the company. So these goals are directed towards the achieving overall objectives of the organization. So what are the differences between objectives versus goals? Goals include broad primary outcome. These are primary in nature. Okay, these are main goals that you have drafted for yourself. For example, General Electric. There's a big company, General Electric, which is again a conglomerate. It makes a lot of things. It is into electrical equipments, it is into industrial equipments, it is into water technology, water turbines, wind turbines, many things. General Electric is into a lot of things. Okay, so what is the objective, what is the goal of General Electric? Let me tell you, the goal of General Electric is to be number 1 or number 2 in everything we do. That is the broad goal. They want to attain first position or the second position in whatever industry they are working for. Whatever industry they are working in, they have to attain 2 positions. 2 positions are desired, number 1 or number 2. That's it. They just want to obtain 2 positions, either number 1 or number 2 in whatever they do. That is the broad goal of General Electric. So goal of General Electric is to be number 1 or number 2 in whatever they do. That is the the goal of General Electric, and that is how their objectives are also driven, right? Their targets are also set according to that goal. And what are objectives? Objectives are business objectives. That is a measurable step people take to achieve that goal. So to become number 1 or number 2, you need to have specific targets. For example, you have to obtain a sales of say 100 crores in a particular sector. Then only can you be number 1 or number 2. You have to control cost to the extent of 20%, only then you can be number 1 or number 2. You have to develop technology which is far ahead of your competitors, then only can you be number 1 or number 2. So objectives are specific measurable actions which people take to attain your goals. That they are the objectives. Secondly, goals are generic in nature and objectives are very specific, and they are also measurable. Okay, measurable in terms of amount, measurable in amounts. So that is the second difference. Third difference is goals enumerate broad targets. So, broad, goals are broad targets that you want to achieve in life. The overall goal that you want to achieve in life, that is your goal. And objectives are how long will it take to achieve those goals? What is the time duration that will take to achieve the goals, or what resources are required and available to achieve the goals. That is how business objectives are sought. They seek relevance. They seek specific measurement. They would seek that what kind of objective should we state, what kind of tenure are we looking at, duration, how much duration is there for achieving the business objectives, how long will it take to achieve the business objectives. That's how the business objectives are defined. Then what are the resources required, or what are the resources which are available to achieve these goals? They are also defined by objectives. So for example, you have only say 2 months before your final examination. So within these 2 months, you have to cover the entire syllabus. Those resources are to be determined during objective clarification. What resources do we have? Do we have 4 or 5 months before the final examination, or do we have only 2 months or 1 month before the examination? That's the consideration of objectives. That's the consideration of objectives. So objectives state how long will it take to achieve the goals, the resources which are available to achieve the goals. These are stated by business objectives. Then we have goals are the plans of our business future. We generate a list of potential achievements. So, how do you see yourself, your business in next 10 years or next 5 years? That is your goal. So, the goal is nothing but expectation of future. What is your expectation of future? How do you see yourself in future? That is your goal. And what is your objective? Objective is actual steps that we take to achieve those goals. What are the steps we are taking to achieve those goals? That is known as objectives. So objectives are the subset of goals. Goals are a broader category. Objectives are a narrower category or a finer category, that is objectives. That is the difference between goals and objectives, important from an exam standpoint. Because guys, in management audit, first thing that we see is what are the management's goals and objectives. And then we see that whether the management is able to achieve those goals and objectives or not. That is the second consideration that we see. But the first consideration is what are the goals and objectives of a management that we need to quantify, that we need to have a clear picture of in front of us. And that is how the goals and objectives are defined. Second is corporate culture. What is a corporate culture? Because before starting any management audit, the auditor should understand what kind of culture is there in this particular organization. Whether there's linear hierarchy or there's multiple hierarchy, multiple people are reporting to multiple seniors, or there's a linear hierarchy. What kind of culture is it? Is it a culture of strictness, very, very stringent rules and regulations, or there's some bit of ease? So for example, you must have heard that Apple is one of the best employers of the world, or Google is one of the best employers of the world, and Google offices are nothing less than water parks. Their decor, their interiors are very vibrant. They are not boring office type interiors. They have got very vibrant interiors, and at all times cold drinks are served free of cost in Google and Apple's office. You can eat pastries, cakes and whatnot. All these things are available at any given point in time in offices, and you can drink coffee, have tea, play some table tennis during your office hours in Google and Apple offices. So Google and Apple offices are really cool. They have a culture of vibrance. They don't have culture of a lot of strictness is not there, because Google and Apple believes that if employees are happy, they are bound to work. They will work double of their capability if the culture is good, if the culture is healthy. So they believe in a good corporate culture. So before starting management audit, the auditor should understand what is the culture of the organization. Is everything very strict, that whatever the MD will say that will happen, and the employees are little afraid of MD, and employees do not raise their voice against MD? Is that kind of an environment is there, or a friendly environment is there, that yes, everyone can talk to everyone, and junior can approach a senior if he or she faces any problem? There's a friendly environment. Whether there's a friendly environment or whether there is a strict environment, there's a very stringent environment, and the people are really not very congenial, they're very strict with each other. What kind of environment is followed in that particular organization? That is culture that every auditor needs to understand before starting the management audit, before starting the management audit. So the culture is to be understood in a great detail before any audit starts. So corporate culture refers to the corporate's values, beliefs and behaviors. What are the behaviors of the corporate? What are the values that they follow? Do they respect individual or not? Do they respect each and every employee or not? Or they think that, oh, these are our employees, whatever we decide, they will have to do it. Or they incorporate employees' suggestions and opinions in their decisions. What kind of culture is it? What kind of values are there? What kind of beliefs are there? And what kind of behavior is there? So net corporate culture means a vibe. Okay, VBB. Spelling I have differed, but it's like vibe. Vibe. B. You stretch B. Okay. Vibe. So corporate culture is about values, belief and behavior on the basis of which people interpret experiences and behave. So whatever people experience, in an organization, that is its vibe, that is its culture. You must have heard in many organizations, people will not leave easily because those organizations have very good culture. They don't leave easily. They don't, they don't go out of their jobs very easily. They are very happy in their jobs. So that is known as a vibe. That is known as the culture which that particular organization has. Sometimes what happens is employees do compromise on their salaries. Yes, they don't want heavy salaries, but they don't want that kind of culture. So Google enjoys this reputation that the employees would even sacrifice their salary a little bit for entering Google. Google enjoys this kind of a reputation. Microsoft enjoys this kind of a reputation that Microsoft is a very employee friendly company and people would sacrifice their salaries a little bit. They'll compromise on salaries, but they want to work for Microsoft. They want to work for Google. They want to work for Apple. These are some companies which are dream companies just because of their culture, just because of the experience which employees have while working in those companies and the behavior which employees have inside the company. In simple language, corporate culture is the operating working environment and is shaped by way people conduct their work, the way customers are treated and served, the way workers interact with each other, the way supervisors, or the way the people present themselves. What kind of interaction is there? Is communication healthy? Is communication good? So you must have, seen two kind of teachers in your life. One, teachers which are very strict. They would scold you for small things and they would not let you raise questions very easily and they would be really strict and they would want absolute discipline in the class. On the other hand, that different kind of teachers, the second kind of teachers who are very friendly with you. They act in a friendly manner. They would hear your voice. They would act upon your voice in a very friendly manner and you would feel that this is not a teacher. He is like a friend to us or he's like an elder brother to us. Okay. Same is the organizations. What organizations make you feel? What organizations make their employees feel? That is relevant. Feeling is very relevant. The employees should be felt warmth. The employee should feel congenial. The employee should feel, at home when he is in the organization. That is the feeling which an organization can give to the employees. So the way workers interact with each other and way the supervisors interact with, that is known as corporate culture. So what do you mean by values? What kind of values are pursued under corporate culture by the corporates? What are the values? Values are outcome oriented. So obviously every organization is outcome oriented. They would emphasize on achievements and results, but not at cost of the employees. Employees should not suffer. That is a good culture. Everyone wants to achieve their objectives, but not at cost of their employees. Employees should not suffer. That is a goal which is to be kept in mind. People orientation, yes, some organizations, are even, give more emphasis on people rather than outcomes. They say, no, achievement of goals are secondary. I want my people to be happy. I want the people who are in my organization to be happy. Achievement of goals is secondary. So those organizations are people-oriented organizations. Insist on fairness, tolerance, and respect for the individual. Individuals are respected in such organizations. They are cared for in such organizations. Team orientation. Some organizations are directed towards their teams. They are very congenial towards their teams. They value team effort. They value everyone sitting together and brainstorming for a particular thing. So they value teams a lot. So emphasizing rewarding collaboration. The organizations who reward collaborations, the organizations who reward team get together and thinking together, they are team oriented organizations. So these are various values which are to be pursued under corporate culture, which is outcome oriented, people oriented, team oriented, rewarding collaboration, attention to detail. Now many organizations are driven by detailing. They pay a lot of attention towards details, especially engineering organizations or organizations like which are there in producing, say, cloth, okay, or say clothing, apparel, wearing stuff, or accessories, okay. Because if finishing is not there in a cloth, you will not buy it. Finishing is very important. So detailing is very important. So some organizations lay a lot of emphasis on detailing. So that is again a corporate culture. Valuing precision and approaching situations and problems analytically. Stability, providing security and following predictable course. So stability is some organizations' corporate culture. And in India, stability is one very important pillar of government organizations. Government organizations follow the culture of stability a lot. There's not a lot of attrition in government organization. Government organization face very little attrition because they provide a stable career path. Not a lot of growth like private companies. Private companies offer a lot of growth, which government companies don't offer. But government company offers a lot of stability. Stability means for the entire life, you are sure that yes, this much money is going to come to me and I'll be leading a good life. So stability is one such feature of government companies. That is a corporate culture, okay. So proving security and following predictable course. Innovation, some organizations which are like engineering organizations, they promote innovation a lot. They would value innovation a lot, and they would reward innovation a lot. They would definitely pay for your innovation. If you are innovative, then they pay for it. So creating new things, creating new ways in which work can be done is appreciative in many organizations. So innovation is corporate culture or corporate value of some organizations. Encouraging experimentation, risk-taking to nurture risk-taking and innovative ideas. Failures also praised. So even if you fail, then also you'll be praised that at least you put in that extra effort which are required. Aggressiveness. Some organizations are very aggressive. For example, the Big Fours. I've always talked about Big Fours, okay. I have worked with Big Fours for good 14-15 years, so I am aware about Big Fours. So Big Fours are very aggressive in nature. They are very aggressive in terms of their goals orientation, their targets to be achieved. They are very aggressive, they will make you sit for Saturdays and Sundays, even on holidays sometimes, to achieve your goals. So aggressiveness is a feature of many organizations. And why only Big Fours? All the consulting firms, Boston Consulting Group, McKinsey, all the consulting organizations are very aggressive in their approach, in their corporate culture. So if you can withstand that aggression, you can withstand that heat, you can withstand that chasing your dreams and goals like mad, then only you should enter Big Fours or the consulting firm. And yes, PFC, Power Finance Corporation, is one of the very good examples of a government company who value stability. Stability is definitely an important element of where government organizations, and Power Finance Corporation is definitely one of the leading PSUs. And yes guys, by the way, your campus placement, one of the highest packages which are offered by a PSU is mostly PFC. For many years now, PFC is offering higher package around 27-30 lakhs per annum to CMA qualified students. And yes, that should be your dream company to join. That should be a company where you should join. Your goal should be there. But I would definitely also request you to think about aggressiveness, because what I personally feel is that in case of government companies, they are a little laid back. They don't have that aggression. However, you as a professional, for the first 5 years of your life, you need a lot of aggression. You need a lot of force in you, fire in you. And that fire is lacking in government organizations like PFC. Little bit less, not lacking, it's not zero, but it's lesser than a private organization. So talking about all the government organizations, anyone, you pick up anyone, Indian Oil or ONGC or any of the big organizations, PSUs, there the aggressiveness will be little less. So if you are a person who is a go-getter, who you are a person who wants to achieve your goals, you want to achieve your, you aggressively pursue your goals, you want aggressive growth path, you want, high promotions in a very short span of time, you want work which is like really excellent, and you really enjoy working for late hours and Saturday, Sundays is okay for you, then probably government organizations is not where you should be. You should be joining private organizations, you should be joining the big fours, you should be joining the consulting organizations. Like, if someone has keen interest in, say, GST, you love GST and you really like, to solve complex problems of GST, or for that matter, direct taxation, you love direct taxation and you really enjoy doing direct taxation a lot, then big fours is the place for you. You qualify CMA and you gain some relevant experience in the area and you join the big four. That is the future for you. Or if not big four, then top 10 accounting firms of the country. So yes, it depends on person to person. You also now are at the verge of deciding your career path. So don't just get blindfolded by packages. Oh, 30 lakh package. Oh, 35 lakh package. We should join this company. Don't get blindfolded only by packages. Think more than package. Think about the profile as well, and think about the company as well. Package you will get, in few years you'll be at that point in time. That's okay. But the aggression, the willingness to do a particular sector like GST or income tax or Ind AS, that will not be available in the government organization. Government organization will have a pretty much very a sector will be given to you, a kind of work will be given to you, like TDS, you will be doing TDS all through. So it will be very fragmented. However, at this point in time, I think that initial 5 years of your life, you should be really a person who's doing a lot of things. You should explore a lot of areas. You should do work in every area, and then after 5 years you can choose that, yes, now I want to be fixed in this particular area, so I'll join this organization. That should be after 5 years. So again, depends on you whether you value stability more or whether you value aggressiveness more. Whatever you value more, you can choose your organization accordingly, because every organization has a different culture. Corporate culture is different. Okay, so factors that shape organization's culture. What are the things that really shape organization's culture? First of all, it's values. What values is foreseen by an organization? What do they see in a particular which we already studied? That is the foundational culture. Whether you are more focused on outcome, people, team, attention to detail, stability, innovation, aggressiveness, whatever is your value, whatever you think is valuable for you, that should be your preferred choice of organization. Degree of hierarchy. What kind of hierarchy is there in that particular organization? That also determines your corporate culture. So if you have high hierarchy, means strict structure, approvals through official channels, then there are bound to be delays. There are bound to be duplication of work. You need to follow up again and again for approvals. Okay, and this is a typical feature of a government company. Government company has a lot of approvals. It has got a lot of hierarchy mechanism. Moderate hierarchy, a structure exists but flexibility is allowed. So structure is there, hierarchical structure is there, but there is reasonable level of flexibility. Low hierarchy, where there is no specific structure, loose roles are there, open communication is there, challenges to authority are accepted. So these are the this is the third part of your hierarchy. And guys, these days, since the advent of startup culture in India, the third is also prevalent. Earlier, the third level of hierarchy was considered to be not very good. It was not considered good. Loose controls, loose roles, open communication, this was not very congenial, was not expected to be there. So an employee who's at execution level cannot talk to the MD earlier. But now, with the changing times, with the changing environment, even an execution level staff can write an email to the CEO of the company. Openly he can write. He need not follow the hierarchy. If you think something is not wrong, then something is not right, there's something wrong which is happening, if an employee feels that, he can write directly to the CEO of the company. That is very much permissible in today's world. So in today's scenario, low hierarchy is also acceptable, which is loose roles, open communication and challenges to authority are accepted. Too many layers can slow decision making process. So a balance is important. Okay, so balance is to be attained. Then third thing that governs any corporate culture is promptness and urgency. How prompt is an organization in responding to market changes, because market is ever changing now. Market is too dynamic. The stakeholders demand a lot of things. They expect a lot of things from any company, and market is also too dynamic. So how do you quickly adapt to the changing markets. That is your culture, that is your survival and competitive edge, and that also determines your corporate culture. So culture should be such, your company's culture should be such that you quickly adopt to the changing markets, you could quickly adopt the changes. That is also an important part of your culture. So promptness and urgency. People oriented work versus task orientation. Now, what do you value more again? What do you value more? Are you people oriented, which means value employee well-being, participation and morale? Or you are task oriented, focus more on efficiency, processes and quality, even over employees? What do you value more? What is your priority? That is the element. So most organizations try to balance both. So both the things are important from an organization standpoint. Functional orientation. So what is the focus on other core functions of the organization? Whether your focus is on sales, whether the company's focus is only on marketing, whether the company's focus is on research and development, your focus is on hospitality, customer service, operations and quality, that is your focus. So what is your focus? That again determines the culture of an organization, whatever is your focus. Employees may believe their function is most important, so leaders must be aware of these perceptions. So the employees believe that their function is important, so they focus on their perceptions. Organization subcultures. What are subcultures in the organization? So within the organization, some small groups are created. Obviously, it's a big organization. If it's a big organization, then there's bound to fragment small subsections of an organization. For example, marketing team is different, finance team is different, operation team is different. They are subsections of a big organization. They are subsectors of big organization. So small groups within the organization may develop their own ways of working. For example, regional teams, departments, etc. These can support the overall culture. They complement the overall structure, but they also sometimes create conflicts with respect to value clashes and ideology clashes. Some ideologies may clash, so sales team may think differently, marketing team may think differently. There can be ideological clashes within small groups, but small groups do exist. Subcultures do exist, and subcultures also define the entire culture of the organization. So I'll give you a very important example of a subculture. Okay, so when an organization is completely against any unethical practices like bribing, then naturally guys, all the departments would not engage in something like bribing. If the entire organization's culture is that we don't bribe, if any government official is demanding for some money, we will not give it. Whether that work is done or not, we will not give the money to the person who's demanding the money. If the culture is like that, the organization's culture is like that, then naturally guys, the subcultures will be similar way. Finance department will also not bribe, sales department will also not bribe, marketing department will also not bribe, process department will also not bribe, because every department somewhere or the other deals with the government of India, somewhere or the other, like ISO certification for the products, process approval for the products. The finance department will face taxation authorities, etc. The overall company will face regulators like SEBI, RBI on an overall scenario. So corporate culture, the main culture is that we don't bribe. So subculture will also develop in the same way that each of the small departments will also not bribe the government of India or any other government for that matter, not only of India but from outside also. They will not bribe, they will not have any unethical practices. So subcultures are developed, and based on that, the main culture of the organization is developed. So they are both complementary and supplementary to each other, the subcultures as well as the main cultures of the organization. Then creating and managing culture, it's up to the organization, it's up to the leaders who shape up the culture of an organization. Whatever is the culture of the organization, it is up to the leaders what kind of culture do they propagate, what kind of culture, friendly culture, employee friendly culture, or employee regressive culture. So I'll give you a very strong example which will always be etched in my mind, because I have seen the history being created live in front of me by our erstwhile CEO. Yes, I was working with KPMG, okay, and the CEO of KPMG at that point in time was Richard Rekhi. He was a visionary man, Richard Rekhi. I was working with KPMG, and the leader, our leader, I mean, you can proudly say that our dynamic leader was Richard Reiki. Dynamic leader. He was a dynamic person. Okay. So he introduced a concept in India which never existed in India. It was a foreign concept. It was a concept of UK, British, USA, Australia, the Western world. It was the concept of Western world he introduced in India for the very first time. And what is that concept? Concept of Christmas leaves. Concept of Christmas leaves, or what he called as block leaves. What is this concept of block leaves? Concept of block leaves, which was first introduced by Richard Reiki, the KPMG, erstwhile CEO of KPMG, and I was working with KPMG, was that from 25th of December till say about 3rd or 4th of January, the company will remain shut. Yes, the company will remain shut. There will be a company complete off, and all the employees will be given something known as winter vacations or block leaves. All the employees will not work. Just like US or UK or any other part of the world, the employees will not work and they will observe block leaves, and they will observe leaves during this period. Not paid leaves but unpaid leaves. So in one of the town halls, we were sitting in one of the town halls, and a lot of hype was created that Richard is going to tell you something about the organization today. He's going to gift you something, gift the employees something. Although he propagated many such policies which were anti-employees. He changed them in KPMG when I was in KPMG, and I'll tell you many of them. But this was the biggest one. This was the biggest one. Okay, so what was it? He announced that in one of the town halls which happened in Gurgaon itself. In the town hall, he announced that yes, all the employees will remain on leave for a period from 5th December to 3rd or 4th January, whichever would be the Sunday. Okay, even sometimes 5th till 5th of January. This will be observed at block leaves, and this would be paid by the company. This will be delivered by the company to all the employees, and this will not be deducted from employees' salary. And we were so happy. We were so happy that we were absolutely elated by this information and by this announcement. Within a few days, Richard Reiki again addressed all the employees of KPMG, and he told at one other event, he told that he got calls from the other big four CMDs, the PwC, EY. He got calls from other big fours and saying that, have you gone crazy? There will be so much of loss of work. Have you gone crazy, Richard? He told us that he got calls from many other companies, CEOs, questioning his decision of offering block leaves, but he said no, I'm all for my employees. If my employees are happy with something which we can afford also, because Western world is closed during that time and we serve a lot of MNC companies, so we can afford these leaves. If my employees are benefited, I'm more than happy to bear this loss. This is a loss, but I will bear this loss. I will bear this loss. And this is how leaders work. And this is how leaders ensure that corporate culture is good. It's the responsibility of the leaders who ensure that corporate culture is good. And I've changed, after KPMG, I was working with Deloitte also, but I don't remember the CEO's name of Deloitte. I don't remember, but I remember Richard Reiki's name. Why? Because of his dynamic leadership, which helped create a wonderful environment and a culture in our organization. This is how culture is made. And this is known as people orientation. What we talk about people orientation, this is known as people orientation. How people are emphasized in an organization more than even sometimes work. That is the culture that is known as people orientation. This is an example of people orientation. I'll give you another example of people orientation, which is again a landmark in history of India. ITC, one of the biggest conglomerates of the world now, initially into tobacco business, but now into hospitality business, even into toiletries like soaps, shampoos, detergent, etc., etc. It's into many things. ITC is into many businesses. So a very big conglomerate and a very considerate conglomerate. Yes, led by the able, able leadership of many big leaders. But one incident which really had a big impact on everyone was, when guys 9/11 happened. The Twin Towers in the US were destructed by a terrorist attack. Osama bin Laden hit the Twin Towers. The plane crashed into the Twin Towers. It was a suicide attack by the bombers, by the terrorists, and the Twin Towers were slashed down to ground. The flight was abducted by those terrorists, and the Twin Tower slided down. And suddenly, since America was hit, US was hit, the entire economy of US turned down. There was a downturn in the economy of US. And as a result, world's economy had an impact. World's economy. The share market crashed. Businesses got, haywire. People got laid off. All the big companies were laying off their employees like anything. 2,000 people, 3,000 people, were out of jobs. Someone were laid off from their jobs, so they had to leave their apartments where they were living on rent. Everything came to a standstill. It was a bad phase for entire world, because if US is hampered, then almost entire world is hampered in that case. Yes, it hampers everyone. But at that point in time, ITC's HR manager, HR head, human resource head, floated a mail to all the employees. And what was the content of the mail? The content was that yes, 9/11 kind of a of an event has happened in the history of the world, which is unfortunate. It has led to downturn of economy not only of US but of the entire world, including India, and we see a rampant destruction as far as corporate is concerned. People are being laid off without even giving advance notice by the companies. It's painful for them and their families to survive because of that. But I assure you that whatever be the losses that are incurred due to this downturn, we will bear these losses, and we will not lay off even a single employee in our organization because of this 9/11 attack. Rest assured, your job is safe. You are safe with us. Please cooperate with us in these difficult times, but we will bear all the losses. We won't let losses pass on to the employees, and we will not lay off even a single employee of ITC. This was the email sent by the HR head to all the employees of ITC. Just imagine, at that time when everyone was under panic, at that time when everyone was unconfident about their jobs, when they were unconfident about their lives, when they were unconfident about their earnings, the people orientation, the orientation which led to people regain their confidence was leadership, the corporate culture. The corporate culture was employee centric, and therefore employees were supreme in this culture. And when employees are supreme in a culture, then naturally your culture will improve, your corporate culture altogether will improve. This is known as people-centric corporate culture, in which many organizations have. Many organizations have this kind of a culture, including KPMG. I'm fortunate that out of my entire career, I have spent 10 years with KPMG. Yes, a decade I've spent with KPMG, and the reason why I spent a decade with KPMG in my career was very simple. They were absolutely employee oriented. They were targeting, focusing, comfort of their employees, the benefit of their employees. Of course, revenues are important. Work is important, no doubt about it. And we also worked overnight. We also worked on Saturdays, Sundays. Even I worked on Dussehra. I worked on Diwali. Many times we have to work on pressurizing situation. We have to work, right? That is okay. But it's important that our employer values our work. It's important that our employer is happy out of our work, and he rewards that extra work. And that is the feeling that KPMG would give to their employees continuously. And this is known as employee orientation. If you understood the culture, what do you mean by culture? If you understood what do you mean by employee orientation, please write a yes in the chat box. Okay. So now the question is, how to create and manage a culture. So culture is developed gradually over time. Over time, you develop this kind of a culture, influenced by leadership. Leaders are playing the key role, key importance in developing a culture, can shape and maintain the culture by being aware of the existing culture and by reinforcing values that improve effectiveness, by managing changes carefully. Changes are to be managed carefully, and being aware of the existing culture, reinforcing values that improve effectiveness, and managing changes in culture. By doing these things, cultures are developed over a period of time, and you manage culture also well. But now the question is, how do you build and sustain a good culture? First of all, how do you build a good culture? Secondly, how do you sustain a good culture? Because building is easy, sustenance is difficult. Okay, so how do you build a good culture and how do you sustain a good culture? That's the question which we would ask, because you also at one point in time will become leaders of some organizations. You will also become CFO of some organization. You will become managing directors of such organization, right? So then you will ask yourself, how would we create, when we become the CFO of an organization or CEO of an organization, how would we develop a culture which is beneficial for all, which is good for all? How can we do that? The answer is leaders and managers within an organization should gain understanding of the common traits found in all parts of business. First of all, you need to understand what does your organization wants. What does your employee wants? You need to understand that. Okay. Then managing the organization's culture, you need to then manage the organization culture by identifying common traits from the standpoint of organization, social, material, ideological, culture. So what is required by employees? What is required by our staff? What is lacking in our staff? What they look forward to? What makes them happy? What makes them sad? How to drive efficiency in employees, that they work even well? Can we add on one more machinery so that work is ease off and additional production can be done? First, you need to really understand the entire feel of the organization. So first of all, please understand the common traits from standpoint of the organization. Second, then convene groups of employees, representatives from all levels, functions, to assess the validity, significance and currency of the key traits. Now you need to make groups of employees, of their representative, to understand which trait is important, which trait is not important, which makes your employee happy, which trait doesn't make your employee happy. So you need to really make groups of entire community, entire people who validate or signify your current key traits. Subject to those traits, rigorous assessment of underlying shared assumptions, values and beliefs. Now you analyze whether the traits which you desire are complemented by the values which you have. So the trait you desire is that my employee should be happy. This is the trait that you desire. And the values which you have is, no, don't give a lot of bonus to the employees. How will employee remain happy if you don't give a lot of bonus to the employees, commensurate to their work and obviously profitability of the company? Or your value is that, no, don't give extra time to the employee for, chilling out. Then how would employee remain happy? If you don't give extra time to employees to chill out or to hang out or to be at ease. You should have a flexible working policy. Work from home policy should be there. If you want your employees to be happy, please have a work from home policy. So your values should commensurate with the traits that you found. Your traits to a rigorous assessment of underlying shared assumptions and values and beliefs. Your traits which you desire should be equal to the values that you want in your organization. So it should be commensurate with each other. Then summarize findings and share them with all participants to solicit additional insights. Then you summarize your findings and you share with your employees. Create a culture management action plan, and plan should support the corporate growth, organizational effectiveness, correct traits that might hinder the company's advancement. And finally, you develop a plan. Finally, you develop a corporate culture which supports growth, which supports effectiveness in work, efficiency in work, and correct traits. It should support everything. This is how you build a good culture in your organization. Okay, so this was all about corporate culture. Now, the next thing that a management auditor should be very focused on is corporate services. Corporate services. The second element of management audit. First element of management audit was creating good corporate culture. Corporate culture should be analyzed and should be created in a good way that the employee should feel proud of the organization. Employee should feel that yes, we are working for this organization. It's really a great feeling to work for this organization. So employee should feel very positive about the organization. Employee should feel very powerful about your organization. That is the first and foremost trait which should be there. Second is that you should have good corporate services. What do you mean by corporate services? Corporate services means the company should be able to serve well, should provide good services. Sir, are you talking about the customers? The company should provide good services to the customers. Not only customers, but also employees, also the shareholders, also the lenders, all the stakeholders which are there in the business. What are you saying, sir? Company provides services to the customers, not anyone else. No. What are you saying? How can company provide services to its employees? Employees are providing services to company. Now that is the catch. That is the catch. Corporate services means that a company should provide good services to not only its customers, but also to its employees, shareholders, community, fellow businessmen, state and government. Company should provide good services to all of them. But sir, employees don't require company services. We are not talking about the services which company provide as a revenue model. No, not those services. But The company should pay the employee well, and that too on time. Should get them trained on various aspects of organization. Should be should be careful about the safety and security of the employees. Should take care of welfare of the employees. Should take care of industrial relations. Should take care of job security, etc., etc. So the services which company gives to the customer, that is for sure good. Okay, that should be there. So if you are providing, say, telephony services to your customers, you are Vodafone Idea. So obviously you provide good telephony services. Connection should not break. Should be reasonably priced. Price should be less, and everything should be up to the mark. Your services should be good. That's very true, right? If you provide services to your customers with respect to any of these traits, that's perfectly fine, because consumer services are required. But along with that, the company should be able to satisfy its employees also. The pay should be adequate. The training should be adequate. They should train well. Safety norms should be there. Welfare should be, of the employee should be taken care of. These are services which company provides to the employees. What are the services which company provide to the shareholders? Safety of their investment and satisfactory returns. Appreciation of investment. The return of the shareholder should be safe. It should appreciate. It should increase in value. It should give satisfactory returns. Plus, adequate information should be passed on to the shareholders. Okay, information sharing should be transparent. The shareholder should be aware about whatever is happening in the company. Information sharing should be transparent with the shareholders. That's also an important element of corporate services. So company should take care of whatever services they are giving to any stakeholder, not only customer, any stakeholder. Of course, customer is important. After sale services is very important. You bought a laptop, the laptop got bad within, say, 2 months. Then you should have a redressal mechanism. You should be able to file a complaint to HP or Sony or whatever laptop you have purchased, Dell or whatever, that my laptop has gone bad, please rectify it. It's under warranty period. Immediately the engineer should come and you should rectify your laptop. You should go to service center and your laptop should be rectified immediately. There shouldn't be any delay. This is customer services, consumer services. This definitely should be there. That's the first priority, guys. So customer should be offered good quality goods at right quantity, right price, right place and right time. The goods should be provided in right quantity, right price, right place and right time to the customers. That is the first requirement. That is the first customer service. Then what is the service that we need to give to our communities? Communities means, people at large, right? There's some social responsibility also of the company. Please serve your, society. Please serve your community. Please take care of your environment of your community. Your company should not disturb the ecology of a particular, environment that you should take care of. If you don't take care of that, that's really bad on your part. So management audit also considers the community benefits. So I'll give you a very funny instance of how one of the management was not taking care of their community. I'll tell you an example, okay? So, once I was auditing a brewery. You know what is a brewery? Where beer is manufactured. You know what is a beer? Beer is an alcoholic drink, alcoholic beverage. Okay, so I went to audit a beer manufacturing concern, a beer manufacturing company which manufactured beer. Okay. No, Nidhi Gupta is saying no. Then Nidhi Gupta, I saw on Instagram you were partying in some club on your birthday. There was some glass in your hand that had some brown kind of liquid. What was that? I saw on your Instagram. Okay, so I was auditing this brewery company and I noticed one very peculiar thing about the pigeons who were there in the vicinity of that particular building. I saw outside in the yard, I saw pigeons doing rotation. They were rotating. Pigeons were rotating like mad people. Pigeons were rotating. On only one step, they were just making circle and circle. All the pigeons were doing this. And I was surprised, what is happening? What's wrong with the pigeons who are there in the vicinity of that particular organization? What's wrong? I asked the people who are working inside the factory, what happened to the pigeons? All the pigeons are rotating. What is happening to them? So what did the management tell me that, sir, whatever waste we throw out, okay, that's not bad waste. That is not disturbing our water channel. That is not disturbing our, the sewerage system is not affected because of those water. But that water contains traces of leftover beer molecules. It contains leftover beer molecules. And since it has leftover beer molecules, that water is drunk by these pigeons, and these pigeons have a sort of that hazy effect, that dizzy effect is there in the pigeons, and therefore pigeons are rotating. So although the waste is not polluting the rivers, it is not polluting the ecology of the environment, it is not polluting the water sources, that is true, but it is polluting the animals. It's harming the animals. Animals are getting addicted to some molecule of beer, so it's addictive. It's not good. But the company was not doing anything about it. I was doing statutory audit, so I had no right to write anything about this particular thing. But if I were a management auditor, I would have specifically written in my report that please stop doing this, draining your molecules of your beer in the sewerage system. If the molecules are being thrown away in the sewerage system, animals are getting affected. And obviously, if birds are getting affected, then obviously, the animals which would also be getting effectively. Some dogs or cow or any other animal would drink that water, it will also feel that dizzy effect, and their health will be destroyed. नशा हो गया है उनको भी, जैसे तुम्हें होता है वैसे ही ना, नालायक. So yes, you need to take care of your communities, you need to take care of your society. So social cost of your business should be evaluated. Social benefit, public relations is again an important element of your community dealing, and management auditor especially take care of all these things. Fellow businessman, you should take care of your fellow businessman also, your creditors, your debtors. Fair dealing should be there, fair trade dealing should be there. Your payment should be made on time, your receipt of payment should be on time, you should give your invoices on time, you should do everything which your fellow businessman wants on time. Timely disbursals are important. State or government, you owe a very strong liability or responsibility towards state or government. You should pay your taxes on time. You should not employ any tax evading techniques to evade your tax. You should not employ that. You should be very prompt in your payment of taxes. On time you should pay all your taxes. Any notices which you receive from the department, you should respond to them quickly. So all these things should be really on time. So compliance of laws, fair trade practices, timely payment of taxes, this you should do for your state government. Again, this is a very important part of corporate services. Whatever services a corporate will give to its stakeholders, it's an important part of the services which you give. So the concept of corporate services audit is that its appraisal should consider the level of contribution a business entity is making to the society and its environment towards raising the quality of life through better product quality, services, rather than only profit maximization. So of course, profit maximization is one of the important goals of any business, but along with profit maximization, all these things also should be considered. These things should also be considered. Profit is not the only objective. Along with profit, multiple objectives should be pursued. And management auditor specifically looks at all these things. This is the job of the management auditor. Statutory auditor will not look at it, cost auditor will not look at it, income tax auditor will not look at it, GST auditor will not look at it, but management auditor will look at all these things because he has to, comment upon the corporate services. So, product quality services rather than the corporate services audit thus attempts to distinguish between the ends and means of the business and provide a new dimension to the concept of audit approach. So, this is the new dimension, the social dimension to the audit approach. In corporate services audit, the auditor checks the company's response to different social needs. That's a new dimension which is added to audit, as a whole. Okay. So, this was corporate services audit. Just give me 2 minutes. Okay. So yes, this was corporate services audit. So this was corporate services audit. Workbook has already been solved. It is saved on YouTube. It is also saved on the, if you have purchased my main lectures, then it is also saved on the main lectures. Workbook has already been solved. And usually Altaf's question are around, the processes and procedures only. He never talks about course content. He never asks question from the course that, sir, I don't understand this, or this is difficult. Yesterday also he was only talking about, sir, when will the class happen, what will happen, the timing of the class, etc., etc. Altaf, are you actually studying for your attempt, or you are just bothered about these small things? Okay, now we come on to the next topic of our management audit. So as a management auditor, of course, I'm bothered about the corporate culture. I am bothered about the corporate services which the corporate is giving to any of the people, any of the stakeholders. I'm bothered about that also. Next thing that I'm bothered about is corporate development. What are the strategies? What are the objectives which we are following to develop our corporate, strengthen our bases, strengthening our values which are there in the organization? What are the things that we are doing for strengthening our core values? That is known as corporate development. How are we developing? Or see, profit increase is very easy. Increasing profit of any organization is quite easy. But overall developing, growing the organization as a whole, where employees are also satisfied, where government is also satisfied, where shareholders are also satisfied, that is difficult. To have an overall growth of an organization, that is difficult. And that is known as corporate development audit. So corporate development audit is the process of taking strategic decisions to grow and restructure one's business, establish strategic partnerships, and achieve organization's excellence. We are not only targeting profit. Okay, in development, we are not only targeting profit, that profit is our objective. No, not only profit is our objective, but entire growth, overall growth is our objective, entire overall growth. It is to create opportunities for the company through such actions like mergers and acquisitions, divestitures, and deals that leverage value of company's business platform. So what is corporate development audit? It's an independent objective study of an organization's capabilities. So what an organization is capable to do. Capabilities means potentials of an organization, what it can additionally do. Apart from whatever the organization is doing currently, what can it additionally do? That is the capabilities of an organization. It aims at identifying strengths and weaknesses and moving towards state-of-the-art performance. Such corporate development has 4 essential elements: regularity, systematic check, review, and appraisal. So these are the 4 pillars of corporate development. What we see in corporate development, these are the 4 things that we see in corporate development. Number 1, regularity. It means that different elements or parts of body corporate are constant watch. We are watching every part of body corporate. We are watching and carefully supervising every aspect of our business and whether every aspect is going fine or not. That is what we are evaluating at every level, at every point in time. We are regularly evaluating that. That is known as regularity. Second is systematic check. We are checking the requirements of the corporate after reviewing what is happening in the corporate. We are checking what is required, what is not required. So we are having a systematic check over the the changing requirements of body corporate. Whatever is required from us, that we are systematically checking. That is the second element of corporate development. Third is review. We are reviewing the past performance. We are reviewing the quality standards. We are reviewing the content, and we are also reviewing the contribution to corporate goals. We are reviewing all these things on a regular basis. We are checking what is happening. We are reviewing the past performance of the company. This examines the deviations from goal realization, suggests measures of achievement. Then last is we are appraising. We are doing constant appraisals. We are regularly, wherever the changes are required, wherever any enhancement is required in terms of goals, in terms of our values, we are doing that also. We are checking that yes, now employee strategies need to change. We are changing those employee strategies also. Now we know that our shareholders policy should change. Our shareholders should be more privy to knowledge and information. We are changing those shareholders policies also. We are giving more information to our shareholders. That is also we are checking. So we are handling every element of our organization, regularly checking, regularly monitoring, supervising them, then checking each and every part, of our body corporate, reviewing the past performances, how has been the past performance, and taking corrective actions, taking corrective measures to correct wherever we find there's any lacuna. Wherever we find there's any lacking, we are taking corrective actions for those aspects as well. So these are 4 elements of corporate development audit that we are focusing at. What is the scope of corporate development audit? What is the scope of corporate development audit? So corporate development audit, has got these 4 elements, these 5 elements. Okay, these 5 things are, the scope of corporate development audit. Number 1, corporate planning and policies. So first of all, we'll focus on, what are the plans which corporate develops and how do they develop those plans? What are the policies which the company follows? Does company have a flexible work from home policy? Does company has a good policy where the extra people who are doing extra work, they are rewarded well? Reward policy is good. Pay policy is good. The payment is released by the month end to the organization, to the people, where the pay policy is good. Whether all the dues are cleared on time. So all these are policies. So first thing that we need to review as a management auditor is to check whether the current policies are correct or not, whether the current planning is proper or not. Because if planning is lacking, if policies are lacking, then employees will never be happy. We will not be able to achieve our goals if the employees are not happy, and if planning is not appropriate, we will not be able to achieve our goals. Simple as that. Simple as that. So planning requires examining business's enterprise and its environment to understand the potential strengths. So the purpose of this step is to understand, to gain knowledge about what is happening in the organization and what is lacking in the organization, what is good, what is bad in the organization, what are the potential strengths of the organization. We need to understand all those stuff by doing corporate planning and policy. And what are the weaknesses? Then possible audit areas are selected, like planning, policy issues on product, production, finance, personnel, managerial, particularly succession, etc. So, as a management auditor, I first of all need to understand where is the weakness. What is the weak link? Is finance department weak? Is personnel department weak? Is R&D department weak? Is transportation department weak? Who is weak? Where is the weakness? We need to understand that first. So the first step is to review the corporate planning and policy measures. Just understand what are the corporate policies, what are the corporate plans, how do plans are developed, what is the ideology before developing a plan. Understand that first. So that is the first step. Second, we need to check the forecast. Forecast means, how do you estimate your future? Because every organization estimates its future, guys. There's no organization in the world who doesn't estimate its future. So if today you are earning, say, 10 crore rupees per annum, you will always estimate that, tomorrow I have to earn 20 crores. Then tomorrow I have to earn 50 crores. After 5 years, I'll be earning 100 crores. After 10 years, I'll be earning 1000 crores. So that estimate is always there. That forecast is always there. That budgeting is always there. So the second thing that every management auditor should do is that, as a part of corporate development, is that they should analyze the forecasting bit. Demand, supply of the goods, revenue, who's going to pay what, then what money should we apply to building more facility, buy new factory, buy new machinery, employ more employees. All these forecasting needs to be reviewed by the management auditor. So the factors of forecast, such as supply, demand, industry trends, enterprise competitive performance, general economic political trends, financial standing about the competitors are studied. Then third thing is corporate strategy. So what strategy has the company has the company devised about achieving these objectives? What are the strategies that are evolved? So if you say that after 5 years, I'll be at 100 crores turnover, how are you supposed to achieve it? When today you are at 10 crore turnover, how will you achieve it? That's about the corporate strategy. So what strategy are you following to achieve your objectives? 4 broad dimensions are usually covered in any strategic audit. Products line. What are your products line? What is your basic key product? Hero product. And what are your subsidiary products? R&D, research and development is being done. What is being done in R&D? Financial analysis, financial management is done. Top management for each dimension, past achievements, present and attainments. You analyze all these things to attain a competitive edge. Okay. Then corporate externalities. Now we have analyzed about the internal thing. These are the internal things of an organization, right? These are internal to organizations. Now as a management auditor, I will also analyze the external things. The things which are outside the organization, we need to analyze that also. externalities it's known as, okay. So what are those external things? So corporate externalities, this audit seeks to evaluate certain external elements or factors such as economic environment, industry structure, corporate position, risk of technology, obsolescence, socio-political environment, etc., etc. So it's not only internal things that are going to make us success, it is also the external environment that will contribute to our success or failure. So along with analyzing the internalities, or along with analyzing the internal strengths, weaknesses, opportunities, threat, we should also take care of the externalities. What factors are affecting our socio-political presence in the country? Now I'll give you a very simple example. Back then in 1990s, Coca-Cola. Okay, Coca-Cola was a very hot favorite. So Coca-Cola or Pepsi came very late in the market. Coca-Cola was the first one to enter the market, Indian market. It entered way back in 70s or 80s and entered Indian market, okay. And in 1990s, when BJP government took over, at that point in time, the Coca-Cola was banned from the country. I don't remember, either the Congress or the BJP banned Coca-Cola in the country. Coca-Cola was doing really well in the country. People were liking it because it's an addictive thing, right? So everyone was liking it, but then government came and they banned that particular beverage. Then after many years of deliberation, after many years of persuasion, the Coca-Cola was finally, the ban was released from selling Coca-Cola in Indian market, and then boomed like anything. Cold drink today, it just boom. People don't prefer drinking water, they prefer drinking cold drink, Coke, right? So not only our internal things, but external geopolitical environment, what is the politics all about, that also affect the business. It's not only the goals and people orientation which affects the business, even the geopolitical, how do our politicians are behaving, what are their policies, that also affects any business. So along with studying the internal things, we also need to study the external forces which affect the growth and development of an enterprise. These are also to be ascertained, these are also to be taken care of. So yes, company within fortnight, company vanished. What to talk of 1990s? You take a recent example, guys, a very recent example of your socio-political environment which led to forcing a very good profitable company out of India. Yes, its name is Vodafone. Vodafone entered into India as a telecom giant. It's a foreign company based out of Netherlands, Ireland or Netherlands, okay. It's a giant, okay, and entered into Indian market and it's just revolutionized how the telephony services were supplied into India. It was really a superb company. It was known as Vodafone, okay, Vodafone. Earlier it had some other name. Vodafone's earlier name was something else, okay. Okay, anyways, what happened with Vodafone is that a demand worth rupees 21,000 crores, yes, 21,000 crores. Hutch, yes, Hutchinson, correct. Hutchinson is the old name of Vodafone. So Vodafone's parent company name is Hutchinson, Hutch. Very good, Pratik. So, what happened in India was that this company had a very strong hold in the Indian markets, and it left behind players like, Airtel and the traditional players of India, and Jio was not there at that point in time when it came into Indian market. So what happened is that Supreme Court of India, the Income Tax of India, they raised a demand worth rupees 21,000 crores on this particular company. 21,000 crores tax demand. Income Tax Department raised on this company on some international tax issue. There was an international tax issue which was raised. PE issue, private equity, permanent establishment issue, Permanent establishment issue was raised and profit was attributable to India, and 21,000 crores tax demand was raised. The company, Vodafone, fought till the Supreme Court level, and at Supreme Court level, the company won the case. 21,000 crore demand was waived off by the Supreme Court of India of this particular company, Vodafone. Then what happens is, the finance minister changed the law with retrospective effect, which means that the law was changed from 1961. Retrospective effect change happened, and that actually overturned the Supreme Court judgment as well. It was a big shock to Vodafone India. It was a big blow to all the telecommunication giants who were working in India, especially Vodafone, and they decided to quit India. They decided to go out of India. So they sold their assets to what is known as Idea now. So it's Vodafone Idea now, and they quit India. Vodafone quit India. So they were forced because of the geopolitical political pressure, tax regulatory pressure. They were forced to leave India. So management order also considers these externalities. The external things are also managed by or also looked at by the management orders. Management order has this duty of looking at the external things as well. Socio-political culture environment which affects the growth and development of the Indian company. Then corporate internalities. So internal things, of course, they have to see like personnel development, detailed subsystems, management development, everything. Internal strengths, internal weaknesses are also to be seen by the management order. So management order has got a very comprehensive portfolio of things to do. As a financial auditor, you will just see your financial statements, balance sheet, profit and loss account, cash flow statement. As a cost auditor, you will just see your cost sheet, accompanying annexures, and your form 3CA. Form CRA 3, right? That's all. But as a management auditor, your scope is much wide. Your scope is huge as a management auditor. So as a management auditor, it's not easy to really, work because your scope is huge. Okay, so characteristics of corporate development. What are the characteristics of corporate development? It's multidirectional and multidisciplinary. As you can see that, corporate development includes everything and anything. This is an area of management audit which is huge. So it involves a lot of patience, a lot of, expertise that is required using the multidisciplinary and multidirectional team with appropriate exposure and experience. Planning and decision-making process, validation of decisions are prime movers of corporate development. So planning and decision-making process is to be done carefully. Achievement, failures, strengths, weaknesses, and efficiencies are the pointers for review. Achievement and failures, strengths, weaknesses, all these are important elements of corporate development audit. Discussion and communication need to be routed through point of contact and empowered management representative. So whosoever is the management representative, he will be your point of contact for answering any questions that you have with respect to management. You need not approach directly the MD of the company. You should not approach the CEO of the company directly. Okay, whoever is the SPOC, point of contact from that particular organization, he should be your person who you have to go to. Okay, sir, got it. Now let's touch base upon, or let's come on the most important element of management audit. The most important element of not only management audit but management concern altogether. Management is focused entirely on personnel. Ultimately, if I ask you what is the biggest asset of a particular company, it is not their machinery, it is not their land, it is not their building, but it's their employees. If you ask Reliance Industries Limited, what is the biggest asset? They will not say Jamnagar factory, refinery. They will not say that. They will say our employees is our strength. Any organization wins or loses because of its employees. Employees is the strength of any organization. Any organization survives or thrives because of its employees. They are really, they work upon because of their employees. So any organization thrives or strives because of their employees. So personnel development is one such area which management auditors will be keen on looking at. If I am the management auditor, I will touch upon this area in the very first go. I will want to know what are the company's policies towards employees, whether they are careful about the employees or not, whether they are careless about the employees, whether they take care of the employees, or whether they just take their employees for granted. One very simple way of telling whether the employees are being taken care of is that exit interview should be taken in detail of any employee who is leaving the organization so that we come to know that why are people leaving. It's a very old saying, guys, very old saying. An employee doesn't leave the company, he leaves his manager because he's not getting good vibes with the manager. He leaves his manager, he doesn't leave a company. This is a very old saying that is true in today's world as well. It's always the people issue that drives people out of the organization. It's not always the management faulty policies. or some leadership problem. No. It's your supervisor who will force you to leave. Yes, if you are inefficient, then no one can actually make you survive in any organization. If you are inefficient, if you are not capable of performing appropriately. But if you are efficient enough, if you are capable, if you are hardworking, then only manager has the fault of high attrition rate. So personnel development, developing your managers, developing how managers work, how managers deal with their employees. All these things are really an important aspect of any organization. So personnel development is one of the key areas where management auditor keenly looks at. So what do you mean by personnel management or development? It is a vital aspect of corporate development. It's a systematic training of managers and specialists to fill the present and future needs of the company. So we are actually training our managers. Our managers should be trained on how to deal with their juniors, because ultimately the managers have to deal with the juniors. Then it also helps further individual growth to ultimately facilitate corporate growth and expansion. Therefore, personnel management is concerned with managing people at work. So what is the whole and sole aim of personnel management? To manage people at work. How do you manage people at work? How do you let every person be satisfied? And personnel growth means learning. Their learning should be taken care of. Their training should be taken care of. Creativity should be there in, their creativity should be promoted. They should be developed. Their goals should be achieved. They should be motivated. You should have a vision for your employees. Planning should be appropriate. Just like Richard Reiki. Richard Reiki had a vision for its employees, that my employees, I need them to be happy. I need my employees to be happy. That was a vision which Richard Reiki gave all of us, right? So that is a vision which is there for your employees as well. Now, various components of personnel management are as under. What are the things that you need to take care of while you are, developing a personnel policy or personnel, consideration? Delegating responsibility rather than fixing problems before they arise. So you should delegate responsibility. You should give, adequate power to someone to perform that job, and then you should hold that person responsible. Don't just envisage problems in a particular situation. Just delegate the responsibility, let the other person perform the work, and then if anything goes wrong, then you can hold that person responsible. So delegate responsibility accordingly. Honest and candid feedback. You should be receptive of feedback. Your employees, if they are giving you feedback, then you should be receptive of it. And employees should also be given feedback on time. On time, employees should be given feedback. See, I have seen in my life two kinds of managers, and I have worked under two kinds of managers. I had two kinds of bosses. Simply say, chota bhai hai, and move on. So I have faced two kinds of, people, my bosses, two kinds of, managers and bosses. I faced two. Type number one. The bosses who will for the entire year will be very sweet to you. Oh, you are very good. Oh, you done this work very well. Oh, you come to office on time. Oh, you did this work well. Did you do this work? They'll be very sweet to you in the entire year. And at the year end, when appraisal time is there, when your review is there, then he will tell you, no, in the month of February, you did not give me the report on time. In the month of March, you took leave without asking me. In month of May, your performance was not up to the mark. You went to your sister's wedding, therefore you did not perform at all. At the year end, when it is time for your bonus, when it is time for your rating, he will tell all your problems. This is type number one, manager type number one. And manager type number two, who in your day-to-day routine will tell you that this is wrong, this is right. He might sound little harsh to you at the beginning, but he will be most beneficial to you. At the beginning, he'll be harsh to you. At the beginning, he'll tell you that, no, this you did wrong, this you did absolutely incorrect, you should do this, you should not take leaves without asking me. He will tell you everything at the beginning itself, rather than, telling everything to you at the year end and screwing your bonus. He will not give you bonus by telling your problems. So now it is up to you. What kind of manager do you want to become? So the first thing is that, honest and candid feedback should be given to the employees at the right time, at the right tenure. For the development, goal setting exercise, determine the role and assignment of broad areas. Periodical reviews carried out to evaluate and track the shortfall. So periodic review is very, very important. Year-end review is not good. Periodical review should be there. Review should be done every 1 month, every 2 months. You should sit with your manager and ask him that, sir, what did I do right? What did I do wrong in the last month? Guys, even if, when you qualify a CMA, you make it a point that with your managers, you should sit at every, fortnight basis and ask him, what did I do right? What did I do wrong? How can I improve myself? How can I improve my efficiency? Well, you should ask it before the annual appraisal. Okay. So there are various areas, various techniques to appraise anyone's performance. Rating scales are given. Okay, so in KPMG there was a rating scale from 1 to 5. 1 being the least, 5 being the least, 1 being the highest. Okay, so rating scales are there to rate the employees. Quality of the work of the employees are rated on this kind of a scale. Some organizations have 1 to 10 scale. Depends on organization to organization. Okay, 360-degree feedback. This is a very, very important way of overall growing your managers. So managers are thought to only give feedback, but there should be a mechanism where even the manager's junior is giving feedback for the manager. This vice versa should also be true. So like for example, I tell you, oh, give test of SPM, BVM, give test of cost audit, give test of IDT. I always tell you, give test, give test, give test, and test series is free of cost, which is available to you, but you don't give test. Only 10-15 students come for the test every week. Test is conducted 2 months before the examination and it's free of cost for all the cost audit, BVM, SPM and IDT. Those who are giving group 4, it's free of cost for all the CMA students. So you give me test, okay, and you perform well in test or you don't perform well in test. So there should be a mechanism where sometimes students should also prepare a test for the teacher and let teacher answer the test. And let's see whether teacher passes or not. Okay, this should happen, no? So you should take test of mine in cost audit. That, sir, we will take your test today, and today these 3 chapters you have to prepare, and we'll prepare the test and you give us the test. You should also do that, huh? This is known as 360 feedback. This is known as 360 feedback. Unfortunately, this is not true in education sector. In education sector, I will never give you a test. Only you will give me test. Okay, I will never solve any test for you. Fortunately, thank God, touch wood. But in corporate world, this 360-degree feedback is a mechanism whereby the managers are being rated by the employees, by the juniors. Right? No test for me. Okay, no test for me. Okay, so in 360-degree feedback, the managers are being rated, the managers get the feedback from the juniors, and junior's name is not disclosed. Obviously, junior is afraid that if I tell reality of the manager that my manager screams a lot, my manager smokes a lot, my manager wastes time a lot, if I give this kind of feedback, then my job will be at stake. So the junior's name is always kept confidential in such cases. Junior's name is not revealed in such cases. Okay. So, your 360 feedback mechanism really works when employees, managers, subordinates and peers to prove feedback about the performance of the employee. So you get feedback from all around. Management by objectives. Now this is very, very important. This is a personal evaluation technique that measures the individual employee's achievement by comparing the employee objectives agreed upon in the prior year. So whatever the management has agreed for the employee, okay, test de के 3 घंटे बना लिया नालायक बीवी की याद आ गई ऐसी हरकतें नालायक. Okay, so management objectives means you give objectives, you give you've given goals to the employees that the employee should make say 2000 units in the current year. You give that kind of objective or goal to the employee. If the employee fulfills that goal, if the employee achieves that goal, then you reward that particular employee. This is management by objectives. Okay, so you compare your employee's performance by the objectives or the goals that are set for the employees for the previous year. So using these 3 techniques, we can actually give feedback to our employees, which is very, very important. Offering appropriate development opportunities to the employees. So employees should be offered development opportunities, not only with respect to work, but outside the work also. So this reminds me, I took a session which was organized by Deloitte. Deloitte was my second employer and last employer. So I've worked only with 2 companies, KPMG and Deloitte. Okay. So Deloitte gave us an opportunity to attend a 15-day course organized by the British Council, which is there in Kasturba Gandhi Marg, Delhi, for English speaking, pronunciation, diction Okay, so experts from that organization came and taught us. But the condition was that every employee has to come to office on Saturdays. That was the condition. But yes, an employee who wants development, a course which is worth 50,000, if you go over there, it is being given to you for free. Employee like me was more than eager to go every Saturday. I went every Saturday for those 15 Saturdays or whatever time was there, and I finished that course. So corporate development opportunities are given by the corporate to the employees. Now the employee should be in a good condition to adopt those development opportunities, should grasp those development opportunities. I remember one more thing, guys. During my tenure in Deloitte, I also got an opportunity to attend a Deloitte school, Deloitte Academy. It's just like your college, Deloitte Academy for international taxation. So I went to Singapore. There's a Deloitte University in Singapore. I went to Singapore. I stayed there for 15 days, and there were trainers from all around the world who taught taxation to us. Not Indian taxation, international taxation, transfer pricing, double taxation avoidance agreements, royalty, FTS, most favored nation clause, MFN clause. You must have studied in your international taxation in your group 3. We were taught practical applicability of those things by international tax experts, not Indian. So that was a great opportunity which was provided to me by Deloitte when I was with Deloitte. Similarly, organization so KPMG provided me with an opportunity of getting a training on business etiquettes, manners, very basic business etiquettes. Whenever you meet a client, you give your business card to the client. Okay, so there are two ways of giving your business card. You can say, oh, le bhai le, business card. Okay, the second way and the better way is that you put your business card, even if it's small, it's really small, right? You put it between both your hands like this, and you very respectfully give it to your client. This is the right way. How to shake hand? Some people would shake hand like this. They will just touch your fingers like this and they will shake hand like this. Some people will do like this. Oh, they act very classy and very posh. This is the wrong way of shaking hands. Handshake should be firm and should be complete. And the shake should be thrice. It should not be show that you are shaking hands and you are shaking. No. Shake should be thrice. 1, 2, 3. That's it. That's the proper way of shaking hands. How to use cutlery. How to use fork, spoon when you're sitting with the client on a dinner, on a corporate dinner. All these things are taught by the corporate to the employees. And this is a very important aspect of your training and grooming, because grooming is an essential thing. Okay, income tax can be, you may be expert at income tax, you may be expert at GST, you may be really well versed with all the clauses of the income tax audit report, or accountancy, Ind AS must be fluent. But if you are not well groomed, you will not be well receptive by the society, by the client. So grooming is equally essential. Grooming is essentially important. Okay, so all these development opportunities are offered by the companies which the employee should undertake, like interpersonal communication, public speaking, negotiation, leadership skills, etc. These are to be taught to the employees, and management should take adequate steps to teach these to employees. Hard technical skills should be taught to the employees, like taxation, GST, decoding, accounting, etc. This should be taught to the employees. Then psychometric studies to understand the mentality to function in leadership roles. Psychometric tests are there, aptitude tests are there, which are telling you about the personality of a particular employee and how to improve that personality, how to improve the attitude and aptitude of the employee. All these things are essential parts of your development opportunities. Motivating for additional risk and rewards. Yes, what is the motivation that employee has for working additional? What is the motivation does the employee has for really working well? What's the motivation? So adequate motivation should be given to the employees to work well in an organization. That motivation is very much required. साउथ दिल्ली में घर होता है ऐसे लोगों का. हाँ होता होगा, हमारा तो नहीं है भाई. हमारा तो बड़ा ओल्ड दिल्ली में पुराना सा एक घर है. Okay, so ample opportunity should be given to the employees for training. Training is an important aspect of employee performance. So adequate opportunity should be given to the employee for training, etc. Okay, and employee should be motivated to perform well. Employee should be motivated to reward should be given to the employee to perform well in any aspect of their career. Basically, incentive plans should be there to incentivize employee to work harder. What should employee do to really increase his salary? How to work hard? Incentive plans should be there. The bonuses should be huge. That is how the employees are really motivated. Okay, sir, got it. And yes. Okay. Okay, so this is an essential part of your personnel development. Then motivating for additional risk and rewards. Additional risk and rewards should be given to the employees so that they are motivated to perform well. Then demonstrating meaning of true leadership attributes. Yes, demonstration is really important. Okay, demonstrating means don't teach but preach. Don't teach but preach. This is a very important principle that is followed by good teachers. Okay, so good teachers, they don't teach, they preach by their own behavior, by their own conduct. Do you remember in ancient time Gurukuls were there, and in Gurukuls small kids were sent so that they can stay with their gurus and they can learn the essential elements of life. Rise early, 4 o'clock, then you eat food on time, prepare food yourself, cook food yourself, arrange your bed. All these things were taught to the small kids, young kids at a very early age by gurus, and those gurus never used to teach these things. They used to do these things themselves, so the student can replicate them. Students can replicate them. So I still remember during my exams when I was in my 9th standard, 8th standard, in my 10th standard, 11th standard, during the examination, even my parents never used to watch television. At that time, television was the most popular source of entertainment. We didn't have mobile phones, we didn't have YouTube, etc. So television was the most important source of entertainment. So during my exam time, even my parents didn't used to see the TV. TV was locked, it was wrapped up in cloth and was above the almirah. It was kept above the almirah for whole 1 month. When my exams were going on and when my brother's exams were going on, television used to be on the almirah. So my parents also used to perform the same activity because they knew that we will follow whatever they will do. If they watch television, then we will also watch television. Okay, so it's really important to understand that you demonstrate things. You don't only teach things, but you demonstrate things which are related to true leadership, which means loyalty, empathy, accountability, determination, dutifulness, encouragement, respect, selflessness, humble, integrity, innovation, passion. So all these things are to be, not to be taught. They should be demonstrated. The manager should do that thing and then the employee will learn. That's the best way of teaching your employees and developing your personnel. Okay, sir, got it. All right, and now we come on to a very important aspect of management audit, guys, and this is definitely the key, that consumer is the king. In today's world, consumer is the king, because today competition is fierce. There was a time when the producer was the king, the manufacturer was the king, but today consumer is the king. Today it's not a manufacturer's market. Earlier, before 1990s, the market belonged to the manufacturer because there were monopoly in manufacturing. Delhi Cloth Mill was the only company who was manufacturing cloth. Vimal's was the only suiting and shirting brand which was available in India. Vimal's, Mayur, which were all Reliance brand. Okay, some few Indian brands were there. That's it. So it was manufacturer's market. Whatever they wanted, that happened. But things changed after 1990. What happened in 1990? In 1990, LPG was introduced. Please tell me the full form of LPG in the chat box. Liquefied. You tell me. You tell me the full form of LPG in the chat box. What is LPG, which happened in 1990? So after 1990, competition got fierce, and even cloth manufacturing companies from outside the country, outside India, came into India. And when competition increased, then it became a consumer's market. It became a consumer's market. Full form of LPG, liquefied something, no? Yes, right. This is the full form of LPG. Liberalization, nalayak. Yes. Liberalization, privatization and globalization. Yes. Just look at the spelling of privatization which has been written by Srinath. Privatization. Yes, so the policy was that, you know, markets were open to foreign competitors, and foreign companies also came into India for supplying the goods and services. And at that point in time, it was a consumer's market. So the fact of the matter is that consumer is the king. Okay, when consumer is the king, it is really important to serve the consumer well. And it's a, you know, very old saying that consumer is always right. Consumer is always right. Consumer is never wrong. So now as a management auditor, I will definitely want to see what is the sensitivity of the management towards the consumers. Like, you know, when you get your products from my classes, my team is always available to help you over a call, right? My team is just a call away. You call up my team, they will always be available. They will pick up your call and solve your query within seconds. If you have any problem with respect to the software is not working well, the video is coming out to be blur, the PDF is not available for any chapter, the chart PDF is not available to you, any problem, it is literally solved in seconds if you call up my team. Okay, that is customer service, that's consumer service. So consumer service is the key. Consumer service is the most important aspect of any business, and that audit is required to be done by the management auditor. Auditor should, you know, be very very keen on observing whether consumer are being satisfied or not. So customer is the most important person for the business. The primary responsibility of a business enterprise towards customer is to make available the products of right quality, at the right time, at the right quantity, at the right place, at the right price. So the transportation should also be taken care of, supply chain management should also be taken care of, pricing should be taken care of, quality should be taken care of, quality control and check should be there. Everything should be balanced if you want your customer to be happy. The consumer services audit critically examine appraises on these aspects of services. So what are the key principles of good customer service? Respect towards customer requirements. First of all, please understand what is the customer requirement or what is the customer need. What does the customer want? That is the first and foremost thing that needs to be, you know, really understood by you. What does customer need from you? Okay, so customer requirement is the first and foremost important thing for customer satisfaction. Commitment towards customer. Please show utmost commitment towards customer. Customer is the king. Whatever is his problem should be your problem. You should be taking care of that problem very, very seriously. Provision of clear, relevant and accessible information. Information should always be given to the customer. Information like price of the good, expiry date of the good, expiry date, allergens, if there is any allergens in the goods, constituents of the goods, what all is included in the goods, constituents of the goods, what all is included in the goods. All these things are to be, taken care of. Constituents of the goods. All these things should be disclosed to the customers. Information should be given to the customers with respect to all these things in the product. Well-trained and customer-focused staff. So the back-end team should be very strong. The people who are taking calls from the customer, they should be they should be calm, they should be composed, they should not argue with the customer, they should not be aggressive with the customer. Customer might be aggressive sometimes, but the call center guy should be very calm, very composed. Okay, you must have experienced yourself, okay, that howsoever angry you are, you say that, oh, my card is not working, my bank has been blocked, what are you doing? Why is my transaction not there? Check is bounced. However, I have money in my bank, what are you doing? And what will be the reply? Reply will be very calm, very soothing. I'm sorry, sir, for your concern. I understand the severe problem which you have been facing. We, the XYZ bank, are really sorry and apologize for the inconvenience that has been caused to you. Sir, can you please tell me the customer identification number which you have? You tell them whatever, in whatever, tone. They will be absolutely polite and calm always, always. This is their training. This is their expertise. So the customer focus should be very much there. Well-trained customer staff should be there, who should always be calm, who should always be kind, who should always be soft and polite with you. That's the key thing. Clarity in communication. Communication should be absolutely clear with the customers. Customer should be made aware of everything very clearly. If any problem exists, then customer should be made aware of those problems pre-hand. Earliest resolution of customer complaints, whatever customer complaints is there, the TAT, turnaround time, should be very less. Turnaround time should be very less. 24 hours, 12 hours, sometimes TAT is 8 hours. These are the various TATs which are available, and this should be there. TAT should be very, very prompt. Your TAT should be prompt. Effective use of customer feedback, whatever feedback does customer gives, you should be able to incorporate that feedback in your services and products. You should do that always. The following are some of the important aspects and questions which auditor must address while doing the consumer audit. Do the products manufactured meet the need of the customer? Okay. Need of the customer means the requirements of the customer should be fulfilled by the features and characteristics which are given by the product. So need of customer should be fulfilled. Now I'll give you a very rampant example of this need to be fulfilled. Okay. We have various dealers and we have various showrooms where cars are being sold by various dealers. Okay. There was a time when a customer had to first run to the bank to get the loan approved, car loan approved, then go to the dealer and coordinate between both of them so that car loan can be approved and he can purchase the car. It was a very tedious task. It was a very time-taking task. And now in today's world, the car dealers have the bank loan counters inside their office and they handle the paperwork together, and don't let customer be harassed by this long drawn process. They have collaborated. So Honda has collaborated with Bajaj Finance. Both of them work together. Loan is sanctioned within few minutes and your car is there in your hands within few hours. This is known as innovation. This is known as understanding the need of the customer and giving them what they require. So guys, I still remember there was a time when the ketchup, tomato ketchup, how many of you eat tomato ketchup and which brand do you eat tomato ketchup of? Please tell me in the chat box. Tomato ketchup used to come in glass bottles, very heavy glass bottles were there, and tomato ketchup used to come in glass bottles. And since ketchup is usually being handled by small kids used to drop the bottle used to crash and bottle used to burst. It was very dangerous. So tomato ketchup was very dangerously handled by the small kids. Kisan, okay, Kisan ketchup is being used. Nestle doesn't produce ketchup. What are you saying? Nestle is a coffee brand, not a ketchup brand. Nalayak. Nestle doesn't produce ketchup. Which Nestle does produce ketchup? So ketchup was then reinvented its packing, and now we have pichku packs in which ketchup comes. Okay. And those pichku packs, ketchup is not wasted. Okay. Earlier what used to happen is we used to pour the ketchup like this. We used to do thumb. We used to thumb the back so that ketchup comes in because it was very hard. Okay. So when it used to come in flow and our entire plate was full of ketchup back then. Now we have pichku packs. Pichku packs you squeeze in, you put the ketchup and it absorbs the extra ketchup if any. So very convenient. Packaging is very convenient, Nestle has got... What rubbish. Let me check. One of our esteemed students is claiming that Nestle has got its, ketchup. Let me check. Nestle ketchup. Oh, the Maggi brand is Nestle brand. Okay. Okay, that is Maggi ketchup. Okay, that's why I didn't know that this was Nestle. Okay. This Maggi ketchup actually is the Nestle brand. This is the Nestle brand. Okay. Okay, so innovation in your ketchup industry is really amazing. Innovation in the product packaging is very essential because you understand the requirements of the customer. Requirements of the needs of the customer are to be understood by the company well. Are the products price reasonable and consistent with the quality variations? So price should be reasonable. Competitive analysis should be done. What are the competitors' price, and the consistency in quality should be there. Variations are there in the product, and according to the variation, the price should vary. So that consistency should be there. Okay. जो भी सस्ती आती है वो पापा ले आते हैं. What are you saying? Don't joke, huh? You are mania after all. Okay. is the share of added value through increased profitability reasonably passed down to the customers. So whatever is the added value, whether that added value is passed down to the customers. So for example, you know, recently GST was reduced on many products. When GST is reduced from many products, so you know, the cost, the price of the product should also reduce. It should be passed on to the customers, right? This should be done. So if anything is beneficial for the company, they should pass on it to the customers also. So, you know, after this happened, after the GST was proposed to be reduced for many, goods and many services, there were big ads in Times of India, etc., etc. Even all these companies had big ads which said that earlier the price of our butter was this, now it is reduced to this. Earlier the price of our dal was this, now it is reduced to this. Earlier the price of our milk was this, now it is this. So they have comparatively shown the prices reduction, and any validation that is given to the profitability, that should be passed on to the customers. Then whether after sale services, spare part facility enable the customer to drive maximum use and pleasure. After sale services is very important. Okay, so now you have air purifier at your home which purifies the air. Now if the filters are not available readily in market, then the customer is going to be harassed. So filters should be readily available for the air purifiers. What are the efforts made to consistently improve the product? So improvement of the product. Research and development is adequate or not, that is the question. So research and development should be adequate. Customer focus should be there. Whether customer complaints are handled promptly, customer complaints should be handled promptly, and customer care should be utmost priority of any organization. Whether company responds quickly to the customer inquiries should be quickly handled. Okay, they should be quickly converted. Then safety norms should be followed for bodies like ISI, BSS, etc. Safety with respect to the product, use of the product, taste of the product, the quality of the product. Safety should be the key element. Whether all the warranties are explicitly stated. The warranties, which means if the product goes bad within the next 1 year, what will be replaced? Whether only the motor will be replaced or the body will also be replaced. So sometimes the advertisement would say, oh, 1 year warranty, 1 year warranty, 1 year warranty. They would say 1 year warranty, but when you go to the the mall or the shop, they will tell you 1 year warranty is only on the pump, not the body. If the body of the cooler or AC gets damaged or the fan gets damaged, you will get no replacement. Replacement is only for the pump which is installed in it. Now this is the difference, right? So the warranties should be explicitly written, and unambiguous terms, unbiased terms should be written on the package, and it should be clearly given to the the customers. Yes, next very important topic from a management audit standpoint, environmental audit. Management auditor should take care of what is the impact of that particular organization on the environment. Just like I told you, the beer manufacturing company had very bad effect on the birds and animals which are around that particular company. Very bad effect on them. They were addicted to beer. Molecules of beer were injected in them, not infused in them. That was bad. And of course, guys, if the beer molecules were going inside birds and animals, they would also go inside the plants, the trees which are around that particular area. It would be harming the trees also. Not that the trees will be doing like this. No, trees will not do like this after drinking the molecules. Okay, but it will definitely have a bad effect on trees, some sort of bad effect which we are not aware about. Trees will also have some bad effect of the molecules of beer which are released in the water around that particular area. So we should analyze that effect and remove that effect. Okay, so environmental audit is one very important area which has come to light in the recent past, because environment, global warming is a very big issue being faced by all the countries. Okay, global warming. And guys, directly above Australia, okay, Australia is one such country. Directly above the ozone layer of Australia, directly above the Australia, the black hole is increasing, where the UV rays are entering into the environment. The black hole is increasing. It is the ozone layer is devastated above Australia because of global warming, and this is going to impact further on the people. So environmental audit is very important. So environmental audit is an independent evaluation of policies and principles, system, procedures and practices in place relating to environment. Net, what is the organization doing to improve environment of a particular organization? what is the organization doing. So various kinds of pollution is there: air, water, noise, smell, thermal, visual, climate, radiation, soil. So what are the active steps? So environmental audit is what are the active steps which are being taken by the company to control the environmental pollution. What are the active steps which the company is taking to control the environment pollution? That is the answer which is to be given in environmental audit. Features of environmental audit. First of all, we need to analyze what is the role of the management in protecting the environment. Whether the management is checking environmental performance and legal compliances or not. Whether management is sensitive towards environment of that particular factory or not. So you tell me whether the management of that beer manufacturing company was sensitive towards the environment or not. Yes or no? The beer manufacturing company which I am talking about, whether the management was sensitive towards the environment or not, even when there is no statutory obligation. So if there is a law, then management has to be sensitive, otherwise the company will be locked out, shut down. But the moot point of consideration is when there is no law, when law is not there, when statutory obligation is not there, then whether the management is sensitive or not. That is the moot point of consideration. So you tell me in the chat box whether management was sensitive in my case or not, whether it was sensitive towards the environment or not. You tell me in the chat box. Okay, so first of all, the environmental audit is part of company's internal control system and helps management check the environment. Management should check the environment performance of that particular environment. That should be there. No, very good answer. So management was not sensitive. Environmental impact analysis assessment, EIA, should be done by the management to check what is the impact of the factory on the environment. What is the impact of the factory on the ecology of that particular region. So EIA should be prediction analysis, the environmental effects of new project and expansion before they begin. Very, very important word is before they begin. We should not analyze the environment impact after the project has concluded and after we can see the bad effect. But even before the project is started, we should analyze whether it will be bad impact, whether it will have bad impact on the environment or not. Then systematic process. It is a very systematic process. It is a planned, structured, organized method to evaluate environmental issues. Then documentation should be done for all the impact analysis which is being done. All findings must be supported with the proper records and evidence and verifiable information. Documentation is very important in environmental audit also. Continuous review is required. It's not that 1 year you just perform some processing on your molecules of beer and from next year you again start releasing your molecules of the beer in the same fashion. Constant assessment is required. Continuous review is required whether your activities of releasing the molecules in the river is controlled or not. Continuous review is required with respect. It is not a one-time exercise that you do environmental audit one time and we are sorted for the entire life of the organization. No. Environmental audit should be done every year because things are changing every year. Every year environmental audit is required. Objective evaluation. So it has to be an objective, independent expert should come to evaluate the environmental audit. We are not experts in doing the environment audit. We are not experts in doing this thing because we are more related with financials, accounts, numbers, etc. So there has to be experts. ISO 14001 experts are there who are reviewing this. They should be involved. Environmental performance focus. The main goal is to ensure that the organization meets its environment policies, complies with regulations and continually improves environment in performance. So guys, many times what happens is in the internal policies of the organization, there is an environment clause which is inserted. So company has to pledge that it will create policies and it has policies that will benefit the environment, that will safeguard the environment. So in the internal policies only the clause of environment should be written. It should be imbibed inside the policy itself. So environmental performance focus should be there. What are the objectives of environment audit? Objective is to determine and document the compliance status. Okay. Compliance with what? Compliance with environment laws. So we have strict environment laws. At least in Delhi, we have very strict environment laws whereby any industry cannot be established in the residential areas. Commercial spaces are different, residential spaces are different. The waste of any factory should not be released in Jamuna, the river. So we have very strict environmental laws in Delhi. So compliance is done whether on those environment laws or not. This should be seen. Help to improve environmental performance at operational levels. Assist facility management, how the facility of environment protection is managed, that is to be seen. Increase overall level of environment awareness, people are more aware about the environment. accelerate overall development of environmental management control system. So we should have an environmental management control system. This is known as EMCS. Improve the risk management system. Protect the corporation from potential liabilities on breaches. What will be the penalty if you do not follow the law with respect to environment? What are the potential liabilities? What are the penalties which are there? This should be seen. Conservation policy application guide. What is the conservation policy of your environment? Do you have any policy or not? If not, then prepare a policy. And then there should be operational guide. Fund allocation, capital expenditure and operational expenditure should be allocated annually for environment protection. Annually, the allocation should be there for environment protection. Develop a basis of optimizing environmental resources. Whatever is the environmental resources, they should be developed and they should be taken care of. Benefits of environment audit. What is the benefit of environment audit? Why do we do environment audit? What are the benefits? Benefits are that it improves efficiency of environment management system. Our environment management system is there, but we are not aware whether it's working fine or not. So we have a policy which says that we will conserve our environment, but we don't know whether it's working fine or not. So audit ensures that our environment management system is working fine. There are no deficiencies in the system. Compliance with environmental law and standards. Obviously guys, if we do not follow the law, the Delhi government is going to shut our business, or whatever, Madhya Pradesh government is going to shut our business. So we should be very sensitive towards the environmental laws and standards. Certification requirement. There are, like in food, there's certification requirement. In even in electricity, there are certification requirement. Bureau of Energy Efficiency should be there. Certification requirement are there. So wherever there are certification requirements, environmental audit ensures that we are complying with those certification requirements. Risk mitigation. Any kind of risk, potential risk with respect to environment litigation, legislation can be mitigated if we do our environmental audit regularly. Meeting stakeholders' expectation. Whatever our stakeholders expect from ourselves, one of the stakeholders is society also. Whatever society is expecting from ourselves, that we'll become a good corporate citizen, that expectation should be met. Cost and environment benefits. Reduction in operational inefficiencies. We will see the cost of employing a particular environment resource and what are the benefits that are derived from it. Like I told you in our last lecture also, it is not possible to change the LEDs of entire home once and for all together, because it's expensive. So you need to analyze the cost benefit analysis, and over a period of time we should keep it in mind that we will switch to the cheaper modes of electricity or cheaper modes of resources. We'll switch to that. Next is assist management in decision making. Whatever decision we need to make with respect to our environmental policies, environmental plans, corporate plans have to incorporate environment security also. These decisions are taken only if environmental audit can give us useful insight into what is happening with respect to environment in our company, so that decision making can happen. So this is our environment audit. And now we move on to energy audit. Energy audit is a subset of environment audit only, because if we want to save our environment, we need to save our energy. Simple. Saving energy means saving environment, which means now you have to switch to energy efficient ways of your electricity. Energy efficient ways should be there. So like the ACs, air conditioners which you have in your organization, the lights, tube lights which you have in your organization, the laptops which you have, everything that you use, electronic items whichever you use in your organization, they should be energy efficient. They should save energy. They should save electricity. That is the main focus of energy audit. So energy audit has been defined as an inspection analysis of energy flows in a building and how to conserve them, the programs which are there to conserve those energy flows. So where all electricity is required in our office, it's in the factory area, the office area, everywhere energy is required, right? Now how to conserve that? How to conserve that electricity, by instituting energy efficiency program in an establishment. It consists of activities that seek to identify conservation opportunity for energy saving. So whatever is the conservation opportunity, wherever we can save our electricity, we'll do that in an organization. That is energy efficiency. What is the need for energy audit? Need for energy audit is cost reduction in energy consumption is of paramount importance. Cost should be reduced. Okay, energy audit means cost should be reduced. It helps to identify areas where waste can occur and where scope of improvement exists. So wherever our energy is getting wasted, Like one of you told me that you still have that yellow bulb in your home, right? Which is connected using the wire. Yellow bulb is there still in your home. No, please remove it. Please use only LED bulbs, because that yellow bulb consumes a lot of energy. Okay. So you need to identify wastage. So yellow bulb is a wastage, and you need to improve the electricity positioning. Give a positive orientation to energy cost reduction, preventive maintenance and quality control programs. So you should take care of cost reduction, maintenance and quality control programs which are vital for products and utility. Focus on variations that occur in energy cost, decide on appropriate energy mix, identify energy conservation technologies. Again, boiling down to same point, identify areas where you can save electricity, identify areas where you can save energy, and where you can use renewable sources of energy, identify those areas. Determine the ways to reduce the energy consumption. You should reduce the energy consumption and provide a benchmark reference point for managing energy in the organization, and also provide the basis for planning more effective use of energy. How to be effective in using energy, how to conserve energy, you should tell the ways of that. Preliminary energy audit methodology. So how do you do energy audit in any organization? First of all, establish energy consumption in organization, which means you calculate what is the energy requirement of any organization. Calculation of electricity requirements. How many units of electricity are consumed by an organization? That you need to first of all assess. That yes, this particular factory needs 1000 units of electricity per day. That's the estimation that you need to do first of all. Okay. Then estimate the scope of saving. Now see if you can reduce this consumption to a lower level by replacing the machinery. If you replace the machinery, the major machinery, then the energy consumption will reduce from 1000 units to say 600 units. You please identify the cost saving techniques, the scope of saving electricity. Identify low hanging fruits. Changing machinery might not be possible immediately at once because it's expensive. But at least you can change the electrical equipments, other electrical equipments that are being used in office, like AC, air conditions can be removed and changed. Bulbs, lights can be changed. Okay. Daylight saving can be, employed. Daylight can be used for working inside office rather than using lights and electricity. You can use that. So you identify the low-hanging fruits. Low-hanging fruits means easily convertible things, like most likely easiest areas for attention. Identify immediate improvement saving techniques. What can be immediately changed? What can be changed immediately as an area of improvement? Okay. Set reference points. Reference point means you set a reference point that we are first of all going to change all the bulbs of our organization, then we are going to change all the ACs of organization. Set reference point and move forward. Then identify areas for more detailed study and measurement. Then you go on to more detailed study, like machines. You go on to machines only after you have already identified the improvement area with respect to other electrical equipments. A preliminary energy audit uses existing and easily collectible data. All right. Yes. Now we come on to our next part of our audit, and this is a very interesting part of our audit: propriety audit. Actually, the second last topic also of your syllabus, of this chapter. Sorry. Propriety audit. Now, very important element of audit. Propriety audit. What is propriety? Propriety means prudence. Prudence. It is known as prudence audit. I'll give you a very simple example. Okay. There's a private company. Okay. So assume one of our student, Nidhi Gupta. Nidhi Gupta's father is owner of a private company. It's a private company where Nidhi Gupta is the director, father is the director, mother is the director, Nidhi's sister is the director, brothers are director. So it's a whole company which is owned by a family. Okay, it's a very big company. The turnover of the company is say 50 crores per annum. Per annum the turnover is 50 crore rupees. Okay. Now Nidhi is a director with the company. Okay, and Nidhi is really fond of drinking very exclusive tea. When she is in office, when board meeting is happening, she drinks a tea, and the cost of that tea is 5 lakh rupees per kg, because that tea is specially imported from Italy. The tea is imported from Italy. But whenever Nidhi is at work, whenever Nidhi is in office, she only drinks that tea which is 5 lakh rupees per kg tea. Nidhi wants to drink that tea only, because Nidhi knows that her father is a billionaire, millionaire. So she can afford that kind of a tea. So she drinks that tea in office. And the glass in which Nidhi drinks that tea, that glass is made of Swarovski crystal. Each glass is costing you 10 lakh rupees per glass. Again, all these expenses are debited to the profit and loss account of the company, because these are company expenses. These are not personal expenses of Nidhi. Although Nidhi wants to be classy, she wants to spend like that, because she says that my brain will work only when I drink 5 lakh rupees per kg worth of tea. It's okay. She's spending it. Auditors come at the year end. When auditor come at the year end, auditor will ask, what is this 5 lakh rupees per kg tea? The accountant will tell, oh, we have a director, Nidhi ma'am, and Nidhi ma'am only drinks that tea 5 lakh rupees per kg. It is specially imported from Italy. Auditor will say, what the hell, are you crazy? Why are you doing this kind of an expenditure? So in a private company, this question of auditor will be scrapped off. It is a bad question that auditor has asked. Auditor in a private company has no right to question the prudence of an expenditure. In a private company, it's private money. Money is owned by the company and the shareholders are also the family. And everyone knows about Nidhi's extravagant spends. Everyone knows that Nidhi likes to spend extravagantly and she wants to have fancy things in office also. No one is going to question it because it's a private company. Even the auditor has to remain silent on it. Auditor cannot ask a question on the prudence, means whether this expenditure should have been incurred or not. Prudence of an expenditure should not be challenged by the auditor in a private company. Yes, bills should be seen, whether a valid expenditure is there, whether it's not fake. Okay, bills should be seen, payment should be seen, everything should be seen. That's okay. But auditor cannot ask, oh, why 5 lakh rupees kg tea is being drunk by Nidhi ma'am? It should be only 2,000 rupees per kg or 1,000 rupees per kg. This is the good quality tea comes in this range. Why doesn't she drink this tea? He cannot question this question. He cannot. So propriety audit, propriety means it is not proprietary. Please don't get confused. Many students say, so sir, proprietary, we are proprietor. No, not proprietary. Propriety. Propriety audit means prudence audit, and you will remember this propriety by the T example that I give you. T of Nidhi. You remember this concept by T example that I give you. Propriety. Now, let's have the same example in a government company. If director of a government company or a public company in which public money is involved, it's a listed company where shareholders are involved, and it's a public company. It's a government company. Take example of a government company. If in a government company, a director orders a tea which is 5 lakh rupees per kg, now you tell me in the chat box whether the auditor can question on the prudence of the expense or not. Whether can auditor say, oh, you are spending a lot of money on tea, it is a waste of money. Can auditor say it now? Auditor cannot say it earlier in private company, but in government company, can auditor say yes or no? Please tell me in the chat box. Yes, absolutely. Why? Because in this case, public money is involved. It's not your own money. It's not your family's money that you can waste. If it were your own money, which you can waste, please go ahead, waste it. We have no problems. But if it's government money, if it's public money, then the auditor can ask you prudence related question or propriety questions. Government auditor can ask propriety related questions. It's public money. Yes. So now the crux of the matter is that any kind of statutory audit of a public company, it is not a propriety audit. It doesn't challenge the prudence of the management in taking a decision, but management audit is a propriety audit. Under management audit, we can challenge the prudence of the management. If management audit is taking place in Nidhi's case also, then the management auditor can ask Nidhi, oh, please tell me why are you drinking such expensive tea? The management auditor can challenge Nidhi because management auditor role is different from statutory auditor. Management auditor can highlight that yes, Nidhi is drinking very expensive tea. If she likes this tea, then she should purchase from her own money and not company's money. Management auditor can question propriety of an expenditure. But a private auditor, a statutory auditor cannot question a propriety of an auditor. Government auditor, which is CAG, Comptroller Auditor General of India, he can challenge the propriety of a transaction. That is the difference. So management audit is also propriety audit. Management audit is also propriety audit. It is defined as audit concerning whether decision of the executives are within the framework of sanction, authority, procedure, law. So approvals are required before any expenditure is done by multi-layer approval authority. So whatever approval is required by multi-layer approval authority, approvals should be taken before any expenditure is done, and the approval should also be taken under the laws which are made under the government organizations. So in government we have bylaws. In government we have bylaws where it is defined that who can spend how much on what thing, who is authorized to spend how much on what thing. Okay, so that is to be taken care of. It should be duly sanctioned. The expenditure should be duly sanctioned by an appropriate authority, but also should give investigate the justification, necessity. Necessity should be challenged, and justification of the expense should also be challenged. Canons of financial propriety. Canons means rules or pillars. The basic rules of financial propriety is that benefit accrued should not be more than spent. So cost benefit analysis needs to be done, okay, in case of financial audit, in case of propriety audit. No authority should sanction expenditure which will be directly or indirectly to his advantage. So this T was not advantageous or was not benefiting the company. The T was benefiting Nidhi Gupta. She was a director. She was misusing her power to benefit herself. It was not company who was benefited. So no authority should sanction expenditure which will benefit to his advantage. Then public money should not be utilized for benefit of particular person or particular section, like any caste, any religion. The expenditure should not be done to benefit a particular religion, unless the amount of expenditure involved is insignificant. If the expenditure is small, then it's okay. But if it's basic expenditure, it should not benefit a particular person. Claim for amount could be enforced in a court of law. If court of law can only justify benefit of that particular expense to a particular person. For example, bomb blast happened. There the families of the affected people were given 50 lakh rupees each. So this expenditure is for a particular benefit of a particular individual. It is acceptable. It is acceptable because law is giving permission to give relief to the affected parties. So it's acceptable. Expenditure is in pursuance of recognized policy or customs. When custom says so, policy says so, then expenditure is okay. But otherwise, the expenditure should not be for benefit of a particular person. And finally, the amount of allowance, that is traveling allowance, granted to meet the expenditure of a particular type, should be so regulated that these are not on whole source of profit to the recipients. Sometimes what happens is, in government organizations especially, you go by bus to a client's place, you incur 15 rupees and you submit a fake bill of cab, 650 rupees, and you claim 650 rupees as travel allowance. This should not happen. This should not happen. So any kind of allowance should not be a source of income for that employee. This is a source of income. You are incoming, you are earning money because of this reimbursement. Okay, this should not happen. Presently, propriety audit is under these organizations. Okay, propriety audit is under either the government companies are under propriety audit, which are audited through Comptroller Auditor General of India, and even in Companies Act, both chartered accountant and cost accountant are also empowered to perform financial and cost audit respectively to ensure companies are governed properly, which are propriety based. So this is a very new concept which has been introduced in statutory audit also, which is corporate governance. This is a new concept which has been introduced, okay? And in this corporate governance, propriety audit is also a part. So chartered accountant, cost accountant can also raise propriety under corporate governance. So yes, now Nidhi Gupta can be challenged for her exuberant spending under the corporate governance audit, not under statutory audit or cost audit, but under corporate governance compliance report. Nidhi Gupta's action can be challenged. Okay. Next and final is corporate responsibility audit. Yes, CSR is one of the very important areas of any organization these days, and now it's mandatory. It's not optional. It is mandatory to contribute a part of your profit to CSR activities under the Companies Act 2013. Whether the company is doing some social welfare work or not, this is to be seen by the management auditor. Management auditor has to see whether the company is doing his responsibility towards corporate social responsibility or not. So CSR can be understood as the initiative of the company to take responsibility of the environment and impact on social welfare. Goal of CSR is to embrace the responsibility of the company's activity, encourage positive impact through activities on the environment, consumers, communities, etc. Company should should benefit the environment, the communities, the consumers, etc. Applicability or companies, or class of companies which are covered under CSR provision. So if any of the three conditions are satisfied under the Companies Act, then you are eligible for CSR contribution. So a committee, a CSR committee should be formed if your net worth is more than 5 crore, or if your turnover is more than 1000 crores, or if your net profit is more than 5 crores, then CSR committee should be drafted. The committee shall consist of 3 or more directors, out of which at least one should be the independent director. If it's a private company where there are only 2 directors, then only 2 directors shall constitute the CSR committee. I think this you have already studied in your Companies Act. Benefits of CSR are that, externally it creates a positive image. First benefit is that, you get to have a positive image of yourself. Think about Tata. Tata is a brand which does a lot of corporate social responsibility initiative, and now even Reliance Foundation also does a lot of great things under the able leadership of Neeta Ambani. Okay, a lot of great things are being done by Reliance Foundation also. So it creates a positive image in the market. Internally, it cultivates sense of loyalty and trust amongst the employees. Employees are more connected towards the organization who are doing their social responsibility well, who are benefiting the society well. Yes, section 135 of the Companies Act. Very good. Perfect. You remember the section also. Very good. So loyalty and trust is something which is imbibed in the employees if the company is doing CSR, because the employees feel connected. Employee feels good about the company if company is doing CSR activities. Then what are the functions of CSR committee? They formulate, recommend to the board the kind of CSR activities which are to be done under the Schedule 7 of the Companies Act. Then they recommend amount of expenditure to be incurred in the CSR activities, that is at least 2% of the average net profit made during 3 immediately preceding financial year as per the Companies Act. This is as per the Companies Act. Finally, monitor the CSR policy. What are the CSR policies that are required to be followed by the company? These are also to be governed by the CSR committee, which is formed by the eligible organization. And management auditor has to see whether all these functions are getting fulfilled or not. As a management auditor, I will see that. Okay. So yes, guys, these were few of the areas where management auditor works, and these are only a few of those areas. There are a plethora of other areas also, but in your syllabus, only these areas are to be studied, and only these areas are to be really looked at. Okay. So yes, this is one of my favorite quotes, which was told by Steve Jobs, that if you think that you are crazy enough to think that they can change the world, are the ones who do it. So if you think that you can change the world, then only you can do it. If you think that you can qualify your CMA final in first attempt, then only you can do it. If you think that, if you feel that, yes, I can attain 27 lakh worth of package in my campus, then only you can do that, achieve that. So first, any great idea is generated over here first. So be strong enough to generate good ideas over here. That yes, we'll be giving both the groups together. That's okay. Even if I don't bother about the result, it's okay. Whatever will be the result, it's okay. I'll qualify. I'll give both the groups together. I'll study hard and work hard towards my goals. I'll give both the groups together. Those who are strong here are actually strong. On ground also they are strong. So only the people who can think that they can change the world can change the world. So over here you should be really strong. You should be strong-headed in your approach. Alright, after this, guys, I have given certain set of collection of question and answers which have either come in the past examination, or they have come in the RTP, MTP, or any of the any of the literature which has been released by the institute. Also, I have compiled some MCQs also which are related to this particular chapter. Please do all of them yourself. An important chapter from an exam standpoint. And yes, that's all for this particular chapter's revision. Okay, I'll be providing you the PDF in the app. It is saved, and even the charts will be saved in the app so that you can recapitulate the entire chapter quickly. Okay, so that's all for this particular session, guys. We'll be meeting in a subsequent session. Till that time, all the very best and happy studying. Bye bye. See you in the next session.